Yeah, I am. All right, I can't be doing that right now. Everybody's texting me. Hey, good morning, stream. Oh, love you guys. I'm gonna check the features before do anything. Oh yeah, get your puts ready. Come on, I'm gonna get my puts ready. Get my puts ready. Uh, all right, came down in pre-market. All right, we're getting a bouncing though. Man. Right here. I'll support.
You know, I've been thinking, maybe I should just go by Peter now?
Peter Davidson. Not bad.
Nah, sounds like I'm going to try and sell you an extended warranty.
How about Petey?
I know a dog named Petey.
Little P or Big D?
Oh, what about Double P?
You want to go by PP?
You know what? I think I'm just going to stick with Pete.
Pete. I like it.
I like you too.
All right, give me 1 second to use restroom. Yo, good morning, chat. How you guys doing today? I'm so excited for the market. My happy place, y'all. All right, we're getting a bounce right here. Yo, are you still here, sir?
Makes a huge difference when you have someone that actually cares.
Live insights, actionable
round,
Network
bro.
connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
Welcome back to Opening Bell. We have obviously some back and forth action right now. The VIX is at 20.
Oh, some stuff is up, bro.
So it
Like the
shows
VIX.
some elevated nervousness here. Senior portfolio manager Brian Mulberry is with us of Zacks Investment Management. Thank you so much for being with us. The S&P squeezed out a gain last week, which actually makes it a winner 4 of the last 5 trading weeks. How are you feeling about the market?
All right,
going
y'all. Be
forward?
careful, y'all.
Yeah, we just see more volatility, much like your conversation all morning long. We're
No,
starting to
volatility,
see
the
a
VIX
lot of
right here, y'all.
elevated volatility, just as we see some of these big tech names unwind a little bit. Probably more profit taking than anything. And people are looking to kind of reposition their portfolios going into the new year. And we certainly don't blame them for that. When you look at NVIDIA reporting earnings on Wednesday, they now represent 8% of the S&P 500 all by themselves. So they have an outsized impact on what that index really is going to be doing going forward. Any type of a disappointment could actually lead to more of a pullback than you would expect from one single name, just because of how much it really includes in the benchmark just by market cap right now. So what we're finding are a lot of investors looking to maybe take some profits and put them back into other better valued places in this market right now.
And we're going to get to some of your stock picks too, maybe where you're finding better value. And I know you have a variety of
Y'all be
names
careful.
for us
I think
that you're looking forward to
everything's
sharing
about
with everybody. But just a
to
quick
pull
thought
back
on
a little
NVIDIA,
bit.
for example, and you said maybe some folks are taking some profits.
We're
That
gonna trade
kind
what
of
we see.
strategy, do you buy ahead of earnings? Do you just keep doing like a dollar cost averaging? How do you play these mega cap names? Of course, we'll hear from NVIDIA this week. The other piece of news was we heard from Google that Buffett has a big stake in Google. There was some Apple news this morning. But on earnings, do you buy ahead of earnings or not necessarily?
Well, tactically, you really want to look at what earnings growth is going to be, not just in this quarter, but what the next several quarters look like. NVIDIA is definitely one of those companies that has a lot of durability built into their forecasting. They have the best components in the AI trade, and we all know it's all AI momentum right now. They're also benefiting from roughly $3 trillion in CapEx over the next 5 years, buying their equipment for building out data centers and increasing computing capacity. So again, a lot of durability there. Wouldn't blame anybody for taking advantage of any downside pressure on the stock tactically going forward. But then if you look more holistically
Alright,
at your
should be a
portfolio,
pullback
what do you
somewhere
really want to
on this
own going into
trend
next
that
year? I
was
think there
going
are
up.
some valid questions for some of the other Mag 7 names in terms of
they were.
all of the dollars being spent. How do they
That's
turn
it
into
right here.
profits or future earnings? And at
The
what
trend that
point
was
does
going
that
up.
actually come back to a name like Microsoft that spent $500 billion between last year and this year? Those questions are valid, and I think they're starting to see more and more people ask them in this moment in time.
I'm excited for some of these retail names this week. I know you are as well. Thursday, we'll hear from Walmart, and that's one of the names that you think can balance a portfolio. How so? And what's the strategy there? Is it ahead of the earnings or just in general? Tell me a little bit about Walmart as a way to de-risk.
A little bit more just in general. It really goes back to the durability of retail sales. Consumer dollars spent is actually up 4% year over year. Walmart is doing a great job in their omni-channel distribution strategy of capturing more of the consumer's wallet. Foot traffic is down to a certain extent, but only because their online ordering system and their home delivery is starting to make a dent in Amazon's business. And so this is just a way that's not really super sexy, again, given all of the AI exposure that people are looking for. But Walmart has done such a great job of just generating revenues on a consistent basis and then taking advantage of them by increasing efficiency, but also eating away at their direct competitors, Amazon. So it's just a name that we like to add to your portfolio for a long-term de-risking strategy.
Walmart really sets the tone for how consumer behavior is. It could be good news or bad news. If it dips, you buy that?
I would say yes. I mean, the pressure would be if we start to see employment dipping and people starting to spend less in overall dollars. And to be clear, that has not happened yet. But if if that would be the driver, I would still want to own Walmart because they have that built-in buffer by having such a huge strength in their generic offerings. People still go to Walmart because they can shop at a name brand level if they want to, or on the shelf right next to my name brand product is going to be a generic alternative at a substantially lower cost. And it doesn't matter if you're looking for milk or motor oil, that generic is there. And so again, just winning more of the consumer's wallet because they do have that competitive advantage on pricing.
I'll probably go to Walmart right now.
Okay, and then you have other names here. Where does a name like Crown Castle fit into the big story? So different from a name like Walmart. I know you gave us a variety. Why Crown Castle CCI?
Something completely different from the AI trade, but something that still is in its orbit, if you will. It's on the outside edge. Crown Castle owns 40,000 cell phone towers, and we're starting to see more increased demand for 5G wireless, which means we're seeing an upgrade cycle in the technology from the large cell carriers, and they're leasing more of that space coming back from Crown Castle. So this is a way to participate in a company that has a projection of 30%
this is bullish
growth over the next 2 to 3 years. I know it's been beaten up a little bit in the last 12 months, but also carries a 4.5% dividend. So this is a name that you can use, again, just to tamp down
bullish setup.
beta in your portfolio and get paid a 4.5% yield while you wait for that 30% earnings growth to kick in the next 3 to 4 quarters.
Yeah, I know you had Pentair also as one of your picks. Brian Mulberry, Zacks Investment Management. Brian, been great to see you. Thank you. Appreciate it. All right, folks, coming up, we'll take a look at the key levels to watch on the charts ahead of a busy week. Kevin Green's all over it, charting right now as we speak. He'll be right back after a quick break.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Live from Chicago, this is Trading 360. I'm Marley Hayden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable content. From inflation data to sector rotations, earnings to policy. It's a comprehensive
They
view
trying to
of
push this
markets
through.
every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Hey, good Monday morning to you. We kick off a busy week in video, retail. We'll get eco data. Right now, the S&P is up 9 points after starting off to the downside. We already have volatility. Senior markets correspondent Kevin Green is with us. He combs through the levels and watches these numbers every single day, all day. Kevin, great to see you on this Monday. What are you watching now?
Good morning, Nicole. Well, we actually did hit a key area of support to start off the trading session here at that 6,700-ish area. We did see some pressure in early trading this morning, but you are seeing some buyers really stepping in. But you are seeing around 36% of the stocks in the S&P 500 so far in the green. And the one that's really kind of leading the way for us right now is Alphabet or Google. And obviously, that's on the back of that Berkshire announcement that we saw on Friday of last week. That's really trying to drive us a little bit higher here. If you're looking for the upside resistance level for the S&P 500 for today, it's going to be 6,800. Now, if you look at the options positioning for the SPX options that are expiring for today, it's 6,820. But if you're looking at the open interest as well as the volume for this morning, 6,800 is actually going to be a key area of resistance for us. I think that would be a win for us. If you're kind of looking at the technical structure on the 15-minute chart, we have seen a little bit of a breakdown. Like to get above that 200 period moving average on the 15-minute chart, which is in blue. That sits around 67.75 or so here. To the downside, 6,660 is your key area of support that you would like to hold. Any breakdown, Nicole, below 66.50, you get a little bit concerned about the daily time frame for the S&P 500. So overall, we're trying to kind of recoup some of those losses from last week. Let's see if we have a follow-through day today, and it would not be outside of the norm if we do see some consolidation leading into the NVIDIA earnings. Volatility is still elevated, still pricing in about a 1.3, 1.35% move to the upside or downside, but that could actually remain as our range-bound action here until we get that NVIDIA earnings, start seeing volatility crush lower, hopefully, and that could also lead to equities moving higher.
Yeah, I mean, Google, you mentioned Google. The Buffett bump is real. It's up 5.7% on this Buffett news. Let's hear about Nat Gas, what you're watching there.
Yeah, we have seen an aggressive move to the upside for natural gas over the last couple of weeks here, actually hitting one-year highs. We're getting very close to one-year highs when you're looking at the front-month contract. But, Nicole, maybe we are starting to see the price action starting to roll over a little bit. You are seeing RSI starting to creep back into that bought level to the downside.
This looks weak, y'all. Careful.
And you are looking at MACD actually officially in a potential cross here. Now, the reason that we saw the move to the upside are a number of factors. Obviously, the forecast for the winter looking a little bit more aggressive or colder here in the United States as well as around the world than what we expected, as well as LNG or liquefied natural gas demand. Those exports are actually ramping up fairly aggressively, and that actually has pushed prices a little bit higher, but maybe a little bit overdone. Let's see if some sellers actually come in and try to knock natural gas to the downside here. That also would be favorable for consumers like yourself and myself as we prepare for the winter months.
What a run. I mean, Nat Gas up almost 50% in 1 month. I can't believe that move. But pulling back a bit today, as you said, maybe a little overdone. Kevin Green, great to see you. Thank you so much always. And our market meetup panel is ready and standing by. Alex Coffey and Joe Mazzola, Director of Trading Services, Charles Schwab. Good to see you both, Alex and Joe. Joe, I'll start with you. We get data. And so looking forward to that on Thursday and some more. Tell me, I mean, I want it right now. I'm a little impatient. However, how are you feeling about this week ahead?
You and me both, right? I mean, we've been waiting with bated breath for a lot of this data. And look, Thursday's the big one. We'll get the updates for the September non-farm payrolls. Look, markets are going to be watching that very closely. The expectation for about 50,000 job creation. I think if you're kind of within that window, the market's going to kind of see past it. I think any big deviations from that, you're going to see a bond market reaction, and we're already, we've seen rates push up on the 10-year yield the last couple of weeks here, and it's possible that continues. Now, why is that important? It's important because as those yields have started to creep back up, we've also seen a little bit less of appetite for some risk assets, and you've started to see that rotation, right? The rotation out of some of the higher beta names that really started in earnest about 2 weeks ago and kind of continued forward. If you look at technology, you look at communication services, those were two of the sectors that house the majority of the Mag 7 names, and they've shown some weakness recently. From a position of relative strength to weakening, and you're starting to see utilities pick up. You're starting to see healthcare pick up. So I think part of that story has to do with what we're seeing from the interest rates, which relates to what we're going to get on the non-farm payroll.
Look at this bullish divergence on the 1 minute.
Think, Alex? I mean,
This is weird. Look at this bullish power. Told you we need some volume and momentum. That's why I just this line right here. That was my target.
415 with my own eyes.
Went right to it. Bullish.
Make sure it's still at 414. And that's something that we've seen that popping around. Some of your thoughts on the markets, Alex?
Yeah, I mean, today is a lot of heavy lifting from Alphabet, about 20 points worth of the rally. So basically the entire rally could be associated with the move in Google shares. But, when it comes to the data, I tend to agree. I think the action is going to be in the bond market. That may have ripple effects, of course, downstream to the equity market. But if I were to try to, handicap and kind of assess, where the risks are, the least risk I see is some runaway rates to the upside. It seems like the left tail on rates is definitely the bigger risk, but I see more range-bound, treasury markets. It's been kind of a choppy range, but one that's been sort of choppy to this 4% mark and struggled to get below it, but doesn't really run too far from it, guys.
All right, what about NVIDIA? We're hearing from NVIDIA on Wednesday. There's going to be a lot to take in. Joe, your thoughts?
Well,
I mean, you could make the case, Nicole, maybe that's more important than the delayed September non-farm payrolls data, because NVIDIA, basically that is going to either provide credence or it's going to put at least a delay or maybe a short-term end to the AI boom narrative. NVIDIA expectations for about $1.25 in terms of earnings per share, I think on about 55 billion, 55.19 billion in terms of revenue. For me, the key, and I think for a lot of the analysts, the key is going to be the gross margins, right? Now that the China story is kind of pushed to the side for a little bit. We know they're having issues kind of getting their chips in China. What's really going to kind of hold is whether or not you're getting enough demand from the other sovereign nations out there to kind of recoup some of that was lost in China, and whether or not they can keep those gross margins. If that's the case, and they can prove that, you're looking at right now about a 6% implied move. So the stock is priced to move.
Yeah, I heard that.
It's just a matter of whether it goes up or down. When you see that 6% is absolute value, but right now the expectations are still.
So at this point now, maybe we should expect some volatility this week because you have the VIX sitting at 20. Alex, some of your thoughts here, because we'll get Nvidia, we'll get Home Depot, we'll get Walmart, we'll get jobs, maybe, and anything else that may come along. Maybe we should expect some volatility this week.
Yeah, and I'll piggyback on what Joe's saying. I mean, if you do some kind of back-of-the-hand shortcut math, if you basically take the expected move in dollars for NVIDIA around 12 and a half, you just multiply that by 3. You'll have to trust my math on this. It gets you kind of a conversion to S&P 500 points. So just this movement in NVIDIA that's expected around earnings is going to move the S&P 500 potentially around 0.5%. That doesn't even include the downstream effects of its peers with the industry or Magnificent Seven names. Just simply, that's how big NVIDIA's gotten. It's a macro event now.
All right, Joe, you got the final few seconds?
Yeah, it's going to be interesting to see whether or not the market can hold these levels. You got the nice bounce back. The last 2 Fridays in a row, it's been interesting to see the markets kind of close up off of gapping down. We're seeing it a little bit again today. I think there's some consolidation taking place. You can see that in the RSI. You can see that in the ADX. And I think the markets are just, kind of holding ground while they're waiting for the real big economic news and then the big NVIDIA news this week. It could be wait and see, but with the 20 VIX, it's telling us that the markets are priced for some movement.
Okay. Alex Coffey, Joe Mazzola, thank you. And thank you, friends, for being with me here on this Monday, live at the New York Stock Exchange on opening bell. I'm Nicole Penaleves, every day, 9 a.m. and 2 p.m. right here on Schwab Network. I'll see you later at 2 o'clock for the watch list. Keep it right here. Morning Trade Live with Sam Vadas next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based
All right, be careful
platforms.
on this pullback.
Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
What they do
My point
to
is that they're
be
getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
McDonald's, bullish as ever.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. show, we will take a closer look at what's on the table for the Fed in December as odds for a rate cut continue to move closer to 50-50. Jim Bianco will weigh in on what's next for the Fed and the economy. And over the next hour, we'll bring you example trades for Dell and Home Depot. Dell was a part of a larger Morgan Stanley hardware downgrade today, and Home Depot reports earnings ahead of tomorrow's opening bell. For now, though, let's take a look at where markets stand about half an hour into the trading week, and we are looking pretty range-bound off the back of what has been a volatile week previously. And, of course, we look ahead to a busy few days here. We've got plenty of retail earnings. We've got NVIDIA, of course, being the big one. We've got some Fed minutes, some Fed speak. So plenty on the docket going to be hitting the tape this week. And, of course, we're going to be getting that jobs data come this Thursday. So here's how we're playing out for the session. We've got the NASDAQ looking high by about 0.4%. So we are seeing a nice day for some of those tech names. The S&P up 0.2%. The Russell on the line, and the Dow just on the downside there on the unchanged line as well. So a little bit mixed as we get up and running. So a bit of sort of cautious optimism. Of course, let's just take a look at how foreign markets are faring, because we have seen a bit of weakness there in global equities overnight. The Hang Seng ending the day down 0.7%.
Yeah.
The Nikkei 225. We've got some GDP data out of Japan ending just fractionally lower there. We'll dig into that a little bit later on. The German DAX right now is down about 1%, and the FTSE 100 is down about 1/10 as well. So we're going to be talking about that upcoming
SheldronFrost
UK
here,
budget
as usual.
later
Look
on in
at
the
that Google.
program. Let's
I
take a
just
look at
wanna
futures
ask you
products
guys,
right
why
now,
is
because some
this
interesting
so bullish?
moves over the last couple of
Kids, why
sessions.
is this so
We're seeing the
bullish?
10-year yield now
Look at that
is at
Google. I told y'all,
4.13. The
you
US dollar
expect
index
Google.
picking up there as we've seen some softness there for euro and yen this morning at 99. Gold is lower, just holding its head above that 4,000 level. That, of course, is key. Crude oil has picked up to $60 a barrel now, but just on the line at the moment. And Bitcoin, which was trading at about 93,000 over the weekend, picking up a bit there at about 0.5% higher this morning at 94,000. So we're watching that, of course, given we have seen that sell-off in the cryptocurrency in the last week or so. All right, let's get to Kevin Green, who joins me now to get across some of the key stories. We have got some data hitting the tape right now. August construction spending.
No, you don't.
What are you
No, you
seeing
don't,
there?
Swab. You don't got no data.
Yes, Sam. Well, it's just crossing the wire right now here for me. We are actually seeing an increase of
No data
0.2%
now.
on a month-over-month
No
basis
data.
when you're looking at construction spending.
Plus we trade
here.
what we
Actually,
see
the street was looking
anyway.
for a contraction of
And
0.2%.
this
So
is
better than the
bullish.
street's expectations. It also looks
They
like we
get
do have a
down
revision
forward.
as well from the previous print. Previous print initially was sitting at negative
Oh,
0.1%. That was actually revised higher to 0.2%. So that's actually a pretty decent sign, given the fact that we have seen a lot of headwinds when it comes to the interest rate market, as well as just the uncertainty when it comes to the government shutdown. But it seems like construction spending, for the most part, is still holding
For this to
up,
be bullish, I'm looking for
relatively
this to
well.
hold.
We will see
But they
if this
start
trend
pulling
will
back.
actually continue over the next couple of months. Do we actually see any type of fracturing in the industrial space, in the construction space, home building space as well? I think those are going to be some very big question marks here. But if we are seeing the trajectory of yields moving a little bit lower, especially if you're looking at 7-year, 10-year, or even 20-year bonds here, that could also reduce financing rates as well. That could also get some cash off the sidelines here for some of these larger projects going into 2026.
Pull it back.
Okay, so a little bright spot there with respect to the construction
Just out of nowhere,
spending,
they decided to pull it back
August.
right here.
You know, obviously we're going to be getting the deluge of data that's going to be hitting the tape over the next couple of weeks. We're going to be getting the September jobs report come this Thursday. But this comes at a time, obviously, at KG, when we see the market sort of rethinking, you know, how they're looking at the potential for a December rate cut come the 10th. It's been interesting, obviously, looking at some of the accompanying Fed speak as well. I've heard Jefferson out this morning talking about how current policy and that stance is somewhat restrictive still. So it continues to point to a divided Fed, which I suppose is no surprise there. But how much could this move the needle, do you think, as far as what the market is currently pricing in?
Yeah, I think the Fed's probably going to discount the labor report that we'll have later this week, just because obviously we had the government shutdown. It's going to be kind of in between in the middle of the month as well. So how do you really kind of normalize that particular data set? I think that's going to be another key area. But we will get more economic data over the next couple of weeks leading up to that Fed meeting in December. Now, you could probably put out there, and you could ask Jim this after this hit here, you could probably look at maybe 4 Fed members that are looking to hold at this point in time. So we probably will see the the largest number of dissent
Just a little
obviously
pullback.
coming for this
This
year
definitely
for
still
a
looks
long time
bullish.
here when it comes to the Fed. Is the market already really pricing that in? It looks like it's trying to. It's really taking out or backing out that 25 basis point cut in December, at least for now, just given the fact of obviously the commentary coming from the Fed, a little bit more concern when it comes to inflation here in the near term, and then also labor market statistics, let's say murky at best, especially if you're looking at the ADP report here. So right now it seems like the market is trying to digest that, but it's not only just the fact of the labor market and the Fed. I think the market is also trying to digest the AI trade just in general, as we continue to hear, it seems like a week by week basis, new debt offerings getting into the market here to raise capital in order to finance operations, either near-term operations or CapEx spend in the AI space. And it seems like the market is starting to get a little bit concerned about that, at least for now. And I think just both of those factors are really kind of weighing on the S&P 500 and pushing up volatility.
Yeah, it's the front page Wall Street Journal article with a chart that shows just the bond issuance from some of these AI tech companies and just how much in 2025 compared to 2024 is staggering. Speaking of that, of course, outside of what is called the Super Bowl of earnings, quite often NVIDIA, we've got this week more than half of retail market cap that's going to be reporting here. Target, Walmart, Home Depot. What are you going to be looking out for? I mean, is this going to tell us more about that K-shaped economy?
Yeah, potentially. I think the two that I'm going to be really focusing on, obviously outside of NVIDIA, everybody's going to talk about that. I think Home Depot and then Walmart. And they're going to show kind of two different factors here. For Home Depot, their sales have actually been holding up. Unfortunately, it's the large durable goods that have seen a little bit of a slowing, and that's where
right here, double resistance.
The large financing deals being done, and that's where the margins are coming in for Home Depot. That just has not been the case over the last couple of quarters. Could this be the turnaround quarter for this company? Also leading into the holiday season, getting their commentary around the consumer just in general, and then also getting their commentary when it comes to the commercial space, because they do have a lot of exposure there. Are they starting to see maybe a little bit of a pickup going into the holiday season, trying to finish out some of this construction that's already existing for right now? And then you have Walmart. I think the biggest risk that you have for Walmart is a potential revision to the downside slightly for their guidance when it comes to top line because of that government shutdown. Obviously, it was short-lived, but we are going to see an impact with those SNAP benefits being delayed. That is going to impact that company by around $500 million, I believe, on a week-over-week basis. So that could be something to keep your eye out on. But they are the best when it comes to logistics, so they might be able to outshine and show that they're taking market share. So I think those are going to be the two companies that are going to really give us better insight as to the health of the economy, rather than probably the NVIDIA number, which is obviously going to be focusing on B2B business in the AI space.
Okay, and I'm just looking across the rare earth and minerals. Lithium plays this morning. KG, I'm seeing Albemarle is one of the best performers on the S&P, up at 9%. LAC up 13%. TMQ up 11%. A couple of traders have been pointing to perhaps some developments over in Chile with regards to some general elections, that perhaps the country's mining industry, which is the second largest lithium producer globally, could be favorable for this space, but also tracking some US-China headlines with Besant talking about trade deals before Thanksgiving. What do you make of the moves? I mean, is this what's driving the action today as far as some of these headlines?
Yeah, definitely. So for Albemarle, you actually saw a bid for
Use
this
the
company
Russian
all
real.
last week. I think it's
Oh, they're
up
pulling
7
back, pulling
sessions
back.
in a row. And this is more of a traditional name when it comes to the critical mineral space.
Jackson right
it
here.
actually was not really participating
already
in this
knew.
massive run-up that you saw from companies like LAC or
Some
even
type of
MP
landing this
Materials,
is either
but it is now catching a bid right now. So a couple
soft
of things
landing
that
or
happened
hard
with this
landing.
company. They
Just
do
I
have
see.
Chile exposure when it comes to their lithium operations. Chile just had a presidential election. It looks like that's going to go off into a runoff in an interesting kind of dynamic when it comes to the two political candidates that are going to be going head-to-head here. And one of them could be very favorable when it comes to the mining industry as a whole, which is why this is catching a bid. You also had some commentary coming out of China from China's largest lithium processor and the third largest producer in the world, being very bullish on 2026 when it comes to the demand front. They are actually looking for an increase of 30 to 40% in demand for 2026 here, and they are also looking at supply not really meeting that demand, and that could also push prices higher. That's another reason
This
why
looks very bearish.
catching a little bit of a bid here. But once again, going back to Albemarle, this is a company that has not gotten any love from the administration, even though it has probably the best infrastructure, arguably, in the world when it comes to providing a lot of these critical minerals to the United States. This could be one that does catch a little bit of a bid here if we do see a rocky start for U.S.-China relations over the next couple of weeks.
Okay, and speaking of, I see you've put a note out this morning talking about soybeans, the fact that China has been snapping up some of these U.S. stuff, but quite frankly, not a lot of it because they're sitting on huge stockpiles. Can you talk us through what you're seeing there as far as the market dynamics?
Yes, Sam, I would say soybeans over the next 2 weeks I think is a little bit more important than NVIDIA, and because of the purchasing activity, and that's really going to be the gauge for broader equities as well as some of these other industries moving forward. Just like in Trump 1.0, we started seeing China really catching a bid here when it came to importing physical soybeans, putting orders in. The broader equity market also followed up with that. But right now, when you're looking at the USDA data that came out, the export sales data, they are falling behind. They've only met around 2.76% of their total commitments for the remainder of this year.
Working
that we are
across
being told by the
teams is
White
tough,
House that they are
but
going to
Asana
purchase
helps
here.
you handle it.
They're falling behind pretty
That's because
significantly. They would need to
Asana
purchase
is where
around
humans and
1.95
AI
million metric tons
coordinate work
every
together.
week for the remainder of this
AI
year
can
in order
spot
to meet that
roadblocks and
the
assign
commitment of
work in a
around 12
snap.
million
So
metric
everything
tons at this point in
and
time. So it's a tall order.
everyone
Could it be
stays on
done?
track.
It can be. But if
That's
we
how
do
work
see them
gets
kind of
handled.
backing away from these
That's
purchases,
Asana.
does that also put into
Visit us
question
at
and some of the commentary,
asana.com.
maybe some negative commentary coming
That's
from the White House? That also leads back to that critical
ASANA.com.
minerals discussion as well. Could we actually see that trend catch another bid here if China fails to follow through? Right now, it looks like they're failing to follow through on the soybean purchases at the moment.
Okay, and certainly something to watch, particularly off the back of the U.S.-China at least framework agreement that they.
Oh, look at that! Look at that balance right there.
Thank you so much for getting us
That's
across
what I'm
some of
talking
those key
about.
stories this morning and what is moving in markets today. Coming up, we will take a closer look at what's on the table for the Fed in its December meeting with Jim Bianco. Morning Trade Live is back after this.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management. No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
We're back on Morning Trade Live. Alphabet is trading high this morning after Berkshire Hathaway disclosed that it bought nearly 18 million Alphabet shares in the third quarter. The stake is valued at nearly $5 billion and was Berkshire's largest third quarter portfolio addition. The firm also adding Chubb and Domino's in the third quarter. Let's take a look at some of the winners and the losers on the session so far. And we are seeing some of the memory names actually winning this morning. And this is, of course, on some of the idea that we are seeing this rising prices, certainly for some of these devices, or at least some of these products. Western Digital and Micron both up over 3% this morning. Albemarle, as we mentioned, in the lithium space, up 8.5%. And as we just brought you, Alphabet shares are higher by about 5% off the back look at the laggards on the session, and there seems to be a bit of a link here between the winners with respect to memory and what we're seeing in the Dells and the HPs of the world. So these are tracking lower this morning, and this is coming off the back of Morgan Stanley downgrading some of these names. We've got Dell from overweight to underweight now with a price target of $110. And this is really on the thinking that rising memory costs, as I just mentioned, will pressure the margins of some of these companies. So there certainly is a link with respect to what we're seeing as far as higher prices for memory feeding into some of this hardware. All right, let's switch gears now and bring in our first guest of the show. Joining us now is Jim Bianco, President of Bianco Research. It's always lovely to talk to you, Jim. Let's get to what we're likely to hear this week as far as this whole K-shaped economy, because when we talk about this, which we do very often, it's important to point out exactly what that means, because you've actually argued that this is really about inflation and not jobs. Can you unpack that for us?
Sure. The K-shaped economy is basically that the top 10 or 15% of income in this country is doing very well. The bottom 50% of income is struggling. And the question, and this is unusual. If you go, you could argue that there's been Ks in the past, and there have been, but not to this degree. So what is the cause of that? You could argue, as a lot of people say, it's jobs. They're fearing that they're going to lose their jobs. But unemployment is not up, even if we go with the estimates, although we haven't gotten a number in a few months. So what is it that you're seeing? You saw it in the elections the last couple of weeks. You see it in the political polling. It's about affordability. It's about prices. It's about the cumulative rise of inflation since the 2020 recession, which is over 25% right now. That's the breaking point for the bottom 50% or the bottom half of the K. So it's really about prices and it's about inflation. And yet people are still arguing, no, the Fed needs to cut rates to try and stimulate more jobs because that's why people are unhappy. I think we're missing the boat here.
Yeah, I mean, certainly as far as if you have a job, you're more inclined to spend your money. But even if you don't have a job, you still need to buy your milk, your bread, your eggs, etc. So you raise a very interesting point there. What is this week likely to tell us, Jim? Because we're going to be hearing from the Nvidias of the world, but we're also going to be hearing from, as I mentioned to KG, more than half of retail market cap, your Targets, your Walmarts, your Home Depots. Is this going to amplify the K?
Yeah, it should. I mean, Target has been very good at giving us a lot of detail about what the lower income consumer is doing, where they're spending their money or not spending their money. And I suspect we'll get another good update from them when they do report as to what is happening with the lower income consumer. Target, by the way, has been one that has been very vocal, talking about what is really pushing back or hurting the lower end consumer is not a lack of jobs, but it's the prices. Prices are up too much right now, and that's really where's the big problem.
Yeah, I mean, it's been interesting listening to all this Fed speak as well over the last course of the couple of weeks that we haven't had the data. We've been in this sort of data void. It looks like it's going to be a close call, Jim, and I'm keen to get your thoughts on what we're seeing here. I mean, the CME Fed futures, as far as what they're betting on with regards to this rate cut, has fallen below 50-50 now. But, you know, we've also had Jefferson out this morning talking about how the current policy stance is somewhat restrictive. You have Collins, Schmidt, who are reluctant, Kashkari on the fence. I mean, how close is it going to get?
Well, this is unusual to see it at around, you're right, it's around 43% right now. Call it 50-50, it's close enough. To be this close to the meeting, like we're 3 weeks away from the meeting and we still haven't decided what the Fed is going to do. But there's something more important going on here. Last week, a week ago today, the probability of a Fed cut was 70%, ended the week at 43. What happened last week? There was no data. The government was closed until Wednesday. Jay Powell didn't speak. But it was the cumulative argument from everybody else. It seems like all of Trump's bashing of the Fed is finally starting to take hold and that they're becoming more independent. And that the Fed is now no longer, what does Jay Powell think? It's more tally up what all the 12 voters think and which one is going to get to 7, a majority. And right now, it looks like 5 of the voters are saying that they don't want to cut rates at the December meeting. Now, if we do get a rate cut, it's very possible it's going to be a 7-5 vote in order to get a rate cut. Or it's very possible that, we don't even get one at all, that some of the others come across and that they vote the rate cut down. But it's no longer about what does Jay Powell think. It's what do each of the voters have? And you just take a tally sheet and go, this one's on the cut side, this one's on the hike side, this one's on the hold side. How do we get to 7? Very different from what we've seen over the last many decades of how the Fed works. And again, I think it's all the Trump bashing that has gone on with the Fed, that they're pushing back about their independence, and they're saying, I'm an independent voter, and I'm going to vote independently, and that's what we're seeing right now.
Right, and so beyond just the headlines, who's going to cut and who's not going to cut or what they think, I mean, there's a very nuanced debate going on under the surface, and, that's certainly been the case with the jobs, whether it's a supply issue, whether it's a demand issue, but I'm focused on the inflation this morning just because Jefferson was interesting talking about how signs of inflation are showing progress towards 2% ex-tariffs. Where do you sit on this whole debate as to whether we are going to just see this as a sort of one-off or transitory type price increase?
I was going to say, this is one of the 3 big questions that the Fed is really struggling with. Are tariffs a one-off increase of inflation? That is, if you read most of the Fed officials, that is an open question. They're all over the lot on it, and they should be. We really don't know whether it is or it isn't. The other 2 questions are, is the labor supply, meaning that, the closing of the border, no more immigration into the country, mean that maybe we only need 20,000 jobs a month in order to meet population growth. And therefore, if we're getting 20,000 jobs, which historically look like a bad number, it actually isn't. And then the final question that they're struggling with is, what is the neutral rate for the funds rate? Schmidt came out from Kansas City and said, we might already be restrictive. And a lot of other Fed officials are saying that we're accommodative. So they're really struggling with all of these questions. Now, to your original question real quick about the one-off on tariffs, we're 5 years past COVID, and we're still not anywhere near, even Jefferson said, we're still making progress towards 2%. We're almost 6 years now past COVID. We should have been at 2% 4 years ago if it was transitory or if it wasn't any kind of a problem. There's a bigger underlying problem with prices. That's why we've got the K. That's why the public is angry. And for him to say that we're on our way to 2%, we should have been there at the early parts of the Biden administration, but we're still not there yet. There's a bigger issue going on with prices that they don't want to deal with.
Okay, Jim Bianco, always a pleasure. Thank you so much for joining me this morning. That is Jim Bianco there, President Bianco Research. Appreciate your time. Coming up, we'll get a closer look at the big picture with the team from Charles Schwab. Morning Trade Live. We'll be right back.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
The big picture. So let's welcome in Kathy Jones, Chief Fixed Income Strategist at Schwab Center for Financial Research. Very good morning to you, Kathy. Thanks so much for joining me today. Okay, so we know now that we're going to be getting that September jobs report come this Thursday. Is that going to move the needle?
Well, at least it'll be solid data that we get for the first time in quite some time. I do think it'll be important. Consensus is expecting about a 50,000 job gain. If it's wide of the mark in either direction, I think the bond market will react to it. Of course, the details will matter, but at least we're starting to catch up on the information. Now, one thing I'll warn about is we're going to start getting data, but we'll probably get some pretty sizable revisions afterwards, simply because the information that's been gathered has probably been gathered in a very quick fashion, hadn't had a lot of time to process it. So it's kind of an in-betweenish report. But certainly the bond market's been waiting for this report for a long time.
Yeah, we certainly have. I mean, we've sort of been flying blind without it. They're also going to be getting the November jobs number just a week before that December 10 decision. But you're still of the thinking that the Fed sits on its hands come next meeting and perhaps cut in early 2026. Just talk us through that thinking right now, particularly given the conversation I just had with Jim Bianco about, some of the conversations now that are going on around the debate with respect to the price increases.
Yeah, I think it's pretty straightforward. Inflation's too high. So the Fed's, two dual mandates are somewhat in tension. The labor market is slowing down from the evidence that we have. It's deteriorating somewhat. They've addressed that with a couple of rate cuts preemptively because the unemployment rate is still low. It's roughly, let's call it 4.5%. We don't know for sure, but somewhere in that vicinity. But inflation's stuck at 3%. And so it really doesn't give the Fed a lot of room to maneuver from here if they have inflation stuck at 3% and the Fed funds rate, the lower bound is at 3 3/4. That gives them 75 basis points to play with unless they get inflation down. Inflation's not down. So until that happens, I don't see that the Fed has a whole lot of room to move. The other factor that plays into this is that is not a lot of evidence that interest rates are really holding back the economy. What we're seeing is financial conditions are very easy. Lenders are lending. People are borrowing. Even though perhaps the rates are high, they're still borrowing. They're still able to get credit. So we're not really seeing a big constraint on the economy.
See, we found support right here, class. I told you.
So lowering them may not make any difference.
Interesting point. And speaking
Good morning. I'm sorry about that, y'all. I had to run outside.
AI tech companies. I mean, I'm just looking at the Journal front page report talking about bond issuance.
And when I mean run, I mean running for y'all.
Shot up in 2025. I'm just wondering how you and the team are actually thinking about some of the corporate debt, some of the credit risk out there, given some of the conversations about all these stretched AI and valuation type conversations.
Yeah, in the AI sector, that sort of sector where you're seeing a lot of borrowing to build out the infrastructure, most of it or a lot of it is coming from the big companies that have pretty solid balance sheets and have the ability to service the debt. But
what are they trying to maintain and be bullish?
Big exposure in the
Bitcoin for a second.
It's concerning when you have credit spreads at very low levels. So it doesn't take too much to see that you could see those credit spreads widen if we hit
what in 90K
in terms of the build out of AI or in terms of the economy. We're more focused and more concerned about lower rated companies.
He's trying to bounce right here.
High yield companies who's in the leveraged loan market because they have less capacity.
Yeah, this is where it was.
Servicing the debt.
They're holding this pretty good.
You start to pile up the debt, you will expect to see.
Almost reminds me of the market.
Because the market should demand.
They're holding right here pretty good too for a retest up here, where they just pulled back from. They're looking for a retest.
Burden of debt that's becoming very high very quickly.
Kathy Jones, always a pleasure. Thanks so much
Ooh,
for
look at
joining us today.
Look at Data Evolve. That's what I'm talking about, Data Evolve. Yeah, keep telling y'all that. Yeah. Keep telling y'all that. Data Evolve. Yeah, keep telling y'all about Data Evolve. This was just $150. That's $50 on a 100 contract. 100 shares, I mean.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this
All right, where's
is
this going?
Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange.
Look, well, the resistance is always there, boy.
Stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react.
This will be the trend reversal, though.
Opening Bell, live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus on tech hardware stocks today. Morgan Stanley bullish on the memory sector and as a result issuing downgrades for Dell, HP and HP Enterprise. All three stocks are down on the pause. You can see here in the vicinity between 3 and 7% right now. So that is the focus of the morning trade. Joining us now for a closer look is Schwab Network host Marley Caden. Very good morning to you. Happy Monday, Marley. So what went into this call by Morgan Stanley on these hardware names? Talk us through the note.
Good morning to you, Sam. Yes, like you mentioned, it's really a bullish outlook on the memory names, and then in turn, creates some headwinds for these hardware names. We are seeing them under pressure today on the heels of these downgrades, a double downgrade for Dell. That's why we're seeing them down the most. So Morgan Stanley put out this note saying that the rising memory costs and the weakening non-AI hardware demand have prompted them to cut those ratings on the hardware makers, making them more bullish in the memory segment. They're citing mounting margin pressures across the sector because the current backdrop right now is what they're calling a memory super cycle, with these NAND and DRAM spot prices up anywhere between 50 and 300% in the past 6 months. That sharp acceleration in component inflation will likely weigh on the earnings for these hardware companies in 2026. So that's where we're seeing some of these margin concerns. They're saying that typically hardware OEMs historically face gross margin compression about 6 to 12 months after we start to see these memory costs start rising. So now they're expecting that to hit in 2026 versus the Wall Street forecast that originally called for slight expansion. Dell and HP came in near the top of Morgan Stanley's most vulnerable list as being two of the most exposed companies in the spike of these DRAM and NAND prices because of their high reliance on memory-intensive PC and server products. HPE also has some headwinds tied to integration challenges and rising component costs, but Dell and HP were of more concern to Morgan Stanley. So let's walk through each of the downgrades. Dell got a double downgrade, like I said. They're down more than 7%. Price target went down to $110 from $144. They cited that increased memory cost, a mixed shift to AI servers, which will in turn turn to lower margins. They said, quote, Dell is one of the hardest hit stocks from rising memory costs. They also reduced their fiscal 2027 gross margin forecast as well, thinking that this super cycle will hit them into 27 as well as 26. For HP, they went to underweight from equal weight, dropping their price target down $2 to $24, down from 26. Same citing there, this PC refresh cycle could be a potential benefit to them, but those higher prices will compress their margins. And then for HPE, they went from equal weight to from overweight to equal weight, price target down $3 to $25, saying that they do still view the acquisition of Juniper Networks as a positive, but those rising component costs will limit profitability there. So we are seeing these names under pressure, where we are seeing the memory names like Micron getting an upgrade today, SanDisk, some of these other companies on the move higher on these moves, but the hardware names under pressure today, Sam.
Yeah, it's memory versus hardware. It's interesting that the street has caught up with some of these trends because it was about 2 weeks ago where there were reports coming out of south of China talking about how these wholesale electronics markets had seen the rise in memory products, which was going to translate into higher consumer electronics products. So it's been a very interesting trend, and we're starting to see this sort of play out in the pricing in the markets right now off the back of these analyst notes. Thank you so much, Marley, for that. I'll talk to you a bit later on, as always. Let's trade it now with Charles Moon, stock strategist, Prosper Trading Academy. How are you approaching your example trade, Charles, for Dell?
Yeah, with earnings coming up, I'm certainly looking for some sort of positive catalyst. Usually when stocks have this type of retracement in this short period of time off of their highs, it changes kind of the valuation aspect leading into earnings. So I feel that it's still, offering up some short-term value. Anything that's going to be related as positive from earnings can lead to a nice little boost in the stock. Now, in terms of earnings performance, it hasn't been great over the last 4 quarters. But overall, I do like the value in this opportunity. I'm looking at the November 28th, 125, 133 call vertical spread for around $3, maybe a little bit up above $3 or lower if possible. But ultimately, buying that 125 and shorting the 133 allows us to kind of capture that projected implied move. We could see it really race up to 140 off of earnings, maybe even as high as 143 in the near term. And more importantly, the overall risk values of the spread isn't that expensive. I would actually be risking the price of the spread right around that $3. But I believe that if it could make that jump to 140, 145, it'll be well worth it. And again, with the suppression in price, especially this 25% retracement in just the last few weeks, it offers up short-term value. So, when traders look at earnings reports and valuations are always a concern, when we see this deep type of pullback, it kind of changes the sentiment in terms of approach onto these earnings calls, and obviously could have a strong ramification one way or the other based on how the company reports.
Yeah, it's interesting because even with the Morgan Stanley downgrade, I'm actually just seeing JP Morgan has raised the price target here on Dell and talking about how they do expect near-term revenue and earnings upsides from AI leverage companies to reassure investors. So they're looking at a price target of $170, and we're at 124 and change right now. So it's a bit mixed as far as what the analysts think. Hey, Charles, just want to get your overall thoughts on the markets today. We're looking pretty range-bound ahead of what is going to be a pretty busy week. A lot of sort of event risk on the horizon and plenty of catalysts to work with. What are you watching?
NVIDIA. I think a lot of this is going to be tied to NVIDIA's earnings report because, it's not so much that we've heard the pop in the markets, but we have seen some really big unwinding of these AI growth names, and the AI play is really getting pummeled. These Max 7 names, especially those with, CapEx expenditures towards AI, are getting hit really hard. Meta's barely been able to lift. Microsoft's held up pretty well, and Google's been a strong performer today as well. But, I think a lot of this is highly dependent on NVIDIA, seeing how the semis have performed. We've seen a lot of the growth AI names getting hit really hard. So, this has been kind of the Pied Piper for the markets since we rallied off the lows. I think that, a lot of the market direction and sentiment leading into the December FOMC meeting is going to be really just on the heels of what NVIDIA does in terms of performance on their earnings report.
Okay, I was just imagining Jensen Huang with his leather jacket now playing some sort of flute or something like the Pied Piper. But thank you so much for putting that in my head, Charles. All right, always a pleasure talking to you. Charles Moon, their stock strategist across the Trading Academy. Coming up, we'll take a closer look at what is moving markets overseas with Richard Flynn from Charles Schwab UK. Morning Trade Line is back after this.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotation, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Oh, I lost my phone.
Welcome back to Morning Trade Live. I'm Sam Barnes, coming to you live from the New York Stock Exchange. Joining us now is Richard Flynn, Managing Director at Charles Schwab UK. Thanks so much for joining us today, Richard. So we're going to be seeing this upcoming UK budget due on November the 26th. I mean, there's been so many things thrown around out there as far as, what this is likely to include. Some things are unpopular, some things have been sort of tweaked. What are your expectations as far as what is likely to be on the table here?
Yeah, morning, Sam. It is an interesting time over here in London. The budget was originally announced on September the 3rd, so it's over 2 months of laying the groundwork for what's going to be announced next week. And the big news last week was that the government seemed to have reversed course on raising income tax. That was one of the likely outcomes for the budget next week. Rachel Reeves has very little space to maneuver with this budget. There is a pretty sizable hole in public finances of 30 to 40 billion. Very little
Might come off phone.
And she's going to have to make some unpopular choices. So what is likely to see, we're likely to see freezing of the tax thresholds, which effectively is a kind of stealth tax whereby as people's earnings go up, they find themselves moving into the higher rate of tax that gets paid, 20%, 40%, 45%, that fiscal drag will increase the tax take by around 10 billion over a couple of years, but will be unpopular because people will find themselves nudging into the higher percentage of income tax. There's also going to be some changes around pension contributions and the tax relief available on pensions. A lot of people have mooted the idea of having a flat rate of pension relief on contributions. So one of the things here in the UK, if you are a higher rate taxpayer, you can put up to £60,000 into your pension on an annual basis and receive full income tax relief for those contributions. That's at 45%. Historically, that's been pretty generous, but what is possible is that the government will actually create a flat rate of relief at potentially 30%, which would allow lower rate taxpayers to benefit and higher rate taxpayers obviously to lose some of that freedom of putting money into their pensions. It's also affecting pensioners in terms of withdrawing money from their pensions, and the 25% tax-free amount that pensioners can withdraw is likely up for change. And so what that has done, unfortunately, is seen quite a bit of investor behavior change in the last couple of months. And a lot of people approaching retirement age or with the ability to draw down from their pensions are trying to preempt this decision, which is arguably not a very sensible thing to do, because as we've seen before with previous budgets, what you think might happen doesn't necessarily happen on the morning. And so a lot of people are urging caution from investors not to make decisions that they might regret regarding their pension drawdowns.
Right. Let's just talk about some of the market reaction to what we're going to be getting here, because it looks like cable sterling has been sort of whipsawed around on some of these expectations, and then these sort of perceived U-turns, etc., as well as the gilts market too. What do you think the sort of reaction in the market is going to be to what you sort of just laid out as to what is likely to be the path ahead here?
Well, you would imagine. I mean, certainly the gilt market seems to have stabilized.
Oh, look at the power.
There was a pretty significant sell-off on Friday as prices pushed down and obviously yields went up. But realistically, you would imagine that global markets have priced in a lot of the uncertainty around this budget, and the government has worked very hard to try and trail what they're going to say, so there's no huge surprises. Fundamentally, the government's approach is that they have ironclad rules to fiscal planning. The uncertainty that greeted Liz Truss's mini budget a couple of years ago, which pledged to reduce taxes and increase borrowing significantly, that's something that the government, I don't think any colour of government in the UK will want to repeat. And so I can't imagine that the consequences to next Wednesday's budget announcement will be anything like as significant as the response to Liz Truss's mini budget from a few years ago. But certainly you could expect a closer look at the UK in terms of its fiscal security and its financial strength from analysts around the world. So you could expect to see potentially a bit of volatility in sterling from next Wednesday.
Okay, we'll be watching
Boom, 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 folks.
market. Thank you so much for that, Richard Flynn. Really appreciate your time today. Managing Director at Charles Schwab over in the UK. Let's widen our scope and take a look at global markets. Now, tensions between China and Japan taking center stage in Asia to kick off the week. Travel, beauty and retail stocks are sliding in Tokyo trade after Beijing ratcheted up confrontation with the country over the new Prime Minister Sanae Takaichi's comments about Taiwan. She suggested a Chinese attack on the island could trigger a military response by Japan. China is now issuing travel warnings to the country, advising people to exercise caution over studying there and threatening further countermeasures. Data out of Japan, meantime, overnight, showing that the economy contracted 1.8% annually last quarter, the first drop in 6. That translated to a quarterly drop of 0.4% versus estimates of 0.6% contraction. There are now expectations this should help Takaichi's case for expansionary fiscal stimulus. The yen slipping
Tesla's looking bullish.
Japan's 20-year yield hitting its highest since 1999. Shares in Alibaba down fractionally in Hong Kong. That was overnight after the Financial Times reported the US is accusing the company of providing technological support for Chinese military operations against American targets. The warning coming from an official memo provided to the FT, which included top-secret intelligence on how Baba supplies the PLA with capabilities that allegedly threatens US security. Citi sees the report serving a near-term overhang on the stock and views this as any sell-off as a buying opportunity, keeping a buy rating on the stock with a $218 price target. In fact, their shares now up 4% in trade today. We're at 159 and change. Coming up, it's time for Inside Out, and we'll take a closer look at Home Depot ahead of tomorrow's earnings and bring you an example trade for that vein when Morning Trade Live returns.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly.
Look at the volume coming in on Tesla right here.
It's interactive learning.
You can tell that it's bullish right here.
Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com.
We're back on Morning Trade Live. We'll get a closer look at the home improvement trade tomorrow morning when Home Depot reports its earnings. And it's been a rough go for those stocks this year. Home Depot and Lowe's both down more than 5% in 2025, while Floor and Decor and Builders First Source are both down more than 25% year to date. So let's go inside out on Home Depot ahead of tomorrow's earnings. Joining us now is Sky Canavis, who's the principal analyst at eMarketer. Thanks so much, Sky, for joining us today. So what are your expectations for Home Depot come tomorrow with this report card?
So we expect to see fairly modest growth in light of pretty tough year-ago comps. They kind of reversed their big slump that they were in for a while. And conditions are much more challenging now, so we're also expecting to see fairly conservative guidance. We know Q4 is typically pretty slow for the home improvement sector, as people don't really start major projects at the end of the year in the wintertime.
Yeah, you raised an interesting point in your notes about how we're seeing right now, certainly as far as the consumer is concerned. Do you think that the higher end, sort of spenders right now can help mitigate or offset some of the other challenges we're seeing out there?
They've been really reliant on the more affluent households who are, of course, benefiting from increases in their home prices. They tend to own homes. They've also benefited from the run in the equity markets. But even those consumers, I think, are taking a bit of a wait-and-see approach. There's a lot of project deferral taking place. Smaller projects are still being conducted, but particularly where home improvement projects require financing with the relatively high interest rates and concerns about where the economy is headed, consumers are still really cautious.
Okay, so between the struggling housing market, I mean, even though we're seeing signs of growth, it hasn't really turned around in sort of a meaningful way as much as everybody had anticipated, even with some of these interest rates coming down. You're talking about the K-shaped economy, maybe more affluent people sort of pulling back on their spending, et cetera, and all the other sort of consumer trends we're seeing there. What has this company got to say to mitigate some of these challenges we're seeing right now as far as sort of the more sort of cyclical exposure?
All right, be careful.
So they do have some significant advantages in their scale. They've made some heavy supply chain improvements, and they've had some recent B2B acquisitions that are really targeting the pro consumer and helping to insulate them a little more from the DIY,
This support right here is
more struggling, less affluent consumer. They're really making gains in e-commerce. We expect strong performance there again this quarter, particularly as they speed up delivery speeds and enhance their fulfillment network to make them a go-to source and really help drive repeat purchases online.
And where does Home Depot sort of sit amongst the bunch? I mean, when we talk about some of the competition out there, I mean, we mentioned Lowe's. How is this company sort of positioned within the market?
They're really the two big players. We expect Home Depot is investing a bit more in enhancing its pro, which I think has been a strength for Lowe's traditionally. And so Home Depot is still trying to capture a bit more of that share.
Okay. Good look at Home Depot ahead of its earnings that are coming out tomorrow. Sky, thank you so much for joining us today. Sky Canavis, who's the principal analyst at eMarketer. I appreciate your time. Let's trade it now with Tom White, host of Fast Market. So an example trade for us. Good morning to you, Tom, for Home Depot ahead of earnings. How are you looking at this one?
Yeah, the stock pulled back pretty significantly from the all-time highs. Remember, they hit all-time highs in this report a year ago, and we've kind of fallen off down about 18% from those
right here.
levels
If this
over
breaks,
the
this is
last 12
going to be a
months.
monster put.
So expectations of bar relatively low at this point. The option market pricing in about a plus or minus about 4.5% move or so, maybe $15.5 either way. In the shares post earnings. Now, typically over the past few quarters where they've missed same-store sales numbers, growth has slowed. They're usually pretty shareholder friendly. A lot of buybacks, dividend hikes for this company. So that's kind of supported the narrative that when the housing market turns around, if it ever does, they'll be okay in this space. But so with that in mind, we're almost in bear market territory, that pullback. If you're more bullish on this name, but maybe you want to be a little bit more passive, a little bit more conservative in your strategy, this type of strategy takes advantage of a neutral to bullish stance. I went out to the November 21st monthly options that expire in just 4 days. So really short-term positioning on this trade. Taking advantage of the higher implied volatility levels going into the report. Where I'm going to sell the out-of-the-money 350 strike put. It's about $10 below the current share price. And then against it, because we like to stay risk-defying going into earnings, buy the 340 strike put. So a short, neutral to bullish, $10 wide put vertical. You're going to collect roughly about a 210 credit on it. That's what you can make, $210 per spread with about $790 in risk on this. But why is the risk so much larger than the potential reward on a strategy like this? Well, I mentioned the fact that it's more conservative because you've got a better probability of success. If you look at the break even on this one, just below 347.80 or 348 on this one, just below that level, that gives you that better probability of success. The probability that that short 350 strike will be out of the money at expiration, which is what you want. You want it to remain above 350, about 68%. So that higher probability of success allows you a little bit of room to the downside cushion.
But we on your ass, Swabbington.
Hurt on a trade like this.
We on your ass. Don't be playing with my bread, boy.
You profit the stock
We
consolidates
on your ass.
or even goes lower. That break even
I see it, though. I see what you're talking about.
347.90 to the downside. That's about 3.5% below the current share price. So just underneath what the one standard deviation move that the option market is pricing in on this one. But this is what we talk about with trade-offs on this. You're risking more to make a little bit less, but you're giving yourself a better probability of success.
Okay, a good look at Home Depot ahead of its earnings this week. Thank you so much for an example trade for us this morning, Tom White. I'll catch you a bit later on. So that is, of course, going to be part of more than the half of market cap in the retail space that's going to be reporting this week, along with Target and also Walmart. So that is outside of NVIDIA, of course. We're also going to be hearing from the likes of Palo Alto. It's got a couple of price target boosts this morning as well from BMO and Mizuho, looking at 230. So there's a couple of names that we're going to be keeping our eyes on this week ahead of what is going to be a very busy one. Plenty of event risk on the horizon. We've also got the September jobs report out come this Thursday. We've got plenty of Fed speak to pass over too. So here is where things stand right now. A little bit range bound for this Monday as we get up and running for this week. We've got the Russell 2000 that's lagging right now, about 0.3%, but really just flat as flat can be now for the S&P 500 and the NASDAQ, just to the upside at the moment. And of course, it's all going to be about technology. We're seeing a little bit of a bifurcated technology space between memory and hardware this morning off the back of price increases there for some of these storage names. So it's an interesting day in the markets, to say the least. But thanks for joining us here. Morning Trade Live. I'm Sam Vardas. Download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. We've got Trading 360 up next with Marley Kay, and I'll catch you later on Market on Close.
Market trying to stay resilient. Who's going to win? The Bulls or the Bears? I'm telling y'all, boy.
Charles Schwab offers
Every single day.
That's right for you. The Platforms and Tools webcast.
Monday through Friday, man, I'm here.
Broaden your knowledge of platform features and resources available
9 to 4 to infinity, man. I'm out here,
navigate
man.
schwab.com, Thinkorswim, and mobile-based platforms.
And if you don't know, boy, I'm telling y'all, I mess with Moo Moo. I don't care. You can trade whatever you want to trade on. I trade with Moo Moo. The best broker I mess with, for real. Like,
Head over to
come on.
schwab.com/coaching
Come on, family.
and start learning today.
Come on, family. Like, I mess with Moo Moo. Like, you literally, whoever's portfolio you want, we get to it. You like Trump, get his portfolio there. You like Nancy Pelosi, get that portfolio there. You like Warren Buffett, get that portfolio. You know what I'm saying? Clean yourself up, dust yourself off. Kings and queens. Zero commission. I like Robinhood. I like Weeble too. Let's get to it. We get into it every single day. Frost is so happy all the time. Yeah. Because we got advanced option tools. We talking about over there. You know what I'm talking about? All the information you want. Research. You got your market data. You get me. 24/7 news. Like, come on. This is why I mess with Move, man. I mess with Move. And I trade on TradingView so I can see everything.
Live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Chicago headquarters. Here's what we have coming up in today's show for you. In our 360 Spotlight, the CEO of Arrived will be joining us to talk about their latest funding round and the company's new platform. It's been called the stock market for real estate. It allows people to buy and sell shares of homes across the U.S., and it has investors that include Jeff Bezos and Mark Benioff. Today's disruptor is Alphabet after Berkshire Hathaway revealed it has a $4.3 billion stake in the company, which is now Berkshire's 10th largest equity holding. And then in our 360 round, we're going to take a closer look at the EV sector, following reports that Tesla will be requiring suppliers to exclude China-made parts for its U.S. cars. Before we get to all of that, let's take a look at how the markets are faring as we kick off this Monday morning. The S&P trading down a bit, about 0.1% right now.
Yeah.
533. On the Nasdaq, we're just below.
I want to see it come up before a retest, but before that,
for the Dow Jones,
we gotta
trading
get this
down about
retest right here.
right
That
now,
they look like they're trying to do.
48.16.
Right here.
The Russell 2000, the laggard, so far down a third of a percent at 2,379.61. On the 10-year, we're down a third of a percent, but still high at 413. The dollar trading at 99.36. That's up slightly on the day. Gold trading down 0.7, 4,066 a troy ounce right now. Crude oil still under that $60 a barrel mark this morning, and Bitcoin all the way down to 93,980. That's 0.4 lower as we take a look at those Bitcoin prices heavily under pressure. I do want to welcome in our first guest, Alex Coffey, co-host of Next Gen Investing and our senior equity contributor here on Schwab Network, joining us as usual to talk about one of the movers we're seeing this morning. We're talking about Micron today. You know, a nice positive move to the upside as we're seeing some of these other hardware names under pressure today.
Yeah, best three words in finance for investors in Micron today, all-time highs. So pull back a little bit off of those, but whenever you can say those words, it's a good day. One of the things that stuck out to me, a price target adjustment from Rosenblatt. Kevin Cassidy moving from 250 to 300. Marley keeps the buy rating on the shares. Talks about DRAM demand accelerating, not only due to AI accelerator needs, but also AI models being used at the network edge. So think PCs, think smartphones. Rosenblatt, which is increasing its estimate based on DRAM and NAND prices moving up at a faster pace, continues recommending Micron shares while the industry DRAM and NAND flash supply growth is constrained. So not super positive on some of the other names in the space, but loves Micron. I think that's always interesting when you see that, very specifically spelled out like that. 300 seems like a very, high price target, new, handle. It would be a big round number, but not a street high. Even just in the last couple days, I see Morgan Stanley's Joe Moore was at 325. I see a 311 from another analyst, a couple other 300. So analysts in general, 87.5% of them have a buy rate.
Yeah, and Micron's been viewed pretty favorably, like you said, but not a street high, but an all-time high for Micron, which is great for them. Interestingly, sort of juxtaposed against this Morgan Stanley series of downgrades we saw this morning, double downgrades for Dell, HP, HPE, these hardware names, they're saying going to come under some extreme pressure. Do you think we're going to see some more adjustments to names like Micron sort of on the heels of that?
Well, maybe. Like I said, the analyst that I saw from Morgan Stanley that covers Micron still has overweight at 325. So perhaps similar to what we're hearing from Rosenblatt, there are areas of that, kind of hardware-centric market that aren't as positive and rosy looking as some of these big AI winners.
Yeah, certainly. But Alex, thanks for being with us to talk Micron all-time high is always newsworthy. I do want to move more broadly, though.
Couldn't even do it,
some
right?
Insights that are moving markets right now. Welcome in our next guest joining us, Ed Siddell, CEO and Chief Investment Officer at BGSI Financial. Ed, happy Monday morning to you. Thanks for being with us. We are coming off of a choppy week in the markets and starting with another sea of red, not heavily under pressure today, but I'd love to just get your thoughts on the action that we've been seeing lately.
Yeah, absolutely. Happy Monday. Thanks for having me back. We've been expecting a pullback this year, obviously with all the gains that we've had since the big downturn in April. It's just natural to have a pullback. Especially a lot of fear with AI being overvalued. I don't think it's as overvalued as everyone really thinks that it is. And as soon as earnings really start coming out this week, going further, we believe that we're going to see a Santa rally towards the end of the year. So we're pretty positive and still bullish this year.
All right, so you're seeing a Santa rally. You're still bullish through the end of the year. What is giving you that confidence when I am starting to hear more that there is more caution from investors, especially as we head into the beginning of 26?
Sure. really, you have to look at what we're seeing as far as a strategy for the administration. This first year was all about foreign policy. Now the move is really towards the domestic policy and affordability. So the current administration, what we're seeing is they've been floating different ideas as far as housing affordability, a 50-year mortgage. I don't agree with that, but at least they're talking and having discussions about the portability of interest rates, et cetera. But the big mover that we see going forward, not just interest rates, but it's really the reduction of tariffs. I think the market has been expecting this. We're already starting to see it on some commodities as of late, like bananas and coffee going forward. So with the midterms coming up, I think that this is going to be a really big focus going forward all the way through 2026. So in the near term, between now and the midterm elections, we're very positive on both the economy as well as the markets.
So in the markets, you mentioned AI in your first answer and about earnings hits. Once we start to see some of these AI earnings, more of them come out, and then we go into the next quarter of earnings, what specific catalysts are you watching for, and what flags are you looking for here to signal potential moves either to the up or downside?
Well, we just believe that it's going to be steady. NVIDIA reports their earnings after the bell on Wednesday. The earnings are going to be positive. Really, it's going to be their forecast going forward. So that is going to be the red flag. If their forecast isn't positive or positive to the point where investors are expecting what they're expecting, then we could probably see a little bit of a pullback. But really, if you look at all the balance sheets of these companies, they're way stronger than they were as compared to the tech bubble. So it's a completely different scenario. And the reason I bring that up is that has been the comparison that we've heard over the last 30, 60, 90 days. And I think it is a little bit different. Now, if we continue to see overvaluation, balance sheets out of whack, then we could see some issues. But again, in the near term, between now and the next 12 months, again, we're seeing a lot of movement to the upside on AI and technology as a whole.
The more it gives you the freedom to immerse fully in your craft.
You said overvaluation and you brought up the AI bubble. So I have to ask, do you think that these companies are in fact overvalued right now, or is that just a perception that they're overvalued? And also, how do you separate the hype from the fundamentals right now?
I think it really is perception. And again, that's why we started seeing profit taking, and then that fear factor really kicked in last week. So the markets went down more than probably what people expected. And I think it's not over yet. We're going to continue to see some volatility, again, until these earnings come out. The fundamentals, really, these companies, the balance sheets are strong. They're funding a lot of their growth through not just debt, but cash on hand and cash flow as well. And that's really a big positive sign. If you have the ability to help cover the expansion through cash flow, that's a sign of strength. So that's really what we're looking at. As far as the negativity, as far as the tech bubble goes, really, it becomes a self-fulfilling prophecy. Perception becomes reality. I just don't see that happening, over the next 12 months.
And so in that space, outside of the tech space, are there areas that you like? Where do you see opportunity right now?
Yeah. Love energy, right, as it relates to tech and AI, because you have to be able to run the AI. So that's number one. Excuse me. We really like small caps. As rates continue to go down, you have a lot of these companies that had this debt service that they were struggling with, so they had to lay off people. You've got other companies that were really small mid caps that maybe wanted to expand but didn't want to afford the debt service. So as rates get a little bit lower, it gives them the ability to grow and expand. And I think that's really going to spur on the job market. One of the things that we've noticed over the last couple of years is these job numbers are just undependable. And so really, we really have to look at the growth of the economy as it relates to revenues and earnings for these small and mid caps. I think that's going to be the main driver going forward.
And so with the small cap space, you're not the first person that's mentioned this, but they've been, under pressure quite a bit over the last couple of years, and they're also so sensitive to the rates. We saw even with this last rate cut that the Russell did not perform how it was expected, and we don't have a guarantee on December. I think we're less than a coin flip now in terms of that being a live meeting and what the expectations are. What gives you the confidence that we're going to get that rebound, just that eventually eventually those rates are going to come, even though the cuts may come, even though they may not come in December?
That's exactly correct. It may not happen in December, but going into next year, they have to go down. Again, not just for the economy, but for our own national debt. We're at $38 trillion. We can't afford as a country to cover that debt service at the current interest rates. From Treasury Secretary after Treasury Secretary for numerous administrations, we never refinance that debt longer than short term. So we've got to get those rates down so that we can refinance it out a little bit later or a little bit longer. So that way, it's already surpassing our defense budget. So as a whole, as a country, we have to get rates down.
So much for being with us today. We really appreciate you being with us to talk broadly about some of this action that we're seeing and also expectations for the rest of the year, predicting a Santa rally. We'll see if that holds for us. Ed Siddell, EGSI Financial. And we've got plenty more to come here on Trading 360. Next, we've got the big three for you. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will join us, as always, to take us through the technicals. Scott Bauer will be here to take us through his trades for Palantir, Palo Alto Networks, and Alibaba. That's next on Trading 360 on Schwab Network.
Floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me, too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, as always, here to take us through the trades. Today is Scott Bauer. Scott, great to have you with us today. Thanks for being with us on this Monday morning. If we could start with a big picture thought on market performance recently, I'd love to get your take on this choppiness that we've been seeing.
Yeah, choppiness, obviously a little bit of nervousness. I was looking through some stats showing that up until November, when we've had a year that we've had with X% gains in the S&P, when November starts off like this the first couple weeks, then the average gain for the last couple weeks and then December into the end of the year is almost 2% in the S&P. So I guess we can hold our hat on that, but there's really a lot of uncertainty here. But I would say that with all of the uncertainty that is out here, we're not really seeing the VIX go to levels that are showing much concern for nicely. That's something I think that we have to keep in mind.
All right, so let's talk about your first pick here. Palantir, a company that the street's pretty bullish on, but has been under some serious pressure. I mean, just in the last week, down more than 11%. What's your play here and why Palantir?
Sure. Is it a bubble? Is it just rotation? Nobody really knows, but I am looking for a nice bounce here, even though Palantir has dipped through the 50-day moving average and is down below it. So I want to give this a little time. So I'm going out to December expiration, and I'm going to buy the 185-200 call spread, pay about $3 for that. Again, that's my risk to this. If it doesn't bounce back, okay, maybe I just take a little bit of a loss on this. But I really think that once we get through this kind of period of unknown right here, you're going to see stocks that, like a Palantir, that have really taken it hard over the last week or two. I think they're going to bounce back pretty quickly.
All right, Rick, so when we take a look at the technicals here and looking for a longer-term bounce off of some of these lows that we're starting to look at Palantir, what are the technicals showing us?
Yes, a bit of a range that we've seen recently between roughly 169 to the downside and 187 to the upside. We broke above that level. We topped out at 207.52, but now we've retreated. Bit more of a question mark so far, but not any kind of convincing breach of that point so far. In terms of the strike prices that we were just discussing, I had my eye on pretty similar levels here. 187 represented the highs from our range. If you recall, that's about 185 here to 200 represents filling the gap then. So that would be my interpretation of those areas of interest there. When we look at our moving averages, we can see that we are below our two shorter term 21-day and 63-day exponential moving averages in yellow and orange respectively. They're both starting to slope downward. They also are roughly in line with our trend line here that begins off of those highs. RSI, our measure of momentum, is moving lower. We've crossed below that 50 midline, and we are still within the boundaries of an accompanying downward sloping trend line on RSI as well. So a breakout above both those levels in tandem would give some bullish weight to any kind of potential breakout. Finally, our volume nodes come in here around the 180.
Look at Palantir, see what they're talking about. Everything is going back.
So those could be some further areas of interest or potential consolidation, but the bulls would really want to work through that volume and through those old range highs to take another crack at filling that gap again and hitting some new highs above 207.
Yeah, and right now trading right in between that range you were just mentioning in terms of the volume profile, right at 170.20 right now. Now, Scott, your next one here, is this an earnings play? Because it's Palo Alto Networks. I know that they're reporting on Wednesday. Walk us through your pick here, and are you bullish or bearish?
It is an earnings play. I am bullish, even though many of these stocks have really taken it on the chin, especially if they have not met guidance. So Palo Alto's had many recent upgrades ahead of earnings. The expectation is for a 14% year-over-year growth, which is fantastic. But like I just said, it is all going to come down to guidance. I am bullish here, and what I want to do is take advantage of this week's really expensive implied volatility. So I am buying what's called a diagonal call spread. I'm going to sell this week's 225 call. I'm going to buy next week's 210 call. I can pay somewhere between $3 and $3.50 to do that. That is my maximum that I have to lose in this position here. But I really think that especially given these recent upgrades going into this report here, I think we can expect a nice pop.
Take a look at the charts here for Palo Alto ahead of their earnings and some of this setup that we've seen, especially with this recent pullback in tech. What are you seeing?
Yes, a bit of a slowdown in this name here. We broke through this rather steep trend line in blue here. Then our best close came in at 221.38. So that was one area to keep in mind to the upside here. A shorter term white trend line here connecting these lows has been broken. But if you notice, these were our initial lows that we established after our trend line was broken. We tested them. We came quite close, but we did not break through them. That level near 197, 198 or so seem to be holding firm for now at least, but as always, earnings could be a major catalyst for change. So when we look at our moving averages, once again, we're below our two moving averages, our shorter term ones. Our 21-day lines up quite closely with that old low trend line from our symmetrical triangle type shape there. Our highs recently came in right around that 63-day EMA. So the 206 level and 211 and a half levels or so roughly, those could be further areas to watch to the upside. Momentum moving lower, heading into earnings, not too uncommon for momentum to get a little bit of a stagnation phase before the event risk situation. When we look at volume profile, our nodes come in right around here and right around here. These levels are about 198 or so, and roughly about 212, 213. Those could be other areas of interest to watch.
And again, trading right between that range that you just mentioned right now, 203.92 for Palo Alto Networks. And important to note, Palo Alto Networks underperforming the broader market on the year, only up about 5%. This last pick, though, Alibaba. Scott, walk us through Alibaba. They've got their earnings coming out a little bit later. Some big headlines out on them, though, recently, and they're trading higher on the day, more than 3% right now.
That's right. Some big headlines, and this one's kind of a contrarian viewpoint. So there's been lots of news here about significant strides in AI and payment systems. They have a new partnership with JP Morgan for a new payment network. I think this rally that we're seeing today, though, is a fade. And so what I'm doing is, this is a real quick trade. I'm buying next week's. So the November 28th, 155. 145.
Yo, good morning.
Probably pay at this point maybe even a little less than $3.
All this money, man.
Right
This is money
$3.
everywhere, right?
And I kind of liken this to last week. I talked about AMD and the same type of
Everything's
setup
just pulling
where
back so it can go
really,
higher.
really significant, fantastic news came out all at once. We saw a major pop. I was on the show, talked about buying just a quick put spread because I thought there was a little bit too much euphoria in that news. This is really the same type of setup I see here.
All right, so Rick, as we look at the technicals here for Alibaba, are you seeing a similar setup to some of this hype rally, headline rallies that we've been seeing?
There are some similarities, to be sure. The first things I noticed about this chart would be, in addition to our falling wedge type shape here that we have going across the highs and connecting these lows here, that gives us kind of the general boundaries of where things have been traveling here. Also, typically a more bullish shape in this case, but really it can go either way. We're still quite far away from any kind of bullish breakout. But what we can see, though, is that we had this area here that represented support, that 157 mark. We did have...
I don't know why they keep playing this song. You know how many times I've done took this off the list? Can't stand every anything.
Hang on above that level as our
I might take it off the list. They keep putting it back on my list.
Lower, 145 stands out potentially here. That was some old highs from this area here. That's about where we had a breakout point. Keeping track of gaps on an ADR like this can be a little more challenging here because of the just generally gappy nature of this type of product. But we can see with our moving averages here, we are right on the nose with our 63-day EMA that comes in around 158.50. Our 21-day EMA just above is around 165. Then beyond that, we have our small gap here near about 174. So finally, when we look at our volume profile and standard deviation channels, our volume profile study shows that we have a node right around 165, lining up very closely with our 63-day EMA. So that area stands out as potential resistance, an area the bulls would want to work their way through. More volume, much heavier down here, all the way near 130, a bit of a decline, but that's really the next notable area to watch out for by this measure.
Yeah, right now trading 158.79 so far this year. Alibaba up almost 90%. Rick, want to thank you for breaking down the technicals for us. That's Rick Ducat, our lead market technician, and Scott Bauer from Prosper Trading Academy for joining us for the Big Three from somewhere that looks a lot warmer than Chicago today. Rick and I feeling a little envy. Coming up next, we're going to spotlight Arrive. They've got a new platform that's like the stock market for real estate. We'll learn more about it with the CEO of the company next on Trading 360.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern. Only
Well, my
on
soup
Schwab
was in
Network.
there boiling, boy. My vegetable soup was in there on
Whether you're
fire.
an experienced investor
Like
or
it was
just
liquid
getting
fire
started,
in there.
Charles Schwab
In the
offers
pot.
a webcast
Boiling.
that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are.
Welcome back to Trading
Right
360. I'm Marley Caden, live in our Chicago headquarters. It's time to spotlight Arrived and the company's new platform for buying and selling shares of homes across the U.S. Joining us now to discuss more is Ryan Frazier, the CEO of Arrived. Ryan, thank you for being with us today. You know, a very exciting time. Can you tell us a little bit about the company and also
See if we can hold
this
this
new
right, this
platform,
area right here.
Arrived Secondary Market?
Yeah, hello, and thanks for having me
filling
on.
up the gas.
So
for
really
hire.
what we're trying to do with Arrived is
So at some point they're
finally
trying to
bring
find
real
somewhere to
estate
bounce
online.
like this.
I think it's
Out of
surprising
nowhere,
to us
just trying to bounce.
just how much friction
Something-
there is in the
somebody's
process
buying.
of accessing real estate and
Just out of
investing.
nowhere.
It's a $50 trillion asset class. It impacts all of our lives.
You know what I'm
And so
saying?
with
The
Arrived, we've really created a
support and
marketplace where
resistance is
anyone
like-
can come on and buy and sell
it's
shares
like an area,
of
it's a general
individual
area.
rental properties
I like to be
starting from
precise,
just
though.
$100.
Like, look
And
at
it's
these
open to
cameras.
accredited or non-accredited
Don't be so
investors. Really,
precise, though.
anyone can participate,
Literally,
buy
it's the
shares
same
of
thing.
properties,
It's the same area.
access property income,
Double support.
and any property appreciation as values grow.
And so real estate has always been one of the hardest markets to really be a part of without some sort of substantial amount of wealth to participate in.
See this way?
You're saying at a $100
Double
threshold,
support.
you can now participate in buying shares of these rental platforms. Do you feel that this is solving a problem both in the housing market, but also is it transformational for the real estate space to allow people without an excess of wealth to be able to participate and enter and exit quickly?
Yeah, I really think that it is. Today, I think about 60% of retail investors have exposure to public markets, whereas only 7% have access to private real estate investments. And so we really think that gap between how many people are able to access
And private potential
real estate
breakout.
investments
I see.
compared to public markets is what we're trying to
First target,
bridge.
second target.
And so with Arrived, anyone can invest starting from just $100. But the other big barriers that keep people out is just the expertise or time required to actually know where across the country to look and have the time available to manage these properties. And so Arrive really takes care of all of that process. We hand select every property that ends up IPOing, if you will, on the Arrive platform. And then after that point, we are the asset manager for all of the assets as well. So it really is just a passive investment for investors that you choose to participate and buy shares of properties.
And so you mentioned anyone can invest, but you just completed a funding round for $27 million, and you've got more than anyone in this group, some big names here. Can you tell us who some of the notable investors are, and also what level of confidence the backing of some of these big names gives to the future of fractional real estate?
What? That changes the game. Info. Breaking news. Info allows investors to buy and sell shares of rental property. What?
We have some incredible venture backers like Nia.
What are they talking about?
Who was
Hey,
founded
Swabington.
by Ali Partovi, also the co-founder of
Swabington
Code.org.
and Sheldron
His
Frost.
brother
A
Hadi
perfect
Partovi,
combo.
who has brought really coding or programming education to millions of people. We also have Forerunner Ventures, Bezos Expeditions, the investment group behind Jeff Bezos, and then Mark Benioff through Time Ventures, and Spencer Raskoff through his group 75 and Sunny. So we have some incredible investors, really supporting the business and supporting this vision, which is really exciting.
So with this new support and this new capital round that you just raised, how do you plan to deploy that capital?
Yeah, I think at this point, it's really just about accelerating our product roadmap and continuing to grow the marketplace. We launched our secondary trading marketplace, and in the first 3 weeks, we saw 57,000 buy and sell orders among investors on the marketplace. We now have over 500 properties across 65 cities where investors can participate. And so for us, it's really about expanding this marketplace so that people can invest across more cities, across more properties, and really build and manage their own personal real estate portfolio.
So in the secondary market, the traction that you just mentioned, 57,000 orders in 3 weeks. What are some of the early behaviors or trends that are standing out to you in that time?
Yeah, I think investors are looking to maybe diversify into certain areas of the country that maybe they didn't have exposure to previously, maybe outside of their hometown. We also see that investors are really looking for higher dividend yields in this current environment, especially with high yield savings and treasury rates starting to trend down. I think investors are very yield conscious. And so, they're willing to invest into and potentially pay a premium to access a higher dividend yield and then sort of hold for the long term for that potential appreciation on property values or leveraged appreciation if it's a leveraged property.
And we've seen liquidity over time become sort of the Achilles heel, for a lack of a better term, for real estate. How are you going to ensure that you have a healthy supply of buyers and sellers as you scale?
Yeah, so I think within real estate as an asset class, it's really one where it's best to think about it as a long-term
who caught that
investment.
bottom right
so
there?
even with the Arrive Marketplace, where we now
Who's
have
the
this
coldest
great access
with
to
Frost?
liquidity,
You know what I'm
that's
talking about?
liquidity where
Who's the coldest like
investors
Frost?
can buy and sell shares and get
You know what I'm
liquidity
talking
without
about? Who's the
actually
coldest
selling
like
the
Frost?
property, on the MLS.
Can we get a
and
breakout?
paying fees to brokers, going
Can we
through
get
the
a
title and
breakout?
escrow process and that months-long process.
You know what I'm talking
Now,
about?
that
Who
can
the
be
coldest
just
like
a few
Frost?
seconds or minutes.
Nobody.
But even with that greater liquidity, I think it's really an asset class that's best.
Don't
when
you
think
forget to
about it
like,
over
follow,
the very long
subscribe,
term.
and
so
share it to
investors
whoever.
who are adding real estate to their
Tell them.
portfolio, I think,
And
are
Frost
thinking
got 'em.
about it
We
in
heard.
that way. It
We
doesn't
heard from you.
necessarily make it a trading asset class. I think most of the value is through that great income production alongside property value growth, and then some of the tax benefits of being able to use the depreciation of the asset to offset the rental income coming from the property.
Okay, so we were talking about this Arrive secondary market in its first 3 weeks. Arrived itself, as I'm looking at some of your specs, more than 850,000 investors. You've got more than $300 million invested. How does the secondary market change the economics of your business on the whole?
Yeah, I think the secondary market really just gives more flexibility to investors. So now they can decide how much they want to allocate to real estate, and they have comfort that if they do want to get that liquidity and get some of that money back out earlier, then they can.
And with this change, do you view this as a disruptor in any way? What does this mean for the traditional landlord or a REIT or even a real estate agent, as this could be potentially described as a tradable asset class? Do you view it as a disruptor? Is there anyone who will be disrupted by this?
Yeah, I think that, for a lot of people, they have looked at things like publicly traded REITs or other real estate index funds. But I think one of the challenges with that as an asset class is that it's not that correlated to the underlying real estate prices and performance of the real estate. And so investors who are participating in real estate as an asset class through public funds are maybe seeing that they're not that hedged against real estate prices, and it has very high correlation to public markets. Whereas with Arrive, where you're actually investing directly into, the underlying real estate asset class, it moves more in performance with real estate prices, with the income that those properties are generating. And so it gives investors, a better mechanism to actually stay hedged to the real estate underlying, these potential public funds. And so we kind of think about it as, in some ways, unbundling the REIT instead of just a blind pool fund that investors are maybe buying into. They can actually see every single property on the Arrive marketplace. They can decide which properties they want to be part of their portfolio, which areas of the country, and then, their performance tracks alongside that direct real estate.
And Ryan, looking to the future of Arrive, do you eventually expect or hope for institutions and asset managers to eventually use Arrive the way we are seeing retail investors using it today?
Yeah, I think that you could see that. One of the powerful pieces of Arrived is that, you can build a portfolio of individual assets across the country. And so, that creates an opportunity if you want to, let's say, over-index into a certain area of the country, or if you want to buy into, more real estate at a single point in time, or create a concentrated position somewhere, you have that opportunity to do so. There's also an opportunity, within our secondary marketplace to maybe buy into operating properties or be a liquidity provider within the marketplace.
Very exciting in the times of real estate investing. Ryan, thank you for being with us to highlight some of what your company's doing. That's Ryan Fraser, the CEO of Arrived. And coming up, we've got the disruptors next. We'll take a look at Alphabet after Berkshire Hathaway disclosed its new stake in the company. George Tillis will break it all down for us and then give us an example.
Look, I'm trying to be bullish right here, y'all. They got stuck in this little wedge. Look, I'm trying to be bullish, though. Look at that. Look at that. I'm trying to see if they'll break out. Oh, they trying to push that. Look at the MACD. If one of these bars are green,
connected to the markets with Schwab Network. Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network,
available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles
they
Schwab
might have found
offers
the
a
bottom
webcast
here.
that's right for you. Do you like using
might
charts
have found the
when
bottom.
analyzing your stocks?
I
Our
only
technical
don't
analysis
fall.
webcast series breaks down
This stock don't
different
feel like
charting
18
techniques like trend
$18.
analysis, price patterns, moving averages, oscillators, and much more.
$25.
Best of all, you can ask questions
Might
directly
be done
to an
falling
education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcome in Nicole Patalides, host of Opening Bell and the Watch List, joining us now. Good morning to Nicole. Happy Monday. We're 2 hours into the day. I'm looking, we've seen the NASDAQ turn positive, but you're still a bit more red than we like to start the week with. What's caught your eye so far in terms of trading action today?
I think the fact that we have so much that we're waiting for, there's so much anticipation this week. We've already had back and forth action this morning. We saw a lot of that last week where the S&P and the Dow squeezed out gains and the NASDAQ and the Russell lost a bit. But today here, as we look at the VIX, the fear index is around 2021. That is an elevated level. The VIX really shows the volatility that we're expecting, and it's no surprise because we'll be getting a delayed jobs report on Thursday. This is 7 weeks late after a 43-day shutdown. We'll be getting a slew of earnings as well on these retailers, and NVIDIA is due out on Wednesday, and Walmart could be very telling too. So I feel like we're in this big anticipation mode. The other big story too, I mean, in addition to whether AI is overvaluated, that one, but it's really also about whether or not the Fed will cut in December, and that is an ongoing conversation, and it does move markets, and it does move rates, and it does move gold. Today, gold's down $24. The 10-year bond yield's at 4.14, and the likelihood of a cut is less than 50% now for December. So those are some of the big stories. I would say Google has been the bright spot here on Wall Street after it was revealed and gets the Buffett bump. It was revealed that Berkshire Hathaway in the third quarter report does have over $4 billion stake, a new stake in Alphabet Google, and so that was some good news. We also saw Tesla.
Hey, this is bullish right here.
Stifel now putting a new price target there of 508. Gap got an upgrade, and Dell got a double downgrade.
Bullish.
Yes, certainly. And we'll talk to George Tillis shortly about Google and its move to the upside on that Berkshire Hathaway news. But I want to talk about the weight loss drug world, this ongoing conversation about the prices of drugs here, particularly these GLP-1s here in the U.S. And now Novo Nordisk announcing that they are cutting their prices yet again to try to stay competitive. You know, what's the latest here?
What I couldn't believe is I was looking at the KFF health tracking poll and how many people are actually using this. And also 1 in 8 adults say that they are using GLP-1s. It sounds like an enormous amount of people are on this. The Trump administration has been working closely with Eli Lilly and Novo Nordisk and really is opening access to Medicare and Medicaid in exchange for lower prices. And Novo has come out and really showed us the lower prices for Wegovy and for Ozempic. In fact, the first 2 months of dosing, which expires in March, will be at $199 for self-paying clients. It's $349 a month, generally down from $499, and these are for the lower doses. And if you want to get the 2 milligram dose of the Ozempic, that'll be $499. But again, for parties who are paying for themselves. But now available at Costco, GoodRx, Weight Watchers, 70,000 retail stores. But for cash-paying clients, they'll be able to at least have access to this as it battles diabetes, improves cardiovascular health, and such. So it is nice that it's been one of the administration's big goals is to lower prices for these medical conditions, and GLP-1s obviously took on the world by storm. And when the oral tablet comes on, these are for the injectables, when that comes on, it'll be much of the same and in the same price range. Novo Nordisk stock was $112 52 weeks ago. It is now around $48, so it really shows you it's down over 50% in 1 year. But this certainly makes this more accessible to folks.
Yes, certainly does. You know, and they did see a drop to the downside when they made this announcement. They've since recovered up about 1% right now. But you know, to talk about $349 as the monthly cost when it was, I think, north of $1,600 a couple months ago. You know, we are watching these prices come down considerably as everybody wants to try to have a share in this marketplace where you said 1 in 8 adults is using these medications. So Nicole, thanks for walking us through that one. That's Nicole Petalides. And now it's time for the disruptors. George Tillis, our senior markets correspondent, joining us today to talk about a company Nicole just mentioned, Alphabet. Of course, shares rose after Berkshire Hathaway disclosed that they have a new nearly $5 billion stake in the company. I think it's its 10th largest equity holding now with that disclosure. You know, George, walk us through the latest here.
Well, I think this news is meaningful for shareholders of Google, considering, of course, looking at Berkshire's stake that they disclosed as of the end of September, approximately $4.9 billion then, as reported, which is about 1.6% of their equity portfolio. Now, this is close to their 10th largest holding in their core assets for equity. But nonetheless, I think it gives you an idea that, perhaps if you consider the aspects of artificial intelligence, companies like OpenAI, you have to consider that all of these technologies use search. And if you look at the approximation of search market share that Google has in the United States, some estimates have it close to 85%. Globally, it's over 90%, considering Google and YouTube are the top two global search engines. And if you use artificial intelligence, which I do, you'll notice that a lot of the research results index the results from search, which means that Google is still participating in the queries that are going on with AI. And with that said, the monopoly-like position that Google has in search really represents opportunities that companies like Berkshire Hathaway like. see why they took a stake in the company, considering they essentially have a de facto monopoly still on search. And I think the aspects of some of the antitrust issues Google has faced in the past, or Alphabet has faced, are not necessarily meaningful, at least in the context of the longer-term growth trajectory of the business.
So, George, we want to try to take a look at an example trade here. I'm looking at shares are 4.5% higher just today. We're up 72% in the last 6 months. How would you look at trading this for example purposes?
Yeah, so the price action in the name Google is quite good. If you just look at it on a year-to-date basis, or in last year, it's up about 64%. In context, too, if you look at valuation, it's only about 8 or 9% higher in terms of value than its 5-year average, but it's generating about 23% more profit growth. So, with that said, there's a valuation element here, but I think the context of the market is meaningful as well.
Hey, good morning,
I don't necessarily know if we're going to be breaking out of a trading range to the downside. With the VIX over 20, what I'm going to do is I'm going to sell credit premium in this case. So what I'm going to do is I'm going to structure a short put where I'm going to basically sell cash secured puts for Google. I'm going to go out to December monthlies, about 32 days expiration. And I'm basically going to sell right around the 20-day moving average, which is the approximate strike price of 275. I'm going to sell the 275 put for December.
Business
you can harvest about $6 a share or $600 a contract in credit. So in essence, if you do get assigned the shares at 275, your break even is at 269. That's about 6.5% decline before break even. That's the underlying price. That gives you some flexibility. The yield to strike price at $6 relative to the strike is around 2.3%, and the delta that I'm selling here is around 30. So that implies about 7% probability of profits between now and expiration. So it gives us flexibility. It's not a moonshot trade. It's not an unlimited profit trade. You're capped at profitability at $6. But it allows you to participate if the stock does move higher or stays where it's at, or even falls closer towards that 275 area.
George, we appreciate you being with us to talk Alphabet today and for that example
I'm doing
trade
this to get my
as well.
kids.
Thanks to get that George Tillis.
I'm doing this to play
Coming up
Cold.
next in our 360 round,
What don't y'all understand? That this is my job.
Requiring its suppliers to exclude all components made in China
That's my
for
screen
cars
name.
in the U.S. We'll dive into that and the sector itself next.
I'm at 30%, bro. I'm the coldest, bro. I got my own radio station, my own everything, my own tools.
Trading at Schwab is powered by
the
Ameritrade,
coldest,
unlocking the power of
I've been
Thinkorswim,
Frost all my life.
the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track
you get me. I wake up on 2700. Get me. I play chess. I literally do everything.
And I'm Jenny Horn.
Right now, I'm getting this money and getting them their money at the same time. I'm about to get money on 2K. And I literally just get paid doing whatever I want to do. You can get paid too if you mess with me.
Forward-looking market coverage every trading day.
This is a make or break level for this stock.
But you gotta do your own research. Oh yeah. You know what I'm saying? You're watching the markets 24/7. I go live every single day watching the markets from 9 to 4. You look at crypto, you look at gold, you look at platinum, you look at Jordan. If y'all want to sell, about Jordan. Look at whatever you want to do. Me, I'm gonna try to get kids. Clothes on my kids' back.
He passed away.
You
The
get
torch
me?
has been passed to me,
Pay them bills.
and my advisor Jennifer,
That's what I'm gonna do.
she was with me with the journey.
That's what I'm gonna
Helping
do.
with
I got
the
1
estate
minute left from this.
My two grandchildren, planning for their college educations. Someday it'll be their turn.
You hear him, Drew?
This
He
is
said,
Fast
stand on your
Market,
word.
built for traders who want more
Like he
than
don't even
just
know who
headlines.
Frost is. Like he ain't never heard the legend of a Sheldron Frost.
Risk management,
Look, he ain't never heard the legend of a Sheldron Frost chat.
to earnings, to volatility.
That's why I have to keep reminding y'all that I'm still the coldest every day. Like this ain't no different from me being 5 years old.
We deliver what active traders need to stay ahead.
Bro, I had retired from Call of Duty. Right now, I swear to God, I told this same shit. I retired from Call of Duty. I retired my damn player from 2K not last year but the year before. Because literally he was just the fucking best ever.
Thanks for
met
taking the time to be
Joe
with us.
Dirt
You know, I'd love to
and
talk more
Chris
broadly about this
leading
sector.
in every single category on the fucking 2K stack.
About Tesla
And told them before they even did it.
its suppliers to not
Next thing you know,
use
this year
any,
I'm in their crew.
China-based parts
So
or
you go figure.
China-created parts for any of its U.S. cars.
They're gonna wreck. Like I know Rex.
Well, I think it's part of a
Bro,
broader trend
when
that
I
we're
first
seeing
met
with
RL
American
Chris,
automakers,
when I first
really,
met Joe Dirt,
doubling
I don't know if
down
you
on
know that.
American
Good,
supply
no, we
chains
didn't
in
think
response to things
I
like
told
tariffs,
I
but
told these
also
guys that I was
broader
the coder,
concerns
and my
about
build been carrying people
national
forever.
security,
We
cybersecurity,
did purple for like
data
10
privacy as
months
well.
straight. Like
I think
literally the
we've
whole year.
seen in other sectors.
I'm a streamer. I literally do this for a living.
Spyware hidden in Chinese electronics. And,
I tell them I believe in every category. I don't even know you. I say I believe in every category. And then why I go out there and do it? Yeah, why? Yeah. I know it. I don't. Look. I don't know them. I'm supposed to know they trade. I said I'm gonna go out there and carry y'all. I don't even know. I said I'm gonna go out there and carry y'all. I'm gonna say I'm gonna lead in every category. I said bet money I do it. They said look. Yeah, they said I'm doing my skins.
Automakers.
Them niggas said I don't know you or whatever the fuck. I came out there and did that shit.
Simply from getting better at manufacturing. So I think a really good
Leading
example
every single
is
stat. Field goal percentage, free throws, less fouls, less
$30,000.
What kind of shit is
Compare
that?
to the average purchase price of a combustion-powered car of about $50,000.
I said, bro, y'all dudes is really trash. I don't even play this game, so the first game might be a little off, but I know how to play it.
With financing terms.
You got to hear the real. That all this is the real. You get the good and the bad on Frost.
$50 per month mark. Cars like the Mustang Mach-E from Ford, the Prologue.
I'm the type to do that. Miss one and hit the next 10.
And so you mentioned those leases. We've seen some really aggressive lease deals from some of those names you mentioned, Ford, Nissan, Honda. How sustainable do you think that these discounts are? And also, what does it tell us about consumer
I want to see
appetite?
what my capture card is, though. For real.
Well, look, certainly I think we're seeing Americans vote with their wallets,
Okay,
and Bloomberg just came out with a report that EV sales in 2025 are expected to be even higher than they were in 2024. And this is in response to the value that automakers are offering, not only with MSRP, but I think we're kind of entering a second phase now in the EV industry.
Look at this
where
market being bullish, y'all. Look at this
consumers
breakout.
are also considering
See how Frost caught the bottom right here with this technical analysis showing you that this was a breakout right here?
The biggest
This is
thing
a trend
about owning
reversal.
a car is filling up the car.
We got
Whether
AI?
that's with gasoline or whether that's with electricity if you're driving an EV. And automakers are partnering actually with utilities and energy companies
I can
across
get a
the
bunch of these
country
in here,
to offer some really interesting discounts on at-home charging.
And then he
So
hops
for
in the theater,
example,
right? Like, why he
Texas
joined
automakers
and then hops in the
Ford
theater?
have
Like,
partnered with
why he do
TSU
that?
Energy, which is
That's
the
your
largest
crew.
energy company in Texas, to offer 100% free at-home charging, 18 hours a day, 365 days a year. In New York, automakers like BMW have partnered with Con Edison, which is the utility that serves the greater New York
Yeah,
City area.
they got me in
to
my
offer
they got me in
customers
that
an
crew,
average
but
of
they didn't
about
want to support me.
$500
So
cash back per year,
you know,
simply for
that's what happened.
scheduling their car to charge during off-peak hours. I think one of the
They
really
begged me
interesting
to
things
play,
now
so I
is we're
said,
seeing
bro, I'll play with
automakers
y'all, but they
offer
look out for me. I'm looking out for y'all
vehicle-to-grid
already.
capability. So
They
actually the
said,
ability
but I'm
to
talking about. I
export
said,
power
bro,
from your
what?
EV
I
and sell it
can't
back
be
to the
serious.
grid. So automakers like
I know y'all for
Nissan
10
are doing this
years.
in California.
12 years.
They've partnered with
Y'all
Pacific
caddy
Gas and
for real.
Electric, the utility there, to offer consumers $4,500 cash. Just
I'm
for
putting people
hooking
on
up
to
their
life
EV
changing
battery to
money,
the grid.
bro. Life changing wealth.
And they can
Wealth.
make over $2,000
You know, they can't even
a
spell
year
that
selling
word.
some of that electricity back to the power grid. So this is
They
really
want to have an argument
helping to
over
reduce
it.
the total cost of ownership of an EV beyond just the super price.
So we have those incentives there, but one risk that has been brought up multiple times as we continue this AI conversation and this infrastructure data center build out here is that that's going to drive electricity prices higher. So if and when that happens, how does that affect the economics of owning an EV?
I afford this.
Yeah, absolutely. I think AI demand and data
Watch how I
center
do this.
demand
Watch this.
is definitely driving up electricity prices. We're seeing that
And
across
I'm very
the country. Now, that does make the incentive programs
I'm very
that
Bert
some utilities
Cat.
are offering for EV charging even more enticing, and I think even more important. Again, if you can get all of your EV charging done at home for free, you don't really have to worry about the increase in power prices. I think what's really interesting as well is we are seeing some automakers and their customers kind of turn this on its head, though. And I just want to share an example out in California, where Nissan actually has partnered with the utility Silicon Valley Power, and they're actually having their
They better
electric
get mad at me.
vehicles
All right, let me be.
export power back to power data centers. And so Nissan EV drivers are actually engaging in this energy market arbitrage, taking advantage of these high power prices, selling power back to the grid or to data centers when they need it, when electricity is expensive, and actually charging and refilling their EV batteries using free rooftop solar power that they generate at home. And so it is really interesting, actually, sort of seeing this spike in electricity prices actually turning into a real benefit for EV drivers who have got the vehicles and the equipment needed to turn this into a revenue generating opportunity.
And Joseph, given all of these moving pieces that we've talked about, some of the incentives, the expiration of some and other further incentives, also depending on what state you live in, some of this lease affordability, potential grid strain, electricity pricing off, what is your outlook for EV adoption over the next 12 to 18 months? And also, where does the U.S. stand in that race versus, China and Europe?
Well, certainly, I think we're going to start to see a little bit of a rebound from the repeal of the tax credit in Q3. I think we're seeing a little bit of a cooling off maybe in Q4 as consumers race to purchase or lease an EV before the tax credit was repealed. But we are expecting to see that recover in 2026. I think when you start thinking about some of the Chinese electric vehicles that are out in the market today, there's a few things that kind of come to mind. I think, as I mentioned before, the way that consumers are really kind of looking at more than just the sticker price, right, and kind of thinking about total cost of ownership. And certainly an advantage that American automakers like Ford and GM, Stellantis have is that they've engineered their EVs for the American power grid from day one.
I'm getting bumped through
These
and
vehicles
through.
are built to seamlessly just plug into the utility power grid, automatically optimized for the cheapest off-peak electricity, and in some cases can even generate money in vehicle-to-grid markets, as I mentioned. I think another thing that we're seeing is that brands like Ford and Nissan and GM, they've all built EVs that can actually serve as backup power for your home. And that's enormous value that goes beyond just the MSRP. It actually turns the vehicle into an asset, right? That precludes the need to purchase a separate backup power generator for the home, which can cost somewhere between $7,000 and $15,000 for the equipment and the install. And look, this is an area where American automakers are genuinely out in front, of their Chinese counterparts. And I think the last thing to just consider is that a lot of American automakers and Western automakers in general are really prioritizing things like safety, cybersecurity, battery longevity. These are all areas where consumers increasingly value trust and brand loyalty. And so, as I mentioned before, there are concerns certainly about sort of Chinese equipment, Chinese software, and it's not a concern necessarily that consumers are having about their American and European EV brands.
Joseph, we appreciate you joining us today.
Why do you have me looking so whack right now?
Adoption we're seeing here in America. That's Joseph Vallone, CEO of ChargeScape. Also want to thank all of you for joining us on Trading 360 today. I'm Marley Caden. You can download the free Schwab Network app available in the Apple App Store. And tune in 24/7 on SchwabNetwork.com. Fast Market with Diane Hall is coming up next. Stay with us.
I've been looking whack, bro. You make me mad.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It's noon Eastern here at the New York Stock Exchange, and trading activity has been choppy so far today. I'll give you a quick check on your scorecard as we reach the lunch hour. We've been watching the S&P 500 flip-flop from negative to positive. It is better right now by a little bit more than 0.1%. You got split action happening within the sectors. Communication services is leading the gains, followed by utilities and healthcare. On the flip side, you've got pressure on energy and financials, a little bit of pressure as well on information technology. Dow right now hugging the flat line, off by less than 0.1%. NASDAQ 100 better by about 1/3%. Small cap, Russell 2000 down by a little bit more than 0.25%. Here is the roadmap for today's show. We'll look at example option strategies for Boeing. Plus, the team from Lightfolio will be along with new sentiment data on Home Depot. A big week for retail this week. And Baidu is also on our radar today. Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts and veteran traders. You've got Tom White in our Chicago studio and Kevin Hinks joining us live from the CFO. As you know, we've got you covered from exchange to exchange and beyond. So we've got a slow start to the week, guys. It's going to rev up, though, with the return of the economic data from the government, along with a busy week for earnings, especially in the retail sector. But it's really this marquee name that we've got reported. I don't know if you guys have heard of this one. Oh, NVIDIA. All right, Tom, what's your take when you think about the week ahead?
Yeah, we're going to get a good look at, maybe some data that's going to be stale. You know, we've got the September jobs report coming out on Thursday. We get some housing numbers, some other delayed metrics as far as, delayed just due to the fact that the government shutdown just ended. But at the same time, it's going to be about earnings. We've got NVIDIA on Wednesday after the close. That's going to be massive because of the fact it's a major component within the three major indices, right? S&P 500, it's 7.5% of that index, right? The NASDAQ 100, it's 14% of that index, 2.5% of the Dow index. So if you don't think this is going to move markets, you better, check it because it's such a big component. So it's going to have some impact on what happens in the overall market, the tie-ins to the AI trade. Remember last week we had discussions about a potential bubble in AI. Is it taking place? Well, we've seen pullbacks in a lot of these names, but this is the picks and shovels of that AI trade and the infrastructure build out. What kind of demand are they going to see? I think one of the key things is the guidance moving forward, because I think that the demand is outstripping the supply. We know that, and that's going to happen for at least another year, maybe 2 years. But beyond that, what are they seeing?
Everything is so bullish right
we've
now.
heard from the big tech companies, the big hyperscalers, the amount of money that they've been putting up into buying these advanced AI chips. How much is AI or AMD dug into a little bit?
I'm looking for a rejection right here.
Their market share, which is over 80% at this point. And then on the flip side, you've got the consumer. How healthy is the consumer doing with weakening jobs data? Well, the little jobs data that we have. But that's going to be also on tap this week with earnings from Home Depot, Lowe's, Target. And
all right, this is still bullish, though.
Okay, great point there about like the read on the consumer that will get. Cap, what's your take when you think about the week ahead? And yes, to Tom's point, I mean, NVIDIA's the heavyweight of heavyweights here.
Well, at the end of the week, we're certainly going to be talking about NVIDIA's earnings and the effect it had on, you can look throughout the Thinkorswim platform, Diane, there's probably between 15 and 20 names that have elevated volatilities and therefore, expected one-day moves. Everything linked to NVIDIA in any way, shape, or form is more volatile and has elevated implied volatility. Now, that'll be Wednesday. That's what we'll talk about Wednesday through the rest of the week. Before that, I've referred to this as the Fed speaker correction. As you know, what caused it to turn? We finally got someone to come out and say something dumbish. Philip Jefferson, the vice chair, basically came out and said, listen, tariffs aren't inflationary. They're not an inflationary pressure on prices. The labor market is probably going to tick up slightly in terms of the unemployment rate, and he thinks rates are slightly restrictive. That opens up the door for an interest rate cut in December. And so it's back at least in the conversation. It was such a one-sided discussion that thank you, Philip Jefferson, for bringing the other side of that discussion to the forefront. Now, I think earnings this week, I think Tom's right. I think the economic data this week, most of it, and especially the employment data, why do I care about the September employment data that was supposed to come out October 3rd? Not sure I care too much about, Diane, right now. Give me the most current data you have, frankly, and let me trade off of that. I just don't know what it's going to do to anything. Now, the Fed minutes, that might do something that we'll get on Wednesday. Some of the economic data that we'll get. Hopefully, we'll get jobless claims. I think we will on Thursday. That'll be big as well. But it's still going to be NVIDIA. And by the way, I think it might be Walmart, too. That gives us a lot of information on the U.S. consumer. Remember, we didn't get retail sales, but we did get Bank of America consumer checkpoint that showed a strong U.S. consumer. So a lot of things going on. I think Friday at the close, Diane, we're going to be talking about NVIDIA's earnings for sure.
That would be interesting if we are still talking about that. And great point about Walmart, which comes on Thursday. Let's talk about another member of the Mag 7, the Buffett boost, if you will, here for Alphabet, Google. Those shares up more than 4.5% right now, hit an all-time high earlier in the session. This comes after the revelations that Warren Buffett took this multi-billion-dollar stake in the tech titan via Berkshire Hathaway. Tom, what's your take?
Well, let's clarify this. Warren Buffett didn't make this decision. A couple of potentially his portfolio managers did, but it kind of sets up the fact that they still have, basically some clarity on what's going on at Google Alphabet. You saw from last earnings event from Alphabet, they had, growth as far as cloud goes above 32%. The death of search isn't taking place. They've got more and more people using their Gemini AI engine for search, so they're not getting, pillaged on that front like a lot of people thought that ChatGPT and some of these others were going to take away some of their search business. So that's a positive, but $4.3 billion stake, while also selling over 40 million shares of Apple. Apple's still their biggest position out of their top 5. So you've got to take that into context. They still have 238 million shares after selling over 41 million shares over this past quarter. But I think it's just, the reaction in the stock kind of tells us a story that just reaffirming that Google Alphabet continues to, do well in this type of environment. Search business is up. And then you take a look at the cloud side of their business, which is growing faster than Microsoft Azure, growing faster than Amazon's AWS, which is the market or share leader within that space. So, this is really good for, shareholders in this company. And you're seeing it reflected with over 4.5% gains today.
Okay, maybe Buffett didn't make this decision directly, but the fingerprints are certainly there because he has talked in the past about missing out on this one. Kev, what's your take?
Yeah, listen, this whole industry has enormous respect for Warren Buffett and everything he's done at Berkshire Hathaway, but I think Tom's right. I think these are other members of Berkshire that are buying Google. But you're right, Diane, they did regret not buying it before. Charlie Munger talked about that openly, that they thought they had missed on Google Alphabet. So, the evolution of Berkshire Hathaway is pretty interesting. I think they're showing us what the next chapters post-Warren Buffett are going to be for Berkshire, and a lot more tech going in. But I think it's interesting also, kind of a Apple-Google Alphabet pairs trade going on, selling Apple, buying Google Alphabet. So I think they're broadening it out. I think it's not surprising. I'd be surprised if I wasn't surprised, right, by all this, because I think this was, Google Alphabet, we've been talking on this show for 2 years, how undervalued it was because of the market, because all of the litigation, all the investigations going on, all these things. But it was certainly a happy headline to see that Berkshire Hathaway is buying Google Alphabet.
Okay, let's talk about another member of the Mag 7 guys. So Amazon, you can buy just about anything online now, and Amazon is apparently adding Ford to its wheelhouse vehicles, that is. This also comes at the same time as it's eyeing a $12 billion bond sale, according to Bloomberg. This to power AI growth. Tom, what's your take when you think about all this? It feels like investors are trying to read the tea leaves on what this means.
Yeah, I think there might be some concern here as far as the debt raise or the $12 billion that they're trying to sell in bonds. But this comes after that Google Alphabet also had a recent release. Meta Platforms sold $30 billion of corporate bonds recently. Google Alphabet sold $25 billion of those bonds. All these companies that are doing this, they think it's a good environment to try to use this type of, capital raise, what you call it, when they've got massive amounts of cash on their balance sheets already. I believe that Amazon's capital expenditures rose, but they still have over $50 billion of cash in short-term equivalents on their balance sheet. So maybe they just think this is a good environment to raise capital as they build out their data centers, their AI infrastructure build out at this point. But then you throw in there Ford's going to start selling their car, only their certified cars, and not all the dealers have agreed to go along with this. But, then you start looking at the impact for other companies within the space. CarMax is down 2.5% today. Carvana is actually not taking a hit from this news either. Hyundai's already been selling their cars through Amazon since the end of last year. I'm not sure what type of impact that's had for Hyundai. We haven't gotten really any clarity on numbers there.
Just a
but
pullback,
definitely
y'all.
a positive for, I think,
Small
for the
pullback.
brand itself. Watch these capital raises. I think it's not a major concern because these companies that are actually raising capital are so well funded and have rock solid balance sheets, but could be a little curious if you want to look into it.
That's a good point, especially about the bond sale. But I do think it's wild that you can buy just about anything. I mean, I know Carvana is the space for like Amazon. You can buy a car, a house, whatever on there. Kev, what's your take?
Can I get next day delivery on a Mustang? I think I think they're going to need bigger trucks, Diane, if they're going to be delivering these to your house. But listen, I think the debt raising, that's just, they're making the decision. Tom's right. All these companies have cash, right? So if they're borrowing money, if they're selling bonds to do that because they think it'll pay off better, it's a better investment to do it that way. So I don't have the street seems to be concerned raising capital via debt. I don't have any concern about that. And Diane, selling Ford certified used cars on Amazon, it's just the evolution. And you know what's next? New cars will be next. Once Amazon gets in your business, they don't stop at one thing. They're going to be selling all cars are going to be able to be bought on Amazon. And so is that good for dealerships or used car dealerships? Probably not, Diane. So watch the stocks in those companies as well, especially CarMax. Carvana is in that business online like that now, but CarMax isn't, Diane.
Yeah, poor CarMax has been having a really rough year, and this does not help at all. Speaking of who's having a rough go today, you got downgrade hitting Dell. That stock down 6.5%. The HPs, HPQ, HPE. This is downgrade from Morgan Stanley. This comes about amid these worries about the memory sector. They downgraded Dell to underway, lowered the price target to 110. Tom, what's your take when you read through this note?
Yeah, the double downgrade for Morgan Stanley, but then JP Morgan came out and said put him on a positive catalyst watch. This all comes ahead of earnings next week. You look at the price action of the stock, it's now down over 22% so far this year. It's pulled back 25% from recent highs that we saw just a couple months ago, so it's in bear market territory. But they said that memory super cycle brings downside risk to hardware manufacturing earnings heading into 2026. And you've seen some of the memory chip makers that have just exploded recently, Micron, STX, Western Digital. So what type of impact is that going to have on it? But then, as I mentioned, JP Morgan came out. They raised the price target to 170 from 165 going into those earnings, saying, hey, positive catalyst watch on this. We still have an overweight rating on the shares. So this is a little bit of a bull-bear debate here in Dell, but the price action has just been miserable. Watch the 200-day simple moving average. Dell is getting close to that level today.
Okay, bull-bear debate before our own bull-bear debate. Kev, what's your take when you look across Dell and this whole note from Morgan Stanley in particular?
It looks like they downgraded a bunch of these companies, all similar. And so, but, it never ceases to amaze me. They wait for the stock to sell off $30, then they downgrade it. And so, the chart on Dell, it's oversold on the downside. It's about to touch the 200-day moving average at what's that, about one, just slightly below where it is right now. So it's getting really close to the 200-day moving average. So, analysts chase, and this stock has already sold off $30, and then they double downgraded. Seems a little late in my eyes.
20-some attempts. They might give it to me.
We'll put a pin in that. We've got our own bull versus bear conversation coming up.
I'm a
The guys
team
will get their
player.
example trades put together for Boeing. We'll have more fast market after this break.
Get me. You feel me? We playing basketball, but have you ever been on the team with a team full of killers like this? Y'all feel that, chat? The market is just literally giving free money away every single day. But today, they're going straight up. Straight up. Like, don't work so hard, America. Like, look at this. We got NVIDIA earnings on Wednesday. We got Post. Everybody eats cereal. We got Post earnings. We got Target earnings. We got Lowe's earnings. We got Home Depot earnings. Get this bread. That's all I do for a living. Get that bread, Be happy. Carry on. What was y'all saying? That was a good game, though, bro. I try to, if it was a scout watching, get me. I try to play defense, even though I can't.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Don't let nobody say I'm
active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Almost 5 minutes of play. All right, so look, there's a pullback on the market, y'all. Be careful.
Sometimes
This right here, that was here, it's over here.
you could have done better.
So boom.
Same goes
And
for where
we're
you
looking for a
invest.
retest right here.
Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network.
Somebody
Man,
says it's
picking up for
4X.
Boeing.
I don't even know what
Emirates said
4X.
they placed an order
What
for
is 4X, though?
65
You might have
jets
heard
from
of
the
4X.
aircraft manufacturer. The total, based
I
on
ain't
list
never heard
price,
of 4X,
$38
though.
billion. It comes as Air Senegal and Ethiopian Airlines also place orders. It's all about slow and steady for Boeing, as Bloomberg reports the plane maker is focused on stability before boosting output. Boeing looks to maintain its current rate of 737 production before raising to the improved increase of 42 units per month next year.
Oh, we got some
Let's throw the trading
competition now,
glasses
y'all.
on and welcome back in our co-hosts Tom White and Kevin Hinks. It is bull versus bear time. Before we get to your example trades, we got to talk your take on Boeing. It's having a very different year this year compared to last year on shares. And it's like we're seeing order after order, and things just seem to be running smoothly. Kev, what's your take?
Yeah, I look at Boeing. I look at the orders coming from the weekend, but they got hurt on their earnings call when they delayed the 777 to 2027. That's what shook investor confidence a bit here, even though they had so much good news in their earnings release, but the street really didn't like that they delayed the deliveries of those planes. Now, here's the stat that everyone should feel a little better about when they're looking at Boeing. Their peak revenue was 2018 of $101 billion when the stock was $350 a share, right? They made $101 billion in 2018. Their earnings per share expected for 2025, $87.9 billion. For 2026, $97 billion. Only slightly less than their peak revenue from 2018 when the stock was $200 higher or $150 higher than it is right now. So this company is righting its ship. It's getting its act in order. It's upping their deliveries. It's doing all these good things. They just got to keep delivering planes. Remember, they expect to be earnings per share. They expect to make money by next year. Start making money. And fourth quarter of this year, they're going to make $2.50 a share. So they've got a lot of good news coming. But right now, there's a little bit of negativity because they delayed that 777 because so many orders, a lot of orders are for that plane, even though the most are for the 737.
That's a good point, and especially the Emirates orders are. Emirates is the biggest 777 operator. Tom, what's your take?
Well, I think you take a look at it. The free cash flow is what's important to investors here. They're able to ramp up production on the 737 up to 42 a month. But then the company came out basically during the air show and said, hey, we're going to make sure that everything is working and functioning properly. Kelly Ortberg, the CEO, he's done a great job trying to turn this company around. They've got that backlog of 6,000 planes. In October, they delivered 53 planes. They nearly doubled the orders so far this year than they have for delivery, so that backlog continues to grow. But now they just need to ramp up production, continued production. The stock's been, price action-wise, has been pretty miserable, even though we've seen some good headlines out of Boeing recently. And I think that has investors scratching their heads here a little bit. It's below its 50-day moving average over the last several weeks. It's now below its 200-day simple moving average. Maybe oversold a little bit on a technical basis, but yeah, it just hasn't been good positive price action despite improving headlines for this company. But as Kevin mentioned, they're expecting not until next year to turn back into profitability.
All right, so Kevin, let's start with your take. What's your approach for an example trade?
So in the least surprising move ever on Fast Market, I'm going to have a bullish skew on my trade for Boeing. Looking at how it sets up, I'm looking at the expected move for this week of about $6.50. Look where the stock is right now, about, let's call it $194. And so I bought the December 5th 195 call, so it gives me a 2-week call diagonal. Sold this week's 202.5 call, just a little bit outside the expected move, Tom, because I think it reflects my views in Boeing that the stock could rally if some of this good news starts to affect the stock. We keep waiting patiently. It's been a tough wait, but I'm still hopeful about a name like Boeing, and my trade reflects that because
This is bullish as ever.
you could probably sell the 200 call. I sold
Retest
the 202
right here.
and a half just to give it more room if it were to start to move for the upside. But this trade, the trade you put on, the strikes that you choose should reflect your opinion on the name, and that's why instead of the 200 strike, I moved it out to the 202 and a half, Tom.
Yeah.
The debit paid about 390, trading a little higher than that now, trading about 430, Tom.
Rebounding from those session lows, but let's break this one down. December 5th, weekly option, so 18 days to expiration on this position. By the 195 strike call, basically at the money, just a little bit higher than current share price. And then against that, in the near term, November 21st, monthly options that expire in just 4 days, sell that 202.5 strike call, bullish, $7.5 wide call diagonal, paying roughly about $4 debit.
That might break down a little
maybe
bit.
a little bit higher than that. But the debit you pay is going to be your risk. So if you pay $390 per spread. If you pay $430 per spread. Takes your break even on this one. You need the stock to go higher. You need it above probably about a 197 to start getting some profitability in this one. It's 2 weeks wide, so that gives you, if the market's open, that potential to roll that short option a couple times over the next 2.5 weeks here into the December 5th options. I think one of the keys is when you look at this type of call diagonal, you got 2 weeks in it, right? So you've got a little bit of duration, but then also you're paying a lot less than the width, the $7.5 width of this call diagonal. So your debit, anything above maybe that 197, is going to be profitability when you're paying less than the width of these diagonals. In this example, it's bullish. You've got some assignment risk on that short 202.5 strike call over the next 4 days. But as we get closer to expiration over the next 4 days is when you want to start looking, hey, if the market's open, I can roll that to the next weekly cycle, collect some credits. That'll decrease my risk. That'll increase potential profitability also. So there's the bullish stance here. Kev, I looked at mine a little bit different. How could I get some downside exposure while still being range bound and not paying out a lot of debit or risk on this type of position? So same strikes or same option series that you used, I looked at a slightly bearish put calendar to the downside. So going out to the December 5th weekly options, 18 days to expiration, buy the 190 put. It's about $4 below the current share price. And then in the near term, November 21st, monthly options that expire in 4 days, sell that same 190 put. So a 2-week wide, slightly bearish put calendar to the downside, paying roughly about a $2 debit. Probably get it for $1.90 or so. A little bit less than that because the stock has moved higher, as Kevin mentioned. But that debit I pay on this type of trade, just like Kevin's call diagonal, is the amount of risk that you have in this trade. So if I pay $2, $200 in risk. Now, you want the stock to go at or near the 190 strike, but at the same time, you've probably got a range between about 185 on the downside, about 196 on the upside to potentially be profitable on this. So while you're pinpointing the 190 strike, you still have a range. Kev, it's the same type of concept without using a diagonal. It's just a calendar spread. But I think the key is, you put that strike where you think the stock's going to go over a specific duration.
Yeah, your put calendar has the same idea as my call diagonal. It's in the calendar spread family. One has a vertical spread embedded in there, my diagonal. Yours doesn't, and so yours is the same strike. You're right, though, Tom. Your 190 calendar could almost be considered at this point a range-bound strategy. Because if the stock stays right here or slightly lower, you're probably going to be profitable on this trade because of theta. So if it moves away from this area is where, to the upside is where you would probably get hurt on this spread. But right now, you're collecting data. Remember, the difference between the call diagonal and the calendar is look at the size of the debit. You're paying less than half of what I paid for the debit. So it's just using the same strike. You pay less, but you have more of a narrow area directionally to be profitable in. But it's a great discussion, the difference, between the call diagonal and the put calendar.
Yep, and you've got some summer risk on that short option also over the next 4 days going into expiration. But the idea is the market's open that you can roll or adjust that short call over the next 4 days into the next weekly cycle, collecting credits, increasing potential profitability. So Diane, there you go. Kevin's bullish and the moderately bearish put calendar here.
I will say, going into it, Kev didn't sound as bullish, but I'm not surprised about where he went with his example trade. All right, thanks, guys. Coming up, we've got cash tags. It's a big week for retail, it seems, from Lightfolio. We'll be along with new data on Home Depot. It's reporting, it's starting off the retail reporting. Stay right here on Schwab Network. Cash Market will be right back.
I'm Alex.
Indeed. And I'm Ms. Long.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more.
It's stuck right here, but this is good.
Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Like a good neighbor, State Farm is there.
You made the nice list, kid. Paige.
In the flesh.
Rookie of the year.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Kevin Hinks over at the C-Ball. Time now for our cash tag segment, taking a look at Home Depot. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio, with the latest sentiment look at Home Depot. Andy, thank you so much for kicking off the week with us. So this is a big week for retail. We start out with Home Depot's results. The shares have underperformed the broader market. What does it look like when you look across your sentiment data?
Well, it looks like there's a possibility of Home Depot and Lowe's really turning the corner. It's been a very difficult ride for both of these stocks. I think Home Depot is down about 15% since September in terms of the stock. But, our data is showing that from a consumer perspective, at least those who are thinking about home improvement, Home Depot is outperforming peers, and we're just starting to see just a little bit of uptick in that overall category after a very, very weak year. So it's probably too early to say that either Home Depot or Lowe's has turned the corner. What we can say is that we think that the stock sell-off may be a little bit overdone here. We see some reason why executives for Home Depot may be able to have a light at the end of the tunnel kind of message. in their call, but it's really going to come down to the outlook, especially as we head into, Black Friday, the holiday season. How much will Home Depot have to discount to get people in the door? I think is going to be a key question. Obviously, there's going to be concerns about tariffs, but from a strategic standpoint, we think both Home Depot and Lowe's are executing pretty well in a very difficult environment and are poised to be really benefit big from a rebound in the economy in 2026 because they've tightened up, they've gotten rid of a lot of fat, and it seems like they're positioned to accelerate their earnings once the consumer rebounds a little bit. So it's really just a matter of when do you think that will happen? What do you think the macro economy is going to look like? Because if the macro economy turns and consumers start feeling better in 2026, then Home Depot is really set up to win that nicely.
Andy, the competition between Home Depot and Lowe's clearly favors a company like Home Depot, right? If it was a fight, it would be stopped because Home Depot is the clear leader here. But what both of these companies are fighting against is really the macroeconomic environment, right? It appears to me that they're suffering from the same thing that some housing companies are suffering from, and that is there's a tranche or a queue of people waiting for interest rates to become lower before they pull the trigger on home improvement, and which will, lower interest rates will do that. It's a big factor for companies like this. If you have to borrow money to do a home improvement, you're going to wait if you think interest rates are going to be lower in the future. How do you see that playing out, Andy, or am I off base there? I think interest rates play a big role here. I'd like to hear your thoughts.
Yeah, I think it plays an enormous role. It's very difficult to agree to or decide to do, kind of a minor home improvement project when in order to do it, you might have to take out some money in a HELOC and pay 8, 9, even 10% interest. That's a lot easier conversation when those interest rates are 5, 6, or 7% for a lot of people. And there's been so much media, discussion around the possibility of interest rates coming down in the future. It just creates a very hesitant consumer. And so, what I think Home Depot and Lowe's are probably hoping for is just, some stability, some clarity where the consumer doesn't think, hey, if I just wait this out, I can get, better loan pricing next year. They've got to have, a stable interest rate environment, or those interest rates actually drop to where consumers expect them to be in order to trigger those, bit larger projects, home renovations, and home sales. Quite frankly, is a big reason why people go into Home Depots because they just bought a house, they're moving in, and they want to fix some things up the way they want them. If homes aren't turning over fast, it's very difficult for Home Depot or Lowe's to get significant foot traffic.
That's a good point, and that's one of the things that was at the top of my mind because I haven't been in a Home Depot in probably 2 or 3 years. Now, I may not be the kind of typical person as it relates to Home Depot. But let me ask you this, Andy. I'm curious to know what the earnings score that you all would give Home Depot. Let me give also some background in terms of what the consensus expectations are. Adjusted EPS expected to come in at $3.81. Revenue is expected to come in close to $41 billion, which would be slightly higher than a year ago. But how would you all look at this one in terms of your earnings score at Likefolio?
Yeah, we've got a positive score on Home Depot going into earnings almost purely because of the beatdown that the stock has taken since September. So that plays a huge factor. You got a 15% discount to the prices that Wall Street was paying just a few months ago. I think that's an enormous factor. So if the company can just come out and reaffirm guidance, provide some light at the end of the tunnel type of messaging, then I think Wall Street probably reacts favorably. In terms of the revenue and earnings numbers, we think they probably come in pretty much in line. It's possible they could be a little bit low on revenues, but again, it's going to be all about that outlook. And our data says that they should be able to deliver at least a slightly positive message that could, get shares into a relief rally type of situation. That's what we're looking for.
Okay, that stock is down about 7% year to date. Thank you, Andy. That's Andy Swan, co-founder of Likefolio, with their latest data on Home Depot and beyond. Okay, for the trading perspective of all things Home Depot, let's get Tom back in here for his thoughts before you guys get to the example trade, Kevin. Tom, your thoughts?
Yeah, I think if you take a look at, their data's pretty positive considering, the meltdown that we've seen in the stock since hitting all-time highs last November, down 17% from those levels. Kind of doesn't set up with that. The stock was downgraded last Friday ahead of these earnings results. I think they put a price tag on 370 down from 440. So conflicting, dialogue here about the stock, but yeah, you can't argue with that pullback that we've seen. We're below the 50 and 200-day moving averages on this name, Kevin. So the bar's actually low, and I think on a technical basis, Kev, got that RSI sitting down there below the 30 level right now. So oversold on a technical bias with positive data out of Likefolio, Kev.
That's wrong.
Yeah, and I think all our viewers should understand what Andy Swan was trying to teach you there, which is they're price sensitive, their opinion on Home Depot, and they're more bullish now. Why? Because the stock is lower. And right, if it was sitting at all-time highs, they probably would have been less bullish, but it's not. And so that causes us to think to strengthen our opinion or lessen our opinion. Our opinions are always moving, right? So his opinion is stronger because of where the price of the stock is. So looking at that, I looked at something that we do a lot on this show. It's a complex trade. It gives you the benefit of being profitable if the stock stays right here or even goes down slightly. Yet it's a bullish trade, Tom. You're selling the downside put vertical spread, right? Selling the 345. This is all November 21st in the first part of the trade. Selling the November 21st 345, 335 put vertical, right? Then taking that credit, buying the 1 week, the November 28th, November 21st, 175 or 375 call calendar. So selling the put vertical, bullish, buying the call calendar, bullish. And so if you do that package we put in for about a 50-cent credit, trading a little bit less than that now as the stock has rallied slightly. So it's trading closer to even, but it's still trading at a small credit, Tom. But this is one that is profitable if the stock sits right here, but peaks out right at that 175 strike in line with the expected move, Tom.
Yep, let's break this one down. The option market pricing in just under $14 move either way. So that 375 level that you put the call calendar at sets up with a move there with the stock trading just below 362 at this point. But let's break down this custom four-legged spread. Sell the November 21st weekly or monthly options that expire in 4 days. Sell the 345 put, buy the 335 put. There's your short $10 wide put vertical that's paying for the buying the Nov 28th weekly options, a 375 strike call. Sell that same 375 strike call in the November 21st monthly options. As a four-legged package, you're going to pay roughly, we've got 50-cent debit or credit, as Kevin mentioned, trading closer to even, maybe a slight credit on this one. But if you collect that 50-cent credit, it would take your break even all the way down to 344.50 to the downside. If you're doing it for even, your break even is going to be 345. You want it to remain above that level. Where do you have the risk on this trade? Well, anything below 344 and a half, 345 is going to be where you start losing money. What's your risk? Well, if you collect 50-cent credit, $950 in risk. The $10 wide short put vertical minus the credit that you collect, or if you do it for even, you got $1,000 in risk. So keep that in mind. This is neutral to bullish. The stock can remain here around 360, and you're going to be profitable on this type of position. And because you're collecting a small credit on something like this, anything above, even if it goes above 375 to 385, 390, 400, it's still going to be potential profitability if you collect a credit on it. You have some assignment risk on that short 375 call that expires in 4 days on this one. But the idea here is using that 1 day anticipated market maker move that the option market's priced in, where if it's a bullish report and the stock goes up, you want it to go up about that 1 standard deviation, but you're still profitable from the 345 level all the way up, past 400 on this if you collect a small credit on this type of position, Diane.
Good stuff there, guys. Thank you. Coming up, we've got the breakdown on Baidu. We'll take a look at the Chinese tech name ahead of earnings. That'll be on the other side of this break. Stay with us.
Look at that pullback. Market's gonna fall like crazy. Except for DoorDash. We need DoorDash. DoorDash is bulls.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Fast
They're
Market
doing
here on Schwab
some- they're
Network.
doing
I'm
some
Diane
Google.
King Hall, live on the floor of the big board. Before we get to the breakdown, let me give you a check of where the markets stand, a little scorecard check. At the bottom of the hour, we are seeing some pressure across the board as stocks flag. The S&P 500 lower by just shy of 0.2%. Similar price action in the Dow. NASDAQ 100 lower by a little bit more than 0.1%. Small caps, the weakest of the batch, down by nearly 0.5%. Baidu set to report earnings ahead of Tuesday's open. Here's the projection for the third quarter. Analysts are expecting the Chinese tech company to report earnings of $1.20 per share on an adjusted basis. Now, Baidu has topped EPS estimates in each of the last 4 quarters. Among the items investors will be on the lookout for, an update on its Apollo Go autonomous driving and robotaxi venture. The company says that weekly ride orders as of October 31st surpassed 250,000. Time now for the breakdown. For that, let's welcome in George Sillis, senior markets correspondent, taking a look at Baidu. So, George, how do you look across this one? I wonder if also, there will be a check on
I don't have my phone
Ernie
today.
Bot, which I always think of like Sesame Street with the name for that one. But what's your take when you look across Baidu?
Well, I mean, first off, if you look at the price action with Baidu, I mean, it ramped up quite a bit going back to early September, and it's pulled back since early October. That's correspondent around the time that we had the most recent sort of tariff scare, which occurred, just depending on how you look at it, between the 7th and 10th of October. So it hasn't performed as a stock very well since then. I think that's first off something, observational-wise to consider. Second thing is, I think if you look at the numbers, as you mentioned, the $1.20 estimate, That's actually down 47% compared to last year.
Right here, I'm
Same
looking for a
quarter,
balance.
the company earned on an adjusted basis around $2.29. And then sales are also at $4.31 billion, expected to be down about 7% compared to last year, where they earned about $4.64 billion. So one of the things I noticed about the financials when you look at Baidu, I mean, first off, the earnings estimates going into the end of this year into next are between $7.89 and $8.21. Places the stock at around 14 times next year's earnings, which is right around where its historical 5-year average is. But it's just not growing very much. If you actually consider this quarter and annualize it, they're expecting essentially down sales to be down about 1.5%, and then sales on a forward basis also be down about 1%, and earnings to be down about 9%. So the growth estimates are actually quite low for Baidu. And then the price really hasn't reflected that since, like I said, the September run-up. It seems to have been recalibrated for maybe some of that growth concern going forward as we see a continual pullback since the early part of October. But nonetheless, I think the analysts will be looking for what's going on with, of course, their AI and cloud business. I think capital expenditures are probably going to be an issue that analysts will be looking at closely. So it's really a growth issue, I think, with Baidu versus a value issue, because if you look at the cash position, and I think this is maybe why some of the bigger players out there like Appaloosa continue to take stakes in the stock or the company. They have about $20 billion in cash, including cash and equivalents. That's a significant portion of the total market cap of the business, around $39 billion. So half the market cap is cash. So for what it's worth, they have a lot of cash. They're just not growing very much. But again, that cash is valuable to investors.
Absolutely. All right. Thank you, George. That's George Sillis, Senior Markets Correspondent with the breakdown on Baidu. Let's get Tom and Kevin back in here for the example trade on this one. So, Tom, you've got the example trade in Baidu. George obviously mentioned how shares had performed year to date, but with the context of what's happened recently. So what's the approach?
Yeah, this was high on the list. All the Chinese companies, that Alibaba, Baidu, JD, Pinduoduo, or PDD, they're all pretty high. A lot of hedge funds were buying them, scooping up early. But if you look at how they make money, right, their search business, they're actually losing money on their expanding cloud business at this point because they're spending a lot of money to create a bigger footprint there in AI and also in the cloud parts of their business. And now they got competition from WeChat over there overseas. But if you take a look at the price action, yeah, we've fallen about 22% from those recent highs of above $149. So bear market territory for this one going into the report. RSI about 40 level, so not completely oversold at this point, but it's lost a little bit of its luster that we've seen in this name. So I looked at a strategy that is passive, it's conservative, but you can still take a directional bias on this one and take advantage of the higher implied volatility in this name. The current IV percentile about 51%, so about midpoint of what we've seen over the last 52 weeks. So real short-term positioning went out to the November 21st weekly options or monthly options that expire in just 4 days. We're going to sell an out-of-the-money put vertical. We're going to sell the 112 strike put and then buy the 109 strike put. So just $3 wide, short put vertical, collecting roughly about a 90-cent credit on it. It's trading over $1 now, so you can actually collect more credit. But if you collect a 90-cent credit or a $1 credit, you've got basically about $200 in risk per spread. The $3 width minus what you collect on it is going to be your risk, but that's all the way below the 109 level. It's a little bit more aggressive. You break even about $111 to the downside, so you're giving yourself a cushion. But Kevin, a little bit more aggressive, maybe based on the pullback that we've seen, but it's still one of those strategies where, hey, even if I'm wrong and the stock goes down, Kev, I can still potentially be profitable as long as it's above 111.
Well, here's a couple things you did. Number one, yes, this is slightly more aggressive, but you made it only $3 wide, which you're able to do for like $1.05 as the credit, which is a pretty good solid number for only a $3 put vertical. And why did you do that? Well, if you go out to $5, if you do the 107 or the 112, 107 put vertical, it's trading about 146. So you lose some of your percentage that you're taking in. So when you're not getting enough credit for what you're selling, shorten those strikes like Tom did here, and that gives it a better return. Remember, you can do more of the smaller width and collect more. It's always about maximizing for the risk you're putting on, Tom. And you going from, let's say, 5 strikes to $3 wide actually made it a better looking trade than if you went $5.
Yeah, probabilities, and we mentioned the aggressiveness of this maybe, and the stock has pulled back a little bit. The 112 strike put, only a probability of finishing out of the money of about 63%. So it lessens maybe your better probability of success, but at the same time, as I mentioned, stock goes higher, stock stays where it is, or goes a little bit lower, you can still be profitable on this trade. The option market pricing in about a $7.60 move either way in the shares on a one-day move, according to the market maker move on the platform. So take that into consideration, how aggressive you want to be, what your directional bias is. But this is a neutral to bullish short put vertical here in Baidu, Diane.
All right, that's a good take. I like the context that you gave going into this one, Tom, with the fact that, how some of these Chinese stocks have performed this year, the ADRs, like Alibaba as well. All right, guys, good stuff. Great way to start the week. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hinks and Tom White. Download the Schwab Network app. It's available in the Apple App Store, and tune in 24/7 on SchwabNetwork.com. Stick around. You've got Next Gen Investing with Jenny Horn and Alex Coffey coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action,
Right
break
here.
it all down in real time with speed,
See the bull
accuracy,
shot come in.
and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Oh my God.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com.
Oh, God.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and we're seeing some pressure to kick off this week, which is actually, I think, going to be fairly exciting because we finally get some, of course, government data expected to come back into the fold, and economic data better put, as well as NVIDIA earnings, I think, will be pretty center stage as, of course, they're Wednesday after the closing bell.
Yeah, this is an interesting session thus far. We're going to talk about Alphabet throughout the show, I'm sure, as it's really the mover of the session. But quietly in the background, NVIDIA, quite the drag today as the stock's down almost 2% ahead of those earnings. So, you know, Jenny, I'm not totally surprised that there's maybe just a little bit of sluggishness to start things off here. As you mentioned, you get the return of a lot of that big government data. You got an NVIDIA earnings release that is sure to send shockwaves
Just a
one way
small
or
pullback.
another, as it has so
They're
many
gonna fill in
times
this
the last
pattern right
several
here.
years.
Right there.
Pretty close to
On this
highs.
split.
If you had any doubts, maybe a time to shore up some of that positioning ahead
Nice
of
old soft landing, and then they're gonna be bullish again.
Yeah, and I mean, I think that the risk, of course, with so much riding on NVIDIA and so much discussion and scrutiny, and we'll be talking about it all week long, is that it ends up doing nothing.
I think that's a really good
So I
point.
say
If you start to
the
see
importance of
volatility,
making money on
the
both
volatility
sides.
index
Great.
VIX is swollen a little bit here. It's 21.5. But you don't see it really accelerating out into the future. So the VIX 3M, or the 3-month volatility index, is 22.5. That curve has become much flatter as, you know, maybe hedgers who are looking to the options market, perhaps buying puts against the portfolio, be that in an NVIDIA, be that in a broad market index like the S&P 500 or what have you, seem to be putting on hedges, but not necessarily taking off positions. And so, to your point, if you don't get a move higher, your position didn't help, but then the hedge is kind of worthless too, because it didn't really do anything other than cost you some money. But sometimes that peace of mind and that protection that it can, afford investors is really worth it.
That is very true. And I will say that right now we are seeing this collective weakness also to start off the week in tech, as I know there's a lot of tech news today, a lot of analyst calls actually to get through, but at least we have something other than NVIDIA to talk about, because I'm excited for finally some of this released economic data. So a lot to get through. Of course, there's always turbulence in these markets with geopolitical risks still being a bit of an overhang, but starting things off on a bit more of a not weakened, but perhaps a bit of more of a cautious note. I mean, to today,
Who is it?
As we do, embrace a lot of these catalysts coming in the days ahead. So as always on this show, we'll start off with some of these movers to keep on your radar. We will be diving more into Alphabet for FOMO today, as Alphabet has really been our standout amongst big tech. And just checking in, we are actually higher in Tesla as well as Alphabet, but other than that, a pretty red day for a lot of these mega cap tech names. Then we'll discuss more on this note we did get today, highlighting some of the memory and hardware names like Dell, HPQ, HPE as well, with a bit more of a cautious tone from Morgan Stanley, as well as then previewing NVIDIA's earnings with Daniel Rubino later on in our show, and closing things out with XPeng, which the headlines would tell you actually had some strong numbers. The move today, though, would depict something entirely different, as we're down about 8%.
Final thoughts, too. I'm excited to get through some of these movers, but big picture, the reason we talk so much about these Magnificent Seven names, not just what they're doing and the products and the services they offer, but just the math behind it. If you were to look at the two biggest contributors to the upside in the S&P 500 today, it's Alphabet and it's Tesla. Alphabet providing about 11 points of S&P upside. Tesla close to about 3. But then if you were to look at the 5 biggest downside contributors, NVIDIA, Apple, Amazon, Microsoft, and Meta in that order, with just Apple and NVIDIA accounting for almost 20 points of the right now down about 30 S&P days. So the reason we talk about these names so much is because they matter the most.
Yeah.
Okay, sorry about that, y'all.
NVIDIA's never
I
mattered
checked
more to the
the
market
door.
than pretty much it does right
I told
now.
y'all they was coming right
This
here.
is a great point. And it's one of the biggest days ever for Alphabet, right? Like, this is a huge day. It's up a lot. It's the standout of the day. And it's contributing about 11 points to the upside. It's a 2% run-of-the-mill every day for NVIDIA. If anything, it's a quiet day for NVIDIA, and it's offsetting it entirely.
I know, and then that's what's so amazing. And that's, again, why an earnings event from NVIDIA, I think, will be so central, especially to the broader AI narrative, which actually speaks to our first name today, which is part of that broader AI narrative, although Micron today, a bit of weakness, at least to kick off this week. But not all is weak in at least the news catalysts behind Micron here. So we're down about 2 cents of a percent. But Rosenblatt actually adjusting its price target to $300.
It literally can bounce probably out anywhere. But they've been kind of consolidating right here.
And so when you see this story of Micron, I mean, we're up now 180%
coming down.
Nearly on the year.
Market might come down.
We pulled back about now
that little pullback and then go up.
Just earlier today. So I think that's really just fascinating, especially when you dive into
pullback,
this note. But it's hugely optimistic, highlighting DRAM demand specifically, which they feel is not only accelerating, but it's also right now really fulfilling a major critical need. Also right now from these AI models being used at the network edge is what this Rosenblatt note really highlighted. So a lot of these memory names have grown pretty substantially.
And network edge, if I recall, they're really saying like smartphones and PCs. So like us is how we're interacting with some of these large language models and chatbots. And the I guess demand for these memory products that Micron has and where that's happening. But what's fascinating to me, not even street high. There's a 325 out there from Morgan Stanley's Joe Moore. So a lot of optimism still remaining for Micron, even though the end of that Rosenblatt note kind of suggests that they're not super positive about some of their peers.
All this is very special.
They still really like Micron.
Careful.
Yeah, and Micron right now, average price target amongst the 45 roughly analysts that cover this name is around $200 a share. So that does imply downside. So I think that there is the feeling with Micron right now of like, when will this momentum start to fade? I guess you even have that fading momentum in today's session alone.
And some of that goes to show just how far this stock has come. Because if you look at just, I guess, analysts' price targets since November, let's say, I see 311, 300, 250, 280, 265, 300, 325, 270. So some of those I think just haven't been updated super recently. But that doesn't mean that they're not valid. They just might not see any reason to update them yet.
Yeah, that is true. And I think a lot of times through these price targets, it's like, take with a grain of salt. Not saying disregard them by any means because they can be market moving catalysts, but there's a lot of different convictions that could be, dated, could be just, one way of thinking that it's also bringing down the average for a name that, hey, if you've been against Micron or a lot of these high bandwidth memory producers, you would have been on the wrong side of momentum at least for the last several months. Now, our next name today is a bit more of a pivot as we're discussing block here with Truist actually upgrading shares.
They don't want to go down no more.
So going from being a straight bear to, of course, taking on a more neutral stance with a price target that was raised modestly to $68 a share from $67.
The market, I don't know. Code 10 on the market.
They said the risk and reward has improved, of course, following the recent pullback in shares, as you can see very clearly.
Look at that empire.
But they also did
note
Code
10 on the market.
Continues to worry about the
What's gold looking like?
Growth in their cash app borrow offering. They also think the underlying momentum of their Square segment specifically is improving, and they believe the stock is at least partially pricing in the risk associated with Block's recent shift towards more lending-related revenue. And I will say that anything with this lending-related revenue has actually not been as much of a downside catalyst as I think that economic conditions would have you thinking.
Yeah, it's been a huge opportunity as long as that credit remains solid for a lot of these companies.
I'm looking for a retest right here.
New banking sector, if you will. But looking at this analyst from Truist, I think the most critical thing to me is that they're doing this ahead of the investor day. So the confidence is building even before the information this company is gonna provide. So we shall see if it lives up to the hype. The nice thing too is we get to fact check this after the fact. I guess fact check's the wrong word, but we get to see if the thinking behind Truist was accurate or not after we get this investor day on Wednesday, even though it'll probably be overshadowed just a little bit by NVIDIA.
I have to imagine, yes. I saw that their investor day was occurring on Wednesday, and I was like,
great way to hide.
I know. I think that you could look at that two different ways. Obviously, they're very different spaces and different worlds, but it definitely could be a great way to bury if you have anything to disclose that is less than positive, of course. Or maybe if you have some upside, it's not the best day to report, your overall investor takeaways. But we'll be watching that event as well, I'm sure, alongside NVIDIA, of course. Now, our next name today is Gap here. And Gap actually has been more and more of a focus amongst analysts as we've seen some very mixed conviction on Gap. We're down about 1.3% today, but Barclays with an upgrade to overweight from equal weight. Price target raised to $30 a share from 19, which I do believe now puts it at least on parity with street highs. 30 was the highest I could see, but you should maybe fact check me on that, Alex. But the firm does like the company's disciplined leadership strategy under their CEO, Richard Dixon. So they also said Gap is focused on long-term sales and margin recovery across all its brands through product innovation, customer targeting, and marketing excellence. And they believe that Gap right now is executing a sustainable product, customer, and brand-led strategy to drive this long-term recovery.
I'm looking for a bounce
right here. I will say that the street, surprisingly
right
to me, is fairly
bounce
optimistic.
right here.
10 buys, 10 holds, and not really.
They ain't even gonna get to the support right here. They're bouncing right here.
Yeah, what I see is looks like this one was Barclays, right? Yeah, Barclays joining BTIG, Morgan Stanley, and Jefferies at 30, just trailing Matthew Boss at JP Morgan at a $32 price target. So a lot of excitement brewing from some pretty big shops. This is a company that generates
bouncing right here.
90% of its sales in the U.S.
Get that
so
bread.
Still feeling pretty optimistic about the U.S. consumer, and you're looking for that sort of middle value range. I think this is probably a company that is looking to serve maybe the lower half of the K-shaped economy. And so if you think that is rock solid enough that they're still buying, I guess apparel, perhaps a company that could be interesting.
Yeah, and I mean, the apparel world has been very much like the clear winners and losers, but as we know, we face a very critical test as we go into holiday shopping.
Real quick, though, before we talk Yum, safe to say this is different than On, though, in terms of maybe the target demo. They're not looking for the consumer that's not looking for a deal like On essentially said. They're not opening shops in Zurich and Palo Alto. They might have them there. But this seems like, and I don't mean this in a disparaging way. I consider myself a member of Middle America. This is more of like a Middle America suburban type of a company.
I mean, yes, especially considering, like comparatively, you have names like On, for example, that is saying they will not be discounting. They will continue to have this premium pricing for what they believe is a premium product that's not really Gap's. I think.
I had some Gap when I had Weeble a long time ago.
Gap brand, you have, of course,
I was making some good money off Gap.
I mean, relatively affordable. Then you also have Old Navy. You have brands like Athleta, Banana Republic. I mean, all of these brands offer a variety of price points with definitely discounting at not the center of every brand, but definitely apparent, especially for like Old Navy, for example, which focuses more on this affordable type of clothing. But our last name today, Yum Brands, which got an upgrade today out of TD Cowen to buy from hold. Price target raised to 173 from 162. They said they see the likely sale of Pizza Hut amplifying their growth profile, saying the sale should drive best-in-class development and within the quick service sector and a clearer focus on Taco Bell comps, which they do model above consensus now into 2026 and beyond. They also now see a current favorable risk and reward at these levels, saying the worst of the net restaurant development headwinds are now behind Yum Brands. So Yum Brands doesn't get enough credit for how massive they are, especially internationally, like KFC, for example, a huge international presence. While Taco Bell has also been a huge contributor of a lot of their growth and their resiliency. If you look at their brand performance, it is so much led right now by Taco Bell as well as then KFC, where Pizza Hut is just that drag on a lot of their comparable sales and just their recent earnings. So I think that even though it's still fairly preliminary to say that we know that they're offloading, I believe, Pizza Hut.
Okay.
It's also, I can see why that would be a positive.
Yeah, it's like 80% Taco Bell and KFC. So that's really where the importance lies. And looking at where the comp sales growth has been for Taco Bell, you can see why they want the focus there. That's definitely where the growth's been. But, consistency out of KFC has been a big part of the story as well. That's expected to continue. So, maybe spinning off, selling off Pizza Hut whenever they were able to do that will be something that investors cheer on.
Yeah, and Yum Brands, I will say I'm a frequent guest at Taco Bell, so I'm doing my part to contribute to that brand, which has had a bit more of mixed financials just following its again, earnings and some overall speculation on the perhaps offloading of Pizza Hut, which Pizza Hut I do not frequent, but I'm a frequent Taco Bell girl, so I will admit to that. But we'll leave it there for the top of our show today. Coming up next, so it's time to dive into the charts as we'll be joined by our chart master to look at example trades as well Palantir as well as Boeing.
Oh, they trying to bounce right here. At least going to 670, at least. On the bull side, I'm looking for a retest right here. That's the first target. Yeah. Hey, look. What is that? What they doing? What they doing? They could go lower. Be careful. Like this. Bearish. Bearish flag. I'm gonna show y'all a setup.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Welcome back to Next Gen Investing. It's now time to discuss the technicals with, of course, our chart master, Rick Ducat. And today we're talking two names in the defense world, Palantir as well as Boeing. So it's like the old school versus the new school. We'll start off with more of the new school, which Palantir pulling back today. And actually, upon looking at the chart this morning, we've really pulled back pretty substantially from highs here. I know still sitting at a really nice gain on a year-to-date basis. But Rick, I'm curious your thoughts because, again, we're in a substantial repricing right now in Palantir shares.
Yes, but also a move that has held on to a key supportive level. When you look here at our chart, to backtrack a little bit, we had this gap up on earnings. That gave us an...
See, look at the power from the bulls. I told y'all, call right here. Right here, a support call. I said retest right here, right? Did I say retest right here? I didn't say leave that call yet.
And then once again...
So you see the trend right here. You see this, right?
An intraday opening beyond that
right?
level.
Does anybody see that, class?
Recovery back above that point. For now, we're hanging on above that key threshold.
I'm trying to see how much power they have. Are they bullish? Are they bearish?
The top of the recent range, 187.
Let's see how far they can go.
Best close. Then we tested that ceiling several more times before eventually breaking down into increasing volatility and chop. But, for now, as I said, we've stabilized around that 169 level. However, you could say that our upward channel type shape here in our blue lines, we have broken beyond that. We have not re-entered that area. Now, the new trend line to follow, a downward sloping trend line in white here, starting with those highs near 207. For now, we're still beyond that range there to the downside. When we look at our moving averages, we can see that we have our orange 63-day and yellow 21-day exponential moving averages just a bit above current price activity. Those come in around 176 and 183 respectively. So a push above our trend line would also probably result in a break above the 63 EMA at this time as well. Momentum, our RSI, our momentum study showing declining momentum. We're below the 50 midline. Our red downward sloping trend line is also still in play here. So the bulls would be looking for a break above the
not yet. We didn't get it yet.
RSI trend line in tandem.
Careful right here, y'all.
Credence to any kind of bullish breakout. When we do look at our volume profile study, we can see here that this volume
trade
node
on
area, the
Hopium,
spike
though.
in
Let's
trading
see what they're
activity
gonna do.
around 80, pretty much lines up with some of our other factors. It's almost in the middle of our range. It includes our 2 moving average as well. That seems like a notable area to push through on the road back to 187. To the downside, 169, the level we mentioned earlier. That's the clear point to watch out for potential support. If we do move lower, volume node lines up with our -1 standard deviation channel right around the 150 to 155 level or so.
Okay, yeah, and obviously with the broader tech weakness we're seeing today, we're down about 1.5% on today's session. So appreciate Rick, of course, for giving us all of the key technical levels. But now as we think through trading this name, Alex, of course, there was some positive developments. They're expanding their AI footprint right now with a long-term partnership with FTAI Aviation. That was a catalyst today, but not enough to propel shares higher, at least on today's session.
Yeah, I love that you tied this in with Boeing as a defense name because, like, I don't think of the companies at all alike, but they both rely so much on some of those defense contracts. So it's fascinating.
Yo, I've been trying to get my phone to charge for the whole time. My phone will not charge.
So neutral in construction,
Sick of everything. I gotta buy me another phone. It's always something, Chad.
Trade going out to the end of this year. The December 12th, December 26th double calendar spread, guys. Looking for a move back towards the highs around, let's say, 200, and then also a move towards
I don't know where this
zone that Rick talked about between 150 and
bullish volume just went to.
put calendar. So with this,
Bulls is there, but
to it that correspond with where those strikes are located. So you have one to the downside around 150, one to the upside around 200. You spend $3 on this and makes your max loss potential 300 for this.
so your target, your rewards up here somewhere.
Maybe it would
This is your target.
at different times depending
The
on
stop
how the
loss.
volatility moved. But if you had a massive move beyond to the downside or the upside, probably going to be difficult for this one to
Even though
work.
this is a bullish setup, but the stop loss should probably be around here somewhere. If this comes down here, you know, I would be out of this setup. But this is bullish.
And again, a bit of
This should stay
duration
up
on
here
the back of this
somewhere.
trade, so we do
You see this
a little
break?
time for things to obviously
Take a loss.
stabilize.
Easy.
And it's customizable for this example too. That's something we always talk about.
See?
Highly
Bullish.
customizable, which is important. Yeah,
That's
it's
money.
stabilization, but that's not really been the nature of Palantir's year, frankly. But now to move into our next name, Boeing, which again, highly exposed to U.S. government spending. That's really high. I tie these two, especially in terms of defense, but also has seen a bit of a pullback again from highs that were much further down. I mean, past in the year, and so Boeing has actually been a surprising. Really, I'd say more stable, more, I mean, just upside than we've seen in Boeing in quite some time. But all that to be said, they're still working on that stability aspect of things, I mean, with the overall market.
It's interesting that you use the word stability because I was going to say one of the key differences is that the breakdown by some measures looks a little bit worse than our past chart here. I agree with your broader point, though, that over the longer, bigger picture, probably a less volatile name here. But the reason I'm saying this is that similar to our last chart, we had this range-bound area here between about 210 to 225. Then we've had a breakdown, and this 195 area here was an important prior supportive level. That was an old low. We are below that area. We have not really managed to recover above it for several sessions now. So we have pushed beyond an extreme low point, and we are kind of languishing right now. We've also broken beyond this trend line, though, kind of a mixed signal there. A downward sloping trend line has been broken, but we haven't seen any big breakout or any breakdown really either way. So this level here between 188 and 195 remains a supportive zone to consider. We say 188 because if you were to backtrack here, it was a significant set of old highs. So when we advance our chart and look at some other studies here, our RSI indicator showing a bit of a discouraging development for the bulls. We are now in the oversold area below the threshold of 30, which suggests increasing weakness in a trending market here. So this would be more of a bearish signal here.
See that pullback?
Notice that we have a confluence of our
You see that rejection right here?
21-day and
Why? Because the trend is now
coming together just
right.
above the 200 level. So that
On
gives
the other
us,
side of this
a
setup,
convenient
there was another
resistance
setup.
area to
This looks like a
consider
bear
this just to
flag,
the
so be
upside
careful.
there. So look for momentum to
But
improve if you have a bullish
never know for
outlook and
sure.
that confluence to be overtaken.
So
Finally,
it is.
when we
So
look at our volume
So I say
profile
you
and
gotta trade what
standard
you see.
deviation channel studies.
It still
our
can still
nodes
bounce
come
right
in right about here at this level near 195, and then another one here at our previously mentioned confluence near the 200 level. That also lines up with our +1 standard deviation.
Because the bulls are
channel.
trying to come
so
in.
even extra emphasis on this is resistance. To the downside, our next node lines up with our -2 channel near about that 175 level. So further support there if things really break down.
Yeah, and I will say that the good point about the fact that we've pulled back more substantially, and I know that we're down about 1% today, but it's just been a different, very much a different story with Boeing, as of course they do have that massive exposure to airline manufacturing, whereas like Palantir has more of that commercial side of their business. So you can see the difference obviously from a technical perspective, but appreciate it too, Rick, for all of that insight today. But now as we do look to trade Boeing here, for example purposes, Alex, walk us through your thinking.
Yeah, neutral to bearish example trade with this. The technical picture just seems to be deteriorating based off what Rick was telling us. Looking at a neutral to bearish strategy, December 19th to the December monthly cycle. Can't believe we're already looking at December example trades as the last month of the year just around the corner. But 200, 205 call vertical, looking for $1.50 credit. That would be 30 cents for every dollar of risk on this trade. Your break even would be 201.5. You just simply add that $1.50 to the 200, and you risk 350. So you subtract that credit out from the $5 wide spread, left with 350. That's $350 in risk. As I said, 201.50 to break even. Jenny, what you really need to happen if you did an example trade like this one is for Boeing to stay below 200, basically out through the middle parts of December.
So more of actually like the continuation of the trend we've seen for Boeing. I guess maybe you don't want things to pull back substantially, but more of the same just for this example trade purpose. But we will leave it there for our chart master today. Coming up next, though, we'll discuss a leader of today's session, that being Alphabet, after Berkshire Hathaway disclosed a $4.3 billion stake in the mega cap name.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape
look,
investor decisions,
while they still here.
all with expert analysis and actionable content.
It didn't break down just yet.
Rotations, earnings to
What they
policy.
gonna do?
It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey.
Look, trying to shake us
helping
out,
with the
right?
distribution. The two
Still
grandchildren
bounce.
planning for their college
Off the
education.
same support.
Someday it'll be their
Like,
turn.
come on. False breakout.
Welcome
Retest.
back to Next Gen
Breakout.
Investing. It's now time for FOMO. And today we are discussing Alphabet, which is our real leader of the big tech names today, and really of a lot of the market weakness we're seeing on the back of this Berkshire Hathaway stake. $4.3 billion. So Marley Caden is joining us, of course, host for the Schwab Network, to make sense of it all. And I will say that I know we touched all-time highs earlier today, but we pulled back pretty substantially. I guess the win is that we're still sitting up about 3.4% here.
Yeah, we pulled back, $6-7 from the highs that we saw earlier, but still a really positive story here. Like
That's
you mentioned,
right.
Berkshire Hathaway disclosed that they bought close to 18 million shares Alphabet in the third quarter. Those were valued at about $4.3 billion at the end of September when the third quarter finished. Now worth about $4.9 billion. So we're getting up into the $5 billion range. Now that is a relatively small purchase when you look at the grand scheme of Berkshire's roughly $300 billion equity portfolio. But the stake, when they disclosed it, was its 10th largest equity stake. So pretty big, significant play here in Alphabet. Also a very rare venture into the tech sector for Berkshire, which I think is sort of the more significant move here, and also a sign of confidence, in Alphabet and some of the spending that we've seen on AI infrastructure, and that oftentimes Berkshire buys a lot of what they consider to be bargains, and we know that Alphabet has traded, traditionally as one of the cheaper large tech companies here, but I think a significant vote of confidence in this play here. CFRA is saying that they think that Berkshire likely finds more comfort investing in Alphabet over some of the other tech plays, given the high free cash flow potential of its core businesses, coupled with an attractive valuation that's about 22 times its 27 EPS, and amid a healthy top-line growth trajectory. So that was their sort of takeaway, that same sort of observation, that it may be that it is a less costly tech play. But interesting to note, that of all of the tech plays, that this is where their confidence is.
Yeah, and I guess some of the speculation, too, is that this probably wasn't, there's no way to know for sure, outgoing CEO Warren Buffett's decision, but perhaps the investment portfolio manager, Todd Combs, or I think there's another gentleman who runs things there, maybe initiated this. This has been one of the, I guess, sort of the great white whales.
All right.
They say they got the one that got away
I see they
for
pulled back.
Mr. Buffett, as he lamented not buying this back in the day, but
we need this to break right here because they definitely just had a bounce rate.
So are we expecting them to perhaps continue to hold that cash just because that's what they feel is right?
All
or
of this,
to go on a shopping spree here?
all
or is
this
it
support
to be
has to
determined?
break
I think it's
for them to
TBD
really
at
be
this point.
buried.
Like you mentioned, Berkshire generally
My
doesn't
opinion.
disclose. They don't disclose who made the picks. Warren Buffett
Even though they
generally
looking
doesn't
bearish.
disclose which are his. I do think it's important to note, though, that
I wanna see the
Ted
power.
Kessler and Todd Combs, they only manage roughly 10% of the entire portfolio.
This would be a big buy.
So this would be a monster purchase if that is part of their 10%, if you really think about it in that way. So, I don't know if that leans you one way or the other with that figure based on who's this pick, if it's Buffett or the other two. But it remains to be seen what the move is here, as this is one of the final outgoing plays during Buffett's tenure. We know that he's exiting. Also, Berkshire cut its stake in Apple.
By another $10 billion.
By another, yeah, exactly. And so it is really interesting to know that these are sort of the moves that they're making while it's a time of change. But what we do know about Berkshire, what we do know about Buffett, is that when they move or he moves, the market responds. And
No
that's
doubt
what
about
we're
that.
seeing.
You see that today for sure. I guess the one thing, too, is if they are offloading or reducing that Apple position, there's really only a handful of companies that they could invest almost $5 billion into and have it not be like a significant chunk of the outstanding shares. So in some ways, these Magnificent Seven names just are liquidity sponges.
That's a really good point too, and I know that
They ain't
everyone was
moving
like,
too fast. They ain't
the
moving too
commentary
slow.
I saw this morning was that
This
it's
is
unusual for them to be this tech investor.
midday,
but,
so
I mean, if you're offloading out, I
we're
don't
getting less
necessarily
and less
see it as
volume
a
on
weak
each side.
move for Apple as much as it's
But be
more
patient,
of
hold in there.
confidence in
Ain't
Alphabet.
nothing wrong with
And,
it overall
I mean, to not be on board with big tech in this market environment, I think is a mistake.
Well, and I think that it's clear that maybe the Warren Buffett of 20 years ago, 15 years ago, was skeptical of some of these big rises in valuations. But, I mean, Mr. Buffett and Berkshire are as successful as they are in 2025 because of their investment in Apple.
That's true. And also they've been sitting on, now we've had two reports from them, quarterly updates, that we're sitting on their biggest cash pile on record. So I think it makes sense to be now allocating that, elsewhere, but it will be an interesting Berkshire to know it's not under the helm of course, Warren Buffett, as that's coming. He's 95 years old though, which is, I know that he, we've always talked about like his age, and he's basically, how much is he running the company? This guy, I'm like, you deserve some quiet, peaceful retirement. I mean, 95 years old is insane.
I think with all of his success, though, at a certain point, it probably became quiet and peaceful and just fun at some point. But one other thing I want to bring up, too, about Google that has been brought up multiple times since they revealed this stake and the reduced in Apple that it's coming this week. And interestingly enough, Alphabet CEO responded on social media on X saying that the bets on the launch with a pair of thinking emojis. So, maybe a little bit of baiting there, but interesting to see that there could be some more potential headlines coming for Alphabet as well. And, the stock has performed, while it is cheaper than some of its big tech counterparts, still up 50% year to date. Since April, the stock price has nearly doubled since its low.
Last thing I'm going to say, too, is we kind of look at these
Well, this is
magnificent
definitely
seven
I
names
believe.
and the businesses they operate in. Really, the only ones that kind of fit the Buffett mold, even partially, even if you
Where's
try to
Google?
marry, new age.
That's the one we gotta watch.
And sort of the value side would be Alphabet, Apple, Microsoft, and maybe Amazon. Nvidia probably too expensive, even though the growth is
Google
really
ain't moving
incredible.
right now either.
Tesla, different kind of story, and of course, Meta
Everything is
probably
really
a little
pulling
bit
back,
different story.
so
Well, if they're
I'm
reducing
nervous
on
of the market
Apple,
right
that
now.
really leaves Amazon, Alphabet, and Microsoft. And of those three, Amazon, the most cyclical. They have a ton of cash. They're super positive on the economy. So it's really Alphabet or Microsoft, and it looks like they chose Alphabet.
Yeah, and I mean, hey, a safe bet today was we did see shares touch all-time highs. Again, I know pulling back
This
from
is
those
all
levels,
at the
but
elbow.
now as we think through trading Alphabet here, I mean, it was not so much a standout last week, but it has been still a really resilient play.
This is just falling for elbow, free money everywhere.
And we've seen when the current Magnificent Seven, whichever name is sort of in the spotlight, can run a little bit longer than you think. And so what I looked at here was a call butterfly spread in order to keep the risk contained. But say over the next couple of weeks, you still think that this stock will continue to move higher and perhaps move towards, let's say, 300 a share. In this particular case, it's the 290, 300, 310 for a $2 debit. Your break-evens would be between 292 and 308 at that expiration date. And if it perfectly pinned 300, guys, a chance to make 800 on this spread with a really interesting-looking risk profile, one that benefits the most, the more properly and correctly and precisely, I think, most importantly, you can project where that stock ends up near that expiration date.
Yeah, and Alphabet, of course, we already have the majority of their financial outlook for this year, but all of their financial outlook for this year, so we don't really have any major catalysts, although I'm sure we'll see a market maker move priced in to Alphabet shares ahead of NVIDIA earnings later this week. But we'll leave it there for FOMO today. Appreciate it to, of course, Marley Caden, host for the Schwab Network, for giving us that breakdown on Buffett's big purchase into Alphabet. Now, coming up next, we'll discuss more on NVIDIA earnings, and we'll be discussing them all week long, as well as the rest of big tech, as Morgan Stanley right now seeing some more caution when it comes to names like Dell, HPE, HPQ. So we'll dive more into that note later on.
They did this stock dirty. Wow, this is really bullish, y'all. On the grand scheme of things, I'm looking for rejection. I'm down.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly.
I wanted her looking for a balance.
And I let them manage some
It
investments.
can still
for me,
break
too.
down.
Let's move on, shall we?
Test this on her too.
Look it out here.
And then contest this.
Where are you going?
But it could be a bounce right up in here on gold.
Schwab, a modern approach to wealth management. Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers only on Schwab Network.
I just do it for the smiles I ain't seen in a while, sort of feeling like a miracle. Call myself a guy, then they get offended. But you a guy too, why you offended?
Welcome back to Next Gen Investing. It's now time to dive into the latest of the tech names. We are seeing this Morgan Stanley note today with some more caution as it relates to these high bandwidth memory makers, so as well as just the broader memory space. But joining us now is Diane King Hall, the host of Morning Movers, to help us break down this note here, which I know that Dell was the primary focus, Diane, but also notable mentions are HPE and HPQ, which
I'm looking for a retest right here.
compared as they serve, of course, different purposes in the tech world.
It's true. They do serve different purposes, different audiences, but it seems to be just about the impact as you think about the memory super cycle. So essentially, it feels like Morgan Stanley is just becoming more bearish in general across these names. Dell is getting hit the hardest. The losses accelerating throughout the day, down more than 8% right now. And Morgan Stanley is seeing that this memory super cycle brings downside risk when it comes to these names. So for instance, Dell, they're double downgrading that to underweight for that one. And their price target, they slashed it down to 110. That's all the way down from 144. So it signals some double-digit downside from where we saw Friday's closing price. We're already seeing some of that pain right now hit Dell. HPE, HPQ also under some pressure off the views here for Dell. What's going on in the crosshairs is just the impact of memory and the cost that occurs there. And the memory makes up about a quarter to beyond of that of the bill of materials for Dell across its PC server and storage businesses. So it thinks that that's going to have some negative impact on Dell in the coming year. The stock has, before today, it was up year to date. It still has a gain year to date, but again under pressure right now. HPQ, they don't think that the PC refresh, as some see, will offset headwinds from the memory super cycle. So they've downgraded that to from equal weight to underweight. So more downbeat on that one. Again, both underweight on Dell and HPQ, whereas HPE, they've gone equal weight, so they've gone to the sidelines on that one. But again, overall, it seems like bearish sentiment, and they see just some vulnerability with all three of these names, guys.
It's fair, especially when you consider, the super cycle narrative, which I know was mentioned specifically in this note, I think then oftentimes creates the risk of the major downside when you have such high expectations for a lot of these names. And Dell also with earnings tomorrow after the close. We will have that to really dive into tomorrow, of course. But appreciate it, Diane King Hall, for always bringing the insight onto what right now is moving the overall markets. But not to shift too far gears away from tech, we're discussing now more on NVIDIA, as the major event of this week is, of course, their earnings on Wednesday. Joining us now is Daniel Rubino, editor-in-chief of Windows Central. So Daniel, thank you so much for joining us to kick off this week. Really just want to get your thoughts so far on what you've noticed, trends you've seen from tech earnings that we've already, of course, gotten and parsed through.
Yeah, so it's always a mixed bag when it comes to this. Obviously, AI is on everyone's mind, and when it comes to NVIDIA, that is, increasingly almost 90% of the revenue comes from AI and servers, so it's a big deal. And what's on everybody's wondering is there going to be an AI bubble? I'm not quite convinced there is, or rather, I think this is going to disproportionately affect different companies differently. I think NVIDIA, though, is in a very strong position because of their leadership in this space, especially when it comes to hardware and the deals that they often make. That said, of course, the fact that they don't have access anymore to China is unfortunate, and the GAINS Act is going to potentially also impact their earnings because they're so far ahead, though. So I don't see them. It's a different question if you want to invest in them at this point. Obviously, they're very expensive, and I'm not sure the gains there. But if you already have it, I don't see selling as really as an option. I know that there have been some big sell-offs recently for NVIDIA because of this concern, but I'm not really quite convinced yet that it's going to necessarily affect them so negatively, at least not for some time.
All right, Daniel, good to have you back as always. I'm going to ask you to put your editor hat on for a second. If you were to, maybe start writing the article for post-earnings now, or work on that and kind of put the placeholder headline of what you think it might be Thursday right now and why?
I think they're going to do very well for this quarter. The more interesting question, I think, was going to be about what their expectations are for future revenue. I think they'll be okay through 20 for the rest of next year, but it's going to be a question whether there's going to be a slowdown and, of course, how the markets shift and change, especially with the geopolitics going on around this topic. But I think investors that will be happy with the results. They just announced some more big deals with the Department of Energy for servers there. So I feel like they still have some momentum here, and they still do make some of the best hardware in this space, but not enough competition really to stop them. I think the bigger questions are going to be like around China, other markets, and how politics plays into this.
Okay, and then talk to me about your thoughts on AMD. I know they've had a busy several weeks. I know that it's been a huge upside to share price as well, but do you have any lack of faith or lack of the overall conviction of AMD's real vision? Because I know Lisa Su has made some really positive commentary, but more of a long-term outlook. And AMD, well, they've always been seen as a potential second really source to NVIDIA. They haven't really been that, though, over the last several years at least.
Yeah, I really like Lisa Su. I think she's done an outstanding job with the company overall, whether it's in the server space, whether it's in PC and desktop. And when it comes to AI, I think they've been doing some excellent moves. Even in the consumer and professional PC space, we're seeing a lot of momentum with their AI abilities on their PCs for end users. And I think that's really great. Now, she is expecting AI data center to increase by double-digit numbers in the next 3 to 5 years. And this does pose a potential threat to NVIDIA long term. So we're talking out a few years from now. But if anyone could do it, I think it's going to be AMD. They've always been this company that's kind of been up against the rails, but always fought back. Intel for a long time dominated the PC space, and then AMD came back and really put Intel back on its heels. And that's still continuing to this day. So I feel like, this isn't a bluff. I think AMD definitely does have potential here to make a big impact in the AI space. Not quite as big as NVIDIA, but it can potentially eat into their market.
When you look at Microsoft and OpenAI, one of the big stories and question marks, I think, for this year was how that, partial separation, let's say, of those two was going to play out. We have a lot more of those details now. What do you think that fallout's going to be?
Yeah, so their relationship has always been interesting. They, at first, both needed each other desperately, but they're also now going off in separate directions. And they're both trying to seek, avenues so they can both go into those areas without being constrained in each other, but they still want the benefits of exclusivity that they need to share with each other. So, I think for Microsoft, this has still been an outstanding investment for them. It's really bootstrapped their own AI initiative. They're doing very well with Copilot, rolling it out to enterprise businesses and now
Oh, look at the power, bro.
Stuff. And then we have OpenAI, who now, is turning itself into a different type of company. They're going to start releasing products in the coming years, and they're not going to be bound by
See what I'm saying?
deals with Microsoft in this space. That said, they're still going to be using Azure servers, not necessarily exclusively, but they did announce a big deal with that, so that benefits Microsoft as well. So I feel like these are two companies that both are cooperating with each other. They like working with each other. They're a little bit cautious of each other's long-term plans, but for now, this is actually very positive for both companies, and I really kind of like the deal.
Okay, and we've seen in just broadly in the tech world, we've seen a lot more of these collaborations, like Oracle is partnering, it feels like, with everyone, or NVIDIA's a customer right now of all these major players, and OpenAI also seems like it has collaborations with everyone. Does that then create any risk? And I know that you see it as a positive, but when everything is sort of tied together, does that fuel then these bubble fears that right now is being so very much voiced by the skeptics of AI?
Yeah, everyone is trying to use each other as an advantage up until the point that they can break off on their own. So, Microsoft wants to pursue its own AI initiatives, but it's using OpenAI's models basically to bootstrap itself. But both companies now can pursue AGI separately. So that's kind of a big deal. So you're seeing a lot of these are deals by convenience, but not necessarily long-term strategy. They're doing it because they kind of have to, sort of like what Apple is doing with Google as well. Apple's doing that because it has to. But I think once these companies feel like they can break away, just do it on their own, they absolutely will.
investing, I'm sure, NVIDIA as well as the rest of the AI players very heavily into Wednesday, and I'm sure even beyond that. But so appreciate it, Daniel Rubino, editor-in-chief of Windows Central. Now coming up next, last but not least, it's time for Under 30. We are looking at XPeng, which is sinking after beating on earnings but missing on sales. So a pretty mixed third quarter from the EV player.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, Cboe, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on SchwabNetwork.com. Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome back to Next Gen Investing. It's now time for Under 30. And today we are discussing XPeng, which is seeing some pretty substantial weakness today as a result of its quarterly numbers, which were a mixed bag. I saw the headline that they missed across the board, which is not necessarily true. Just sales were a bit more of the weak spot. But for some more clarity on that update, I'd like to welcome in George Tillis, Senior Markets Correspondent for the network. And so, George, I will say, when I initially saw this report, I was like, hey, this was a decent, really scope of their third quarter. But now, with an 8% pullback, I think it speaks more to like what the street really cared about within this report.
Yeah, it's a good point to bring up. I think, first off, the context of the market is putting...
And this is how I caught the bottom of this stock. I'm telling y'all.
And of course, if you look at the report, overall it was actually quite good if you do the comps, which I'll talk about in a sec. But the company did report essentially a beat on EPS. They lost 2 cents a share, but that was significantly better than 22 cents of a loss last year. If you look at the sales, they came in just slightly less than estimated at 2.86 billion versus 2.87. But if you look at the percent change over last year's 101.4 billion, it was basically 102% or close to that increase. Total vehicle deliveries actually were higher by 149% to 116,000 units. They also talked about as a business the technology margins, which includes their software-defined network and, of course, autonomous vehicle technologies, which they're moving pretty aggressively into. XPeng also increased the delivery range numbers for next quarter's guidance to between 125 and 132,000 units. So if you annualize these numbers, they're getting close to 450 to 500,000 annual units, which puts them very close to, I suggest, the EV space in terms of volume, closer to companies like Tesla, which are selling approximately, or roughly speaking, around 2 million units globally per year.
George, when you look at this space, so much hype over the last few years, it didn't live up to the expectations. That's not picking on XPeng, the industry maybe just setting too high of a bar. Do you feel that started to normalize as we started to see some of these names separate themselves from the pack?
Yeah, I think so. If you look across the board in the EV space, you'll notice XPeng seems to be performing better than, let's say, NIO or Li Auto. And if you look at the vehicle margin for XPeng, they actually increased to 20% of sales. Their net income margin was around 13% of sales. Those margins are improving. Volume is improving. The sales guidance is also improving. And so for what it's worth, all those metrics are moving in the right direction. Then it comes down to partnerships, too, that XPeng has procured. Magna International, a major international auto parts supplier, is a partner with them in Europe. They're expanding in Norway, France, Israel. And their technology now is becoming more advanced. Their vision language model software is becoming more advanced, and they're starting to encroach on some of these software-defined elements to driving like Tesla is. they're not just producing vehicles that are sort of dumbed down and just EVs. They're actually very smart vehicles in terms of their software. So, for what it's worth, this one seems to be the one that's taking off in China relative to some of the other names like BYD or even NIO.
Yeah, and I will say XPeng, I know, has been seen as maybe one of the most closely linked to like Tesla's overall strategy right now, but we still are higher by about 92% this year, but also remain off of highs by now about 19%. So pretty big repricing we've seen just now over the last 4 sessions or so. So down about 8.6% here in real time. But appreciate it, George, for giving us that breakdown on what we're seeing from, of course, XPeng taking it on the chin here a bit to start off this week. We'll also still remaining off 105% off of its low. So it's still, faring this uptrend pretty substantially. But that'll do it for us for Next Gen Investing for, of course, this Monday. We have new watches.
Breaking down right here.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with the education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
I'm trying to go all in right here.
Live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live on
Schwab Network, streaming 24/7, anywhere, free. ShwabNetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at ShwabNetwork.com.
exchange floor on the corner of Wall and Broad. So glad you're with us. We've had back and forth action. We have down arrows right this moment, but I have a lot to tell you. Of course, today's show will cover some of the recent market jitters, the volatility index, which is elevated, and uncertainty about the Fed. We'll also take a look at NVIDIA, those upcoming earnings that are due out on Wednesday, what it means for the tech sector, and our panel is standing by because what does the government shutdown of 43 days really mean, whether it's the economy, future decisions, your portfolio? And this show in particular today seems to be a Mag 7 show, and I'll explain why. Because we have details on all these Mag 7 names throughout this hour. Take a look at the markets right now. You do see the down arrows. Friday, we started to see some risk for appetite and a little bit of a comeback. For the week, the S&P and the Dow were higher, and the Nasdaq and the Russell were lower. But the S&P is up 4 of the last 5 trading weeks. But for today, down arrows, 0.75% on the S&P at 6681. The Nasdaq down more than 0.75% at 24,813. The Dow is down 380 points. The bright spot is Google, and that is because Warren Buffett's Berkshire Hathaway takes a huge stake, and we'll talk about that, and that has a green arrow. Oil and gold are both to the downside. Gold's down $29, and oil sitting at $60. The VIX is at 22.23, and the 10-year bond yield is at 4.13. Bitcoin trade at 92,545, and that is the most recent low, down 2% right now in several months. So Bitcoin folks, crypto folks, not happy. Kevin Hanks, host of Fast Market live at the CBOE, is joining me to talk about our first Mag 7 name, and that is Tesla. And Stifel makes a call on Tesla. Let's hear a little about this.
Yeah, hey, Nicole, let me start out the Mag 7 discussion with a look at Tesla. The stock has been down over the last few weeks, as you know, but Stifel came out and keeps a buy rating on, but raised their price target from $483 to $508. It's about a 25%, 20 to 25% rally from where it's at right now. Their justification, faster full self-driving progress and faster robo-taxi progress is what they're looking for. The general investing community expects robo-taxi, full self-driving, robotics in general to take over Tesla's earnings in the coming years. Stifel saying that's coming a little faster than they thought. So good, a nice, they reaffirmed their buy rating and raised their price target in Tesla.
Big news on Tesla there. So a lot of optimism when it comes to Tesla from Stifel. How about we take a look also at another Mag 7 name, and that is Alphabet Google. And, you know, we started reporting about Berkshire Hathaway's stake.
Yeah, there's a lot of headline stories today about Google Alphabet. The most high profile of which is Berkshire Hathaway, led by Warren Buffett. Not sure it was him that did it, but certainly they took a $4.3 billion stake in Google Alphabet, also while reducing its stake in Apple. So kind of almost a, make Apple smaller and then start a position in Google Alphabet, about $4.3 billion. They also plan to spend $40 billion for 3 Texas data centers. That made the news today. Also, they settled their dispute with Disney over YouTube TV and the problems with Disney that included, obviously, all the Disney channels like ESPN. So a lot of news today on Google Alphabet stock, much stronger today.
Yeah, that was big news, too, about YouTube and Disney. That was settled, and people are certainly pretty happy about that. So there you have it, Tesla and Alphabet. Thank you, Kevin Hanks, live at the CBOE. We continue to take a look at the big picture and another Mag 7 name, which would be Meta. But first, let's just talk about what's going on. Michael Cugino's with us, President, Portfolio Manager, Permanent Portfolio Family. Thank you for being with us. What do you think about this market? Are you starting to feel nervous? This is the VIX today is at 22 now.
Afternoon, Nicole. No, I feel like with our strategy, which is pretty diversified, we can sleep at night. We have hedge bets and diversification among different asset classes besides stocks. So bonds, U.S., non-U.S., commodities, exposure to real assets. assets like gold and
Look
silver,
at that pattern.
real estate, etc. So
Them birds was
we
waiting
feel
for
like
that.
we can sleep at night and we're
Stirring
not
them
nervous.
out,
But it is a
just so
choppy
they can
market.
melt.
There's a lot of uncertainties, as there always are. But there's a lot of questions right now that don't have answers. And I think the biggest one this week with respect to equities is probably NVIDIA's earnings and the broader impact it will have on the AI trade, the psychological factor of that trade, and what that does to the broader market, because the equities have been a little choppy lately.
And I know, Michael, today NVIDIA is not one of your picks, but it has been a pick of yours in the past. As you're waiting on these earnings, are you expecting a surprise? Because there's talk that maybe the revenue growth in the future may be way more than what people expect. And would you buy NVIDIA on a dip?
Yeah, we actually still own it, and we're big fans of it. It's trading roughly around 30, low 30 multiple right now. So for a long-term growth investor, that's not incredibly expensive. It's sold off a little bit. So, we do have a healthy position, but that doesn't mean we wouldn't add to it or trim it or whatever. But broadly speaking, we like the company. We do believe it's got great revenue growth prospects going forward, the addressable universe and its multiple business lines, et cetera, et cetera. So we really do like it. It's at the cross-section of all kinds of things going on, AI, but not only AI, but data center gaming, et cetera. And so, those are the companies, the long-term growth stories you want to own. The question just is how much and at what price. And so at this point, we're full. But the entry point is a lot more reasonable than some other tech names, and especially if they surprise in the upside this week or they give a really robust forecast going forward. I think that's the big question. What are they going to say going forward?
Right, understood. I mean, are you feeling more positive than negative? I know you have Meta as one of your picks today.
Yeah, Meta's another one. In fact, Meta's even cheaper than NVIDIA right now. And I mean, the growth, I think what scared people away on Meta with their last earnings call was the CapEx spending. But what we're seeing is this major CapEx spending going on across the board with those big companies that have the resources. And to me, that's a bullish longer-term indicator on the health of that space and where it's going, and they have the money to spend. But as an investor, you hear big CapEx, you worry about future profits, margins, et cetera. So you understand why it's sold off. But I'll tell you, again, a long-term investor, Meta's trading at roughly 21, 22 multiple going forward. That's a very attractive entry point for growth stocks. So yeah, we do like it. And I would say recently, with both respect to NVIDIA and Meta, we have added and nibbled at it to the upside.
Your fund is a 5-star Morningstar fund, right? PRPFX. Tell me a little bit about what some of the top holdings are in that and how you manage that.
Well, you mentioned two of them on the equity side, but we have a broad array of assets. I mentioned gold and silver allocations, real estate investment trusts, hard asset commodity stocks, as well as traditional growth stocks, which is what we're talking about right now. And then we have about 40%, 45% in bonds, Swiss bonds for currency hedge on the dollar, and investment grade corporates, treasuries, agencies, et cetera, to give some income and to stabilize some of the equity side. So our objective there is to beat inflation over the long term in a low volatility way without experiencing major fluctuations, but kind of a steady growth track over a long period. And so that's what that portfolio tends to try to do. And it's been around since the early 1980s, so we've been doing it for a long time.
Talk about hard asset commodities, and then, you have the Freeport-McMoRan as one of your picks if we think of copper. Tell me about the Freeport-McMoRan pick.
Well, a great example of diversification and a non-traditional growth stock, if you will, right? I mean, we think that one of the areas in the market that has not kept up with some of the crazy trading has been the materials, the energy, the commodity space. And so we believe there's going to be strong demand for copper going forward. It's used in all kinds of things in terms of industrial production. We do expect the dollar to continue to weaken from the strengths that we've seen over the last decade. And that typically acts as a tailwind to commodities like copper. And you're subject to a lot of supply-demand constraints with copper, as you are with a lot of other, natural resource stocks, where sometimes you got to find it in weird places around the world. You can have disruptions of supply, and you can have real mismatches in supply-demand. And we think that global growth has been pretty anemic the last few years, and if it ever picks up, there could be a shortage of copper supply and much more global demand, and that would bode well for somebody like Freeport, who is a very efficient operator. They're very good at reducing costs, getting copper out of the ground. They do a very good job of managing shareholder returns with dividends, buybacks, special dividends, et cetera. So for a long-term total return investor, I think it's an interesting name that's not quite as expensive as maybe some of the other parts of the market.
Broadcom's up almost 100% in 1 year, and that is a name that you continue to like. You think this still has room to the upside? How much? How long?
Yeah, and Broadcom's a little bit more expensive than some of the other ones I named, but yes, we do. I mean, I think what you run into, these companies trade rich, but they're trading rich for a reason. They're growing revenues. They have huge addressable markets and universes for their products. They're growing earnings. They're growing cash flow. And so these are stories that people want to own, especially when other parts of the market, you look at the disparity between the broader market and some of these names, and it's huge. And so you can understand why people are gravitating to them. The problem is, at what point does that trade change, or does the market broaden out? And we have seen some indication at various points this year that the broader market has, expanded out a little bit, and it goes well beyond tech stocks. In fact, I would say recently, some of the tech stocks have sort of gone sideways, and some of the other part have come on. Cyclicals, financials, et cetera, have had a decent run the last month. So there is some rotation going on in the short term, but in the longer term, these are companies that are growing. There's a reason people want to own them. And what you do is you wait for pullback or sideways trading, and you add your position or build a position, that sort of thing. I think it's interesting, your previous story about Berkshire Hathaway. Typically they don't buy a lot of tech stocks, and so the fact that they were trading out some Apple for some Google is very interesting, and that's again one of those hyperscaler types that's spending a lot of money on AI and the robo-taxi business and et cetera. So there's a reason investors of all stripes want to own these companies.
Michael, it's great to see you. Thank you so much. Michael Cugino, President and Portfolio Manager, Permanent Portfolio Family. Great to see you, Michael. Thank you. Coming up next, Options Corner, we still take a look at more Mag 7 names and a few others. Tom White highlights unusual options activity from the day. How investors are looking to trade on recent news of Netflix, Amazon, Tesla. Stay with us. We'll be right back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Watch live. Subscribe free at SchwabNetwork.com.
Welcome back to the watch list. Time for Options Corner. We analyze unusual options trades we're seeing throughout the day. This seems to be a Mag 7 show because in every segment we have something Mag 7. Tom White, host of Fast Market here on Schwab Network, is joining me, and I want to take a look at three actual options trades that you found. But at the same time, we have a market that's selling off, a VIX at 22, bond yields that have moved higher. The government I saw was buying corporates and municipals, which I thought was interesting in the Trump administration. In the meantime, Peter Thiel, I was reading, his fund is dumping his NVIDIA stake and cut back on Tesla, but Druckenmiller is rebuilding some of the tech bets. I mean, we have a lot of balls in the air, a lot of juggling, Tom. What do you make of it?
Yeah, a little bit more added uncertainty in markets right now. Those expectations for a rate cut in December don't look like they're going to come to fruition. They're below 40% right now, according to the CME Fed Watch tool. Remember, Nicole, that was above 95% chance that we were going to get a rate cut. A lot of the Fed speak's been kind of pushing back on this narrative. They're admitting that the jobs part of their dual mandate is weaker than expected, but at the same time, that inflation's been relatively sticky. The Atlanta Fed GDP now just came out. For the current quarter, they're predicting 4.06%. So that's starting to expand. We're going into the historically strong fourth quarter where the consumer spends, holiday shopping. So they're kind of bifurcated right now with a lot of the commentary that the Fed's giving. I think that's causing some uneasiness. Nicole, we're almost through earnings season, so typically maybe we'll see a little bit of a lull, but then also, work into the equation that, hey, typically we see a volatile September, maybe some downward movement in September and October. We didn't see that. Now we're starting to see it in November at this point. So, it's kind of, it's not surprising. I think that's the key thing with the S&P 500 only about 3% off of its all-time highs. But you're starting to see asset classes really start to take a hit. And Bitcoin down over 2%. We're back below 93,000 on the futures of Bitcoin. That's also maybe leading to a little bit of risk-off sentiment here today. So that's my takeaway.
There's a lot going on, and it's interesting. When you talked about Atlanta Fed 4.06 GDP, I can't even believe it.
Yeah.
I mean, that's there are a lot of numbers flying around, and that's certainly better than I expected. Yeah. And the Empire Manufacturing came in stronger, and we'll get the jobs report on Thursday. Can't wait for that. 7 weeks late. So I'm going to comb through that. All right, let's talk about Netflix. Bring it, sock it to us. Let's hear it.
Yeah, 10-for-1 stock split took effect today. It's trading about $110 a share. This stock was always over $1,000. So you'd think that would pique some retail interest. Maybe they were already buying ahead of the actual stock split. The pressure that the overall market's putting on it. Netflix still up about 24% this year, but down about 17% from the all-time highs that we saw in the summertime. It's below its 50, it's below its 200-day simple moving averages, so the momentum has been lost here in the streamer. But if you looked at their last earnings report, they guided above consensus for fiscal year 25. Revenue came in line with expectations. EPS came in a little bit light, but they had to take a charge due to the expense related to that dispute with the Brazilian tax authorities that wasn't in their projections. But overall, a decent report for this company. They're starting to prepare bids for a potential buyout of Warner Brothers Discovery themselves, Netflix, along with Paramount Sky, and then Comcast also. So that might come into the mix here. But we did see some bullish activity, and this is really short-term positioning. And they kept adding to this position throughout the session. This was out in the November 21st monthly options that expire in just 4 days. On the 115 strike calls, they bought over 20,000 of those. Paid an average debit of about 60 cents for these calls. So the break even of 115.60 over the next 4 days, that's about 4.5% above the current share price in there. So you're going to need some movement in a short amount of time. Call volume about 4 times normal daily average volume that we've seen over the last 5 trading days. But I think some speculators trying to pick up some cheap calls with the expectations that we're going to see some gains into the end of the week. And Remember, Netflix isn't immune to market moves, and we're seeing that play out here today with the stock a little bit weak.
And that was a great tease segue for our Seth Schackner piece that's coming up after this commercial break, all about Warner Brothers Discovery, Netflix, Paramount, Comcast, all the folks that are each interested in Warner Brothers. So thank you for that tease on that. What about Amazon? I mean, look, it hit that high of 258. It has since pulled back. What kind of trade did you find?
Yeah, stock's now 10% below those recent all-time highs on a really good earnings report, good, basically outlook moving forward. They saw a resurgence in cloud growth. Remember, that had slowed down to about 17.5% growth year over year on AWS. It got back above 20.2% last quarter, so that was a benefit to them. Stock did rally to all-time highs. They're seeking to raise, and they just announced it's going to be $15 billion through a debt offering. It's the first such deal in about 3 years here in the U.S. And this comes as other companies are doing the same thing. We've already had reports that Google, parent Alphabet, earlier this month sold $25 billion worth of bonds. Meta Platforms sold $30 billion of corporate bonds last month. So all these big hyperscalers that have a lot of cash on their balance sheet, billions of dollars. I believe Amazon's right now is above $66 billion as of the end of September, cash on their balance sheet, but maybe they're comfortable with raising cash in the capital markets right now due to the fact that maybe they see it as more beneficial than using the cash that they have on hand in this one. But the stock has pulled back pretty significantly from those all-time highs, but we did see some bullish activity in here also on the call side. And this was all the way out in the February monthly option. So 95 days to expiration. Trader bought 7,500 of the 220 strike calls. They paid a pretty hefty option premium, $26 per contract. That's because they're deep in the money calls that they're buying. So that break even where this trader starts to profit is above 246 over the next 3 months. That's about 6% above the current share price in Amazon. They've got big open interest that they've built up on this February 220 strike call. They're adding it another 7,500 today, but over 40,000 in open interest on that strike. That's the biggest open interest position in February. So, yeah, somebody keeps adding on to their position here in longer dated options.
Right, and last but not least, we take a look at Tesla. Kevin Hicks was telling us about the Stiefel call. I know they're also avoiding China-made, China-sourced parts. Tell us it's at 408 today. Could you add on and tell us a little bit about the trade?
Yeah, that was probably the big note out today was the Stiefel note. They put the price target to 508 from 483 on this. They keep their buy rating on the stock. And then if you take a look at what they came out with after their earnings and their investor day, Cybercap, Tesla Semi on schedule for 2026 volume production increase. That's what everybody's hoping, right? The humanoid robots, the Optimus robots, the robotaxi, the semis starting to ramp up production there. They lower the price of a couple of their models, even though you don't have that EV tax credit anymore. It's been pretty optimistic trade in here. The stock's still off about 15% from those all-time highs that we saw a year ago in December. Wells Fargo did come out with a note about a week ago, Nicole, and they've been bearish and wrong on Tesla for years on this one. They've got an underweight rating, $120 price target on it, but they highlighted the fact that Tesla October deliveries, according to their research, were trending down 23% year over year, 54% month over month, which isn't surprising now that we've lost the tax credit. But they see widespread weakness across markets for this company. But this has always been one of those bifurcating names. Analysts either love it or you hate it. But we did see some neutral to bullish activity in here. Maybe somebody trying to take advantage of the higher implied volatility levels that we're seeing in the overall market and in Tesla. Traders sold 5,000 of the December 12th weekly options. These expire in 25 days. They sold 5,000 of the 415 strike puts, collected a credit of $21.25. So that means the break even for this trader where they start to lose money is below $393.75 to the downside over the next 3.5 weeks. That's about 4.5% below the current share price. So they collected a big, hefty option premium on these basically at-the-money puts with the expectations that, hey, if it goes and stays below 415, I'm willing to buy the shares all the way down at 390, 375, that break-even level, or they just wanted to collect a lot of option premium with the expectations the stock's going to continue to rally above the 415 level over the next 3.5 weeks.
Tom White, great to see you always. Thank you so much for Options Corner every single day right here on the watch list. And coming up next, more on Warner Brothers Discovery bids, the potential mergers. Will they have to split up? All these bids have to be in by November 20th. That is coming up right around the corner. What it means for Hollywood regulators, your portfolio, what you watch. We'll be right back.
With the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street.
How far are they gonna pull this back?
Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Penalides. We're live on the floor of the New York Stock Exchange, and we welcome in Seth Schaffner, Managing Director for Strat Americas. Want to take a look at what's going on in the world of streaming. For example, Warner Brothers Discovery is up 150% in just 6 months. So let's see what's going on. I know November 20th is the deadline. Do you have a base case? What might happen? What's going on here with all of this?
Sure. Great to be here, Nicole. Look, it seems pretty clear that Hollywood's going to get smaller at kind of the top level, or if that's the base level. Warner has
That's why I took my call.
I guess
I felt like they couldn't go down anymore.
But put itself on.
But then they went down.
Paramount's been the biggest story here with David Ellison taking over. I think they actually have a pretty enlightened strategy, and it seems clear they're not going to be satisfied with just one studio. So I think Warner Brothers, probably the studio itself and its programming, its networks like HBO Max has kind of been on the block. And what just came out Friday is that there's a bidding process that's going to unfold. I think November 20th is the date to kind of get preliminary bids, and it sounds like Zaslav and his board wants to get a sale settled before the end of the year. But what was really most surprising over the weekend was that it looks like Netflix
I think they're done following
bidders along with Comcast, and so
should
there's
be
probably
a
going to be 3
support.
bidders.
That's
And,
support.
I think
Double
for
support.
different reasons, 2 of them probably are
So
not
everybody
going to
should be
be
getting
interested
announced all
in
at
those
once.
cable networks that Warner Discovery has.
Apple.
But there's also also some pretty big regulatory questions circulating around
Microsoft,
any idea of a transaction. So it's not
all
really
at once.
clear to me yet if it could get approved.
Tesla.
But it appears to me that Mr.
Amazon.
Zaslav wants to get the most
Everybody should be
for his company, and there's
That's
been
why I
a plan
took my
to split
position.
it in two.
I know what I'm talking about.
And you've got 3 big heavyweight bidders for it, so that's kind of the top level.
You know, we think about the two businesses.
no
So
video.
what are the two businesses? One is one that houses the studios and
That's why I take
streaming
my
spaces and
composition,
services,
because I feel
and
like
the
they
other
always
includes
gonna be
the
a
cable
sport at once.
networks. And, you know,
Like
the question is something
building
like
up-
Netflix.
yes.
Does it need the studios and all that?
tell you, I'm gonna show y'all the
And
influence
does
of
Netflix
$74.
face a regulatory hurdle? Maybe they don't win this just because of the regulatory concerns.
Yeah, so I think,
I'm gonna show y'all
I think
some
both
about this.
Netflix and Comcast, if they are in fact, to be
crowdfunding
bidders,
stuff.
would have very substantive
Motivation.
regulatory concerns. You know, the
Being
Paramount
resilient.
Enterprise seems to have
show y'all that
cleared
I
some
can do it
hurdles
too.
going through that to get it in the first place, and there's some sense that Mr. Ellison and his
I
team
can do
are
it too.
confident of getting that. I mean, what's most curious to me is if you're Netflix, 300 million subscribers, for sure they would benefit from Warner Brothers content and catalog. There's a studio lot there. There's a lot of operations. They're probably not interested in those TV networks. So hypothetically, if they were to get this, what would they do with those things? And I think you can look at Comcast as well and make some. I think some
Might be too early
questions
though.
around
Let me
as
see.
well. I think
Might be too early.
what the networks, what the traditional media companies are trying to get to is scale. So if you're Paramount or if you're NBC Comcast, you want to bulk up so that you can compete with Netflix. And I think that's what their strategy is all about. So having that studio and that library, would get them to another level. It's going to be, kind of sad for a lot of individuals here, including me, because I don't think we want to see, that's one of the most storied, Hollywood studios there is in this town. To see kind of another one go under, particularly to see it getting swallowed by big tech. And I think that's the basis of what I understand to be some of the regulatory concerns around Netflix potentially buying. And I think there was a letter that was sent from Representative Issa to DOJ over the past few days expressing this. And these are real competitive concerns. They really are, Nicole, because they would take out buyers for talent, for content. And, the town is going to fundamentally change and get a little bit smaller.
Zero sugar.
The Paramount story, as you mentioned, is interested in buying the whole thing, a value of $55 billion. Comcast and Netflix sort of splitting it up a bit. It covers rights to everything like from the studios, streaming movie characters, Harry Potter, Batman goes in there, as well as the HBO Max streaming platform. As you said, for the insiders, it matters a lot. And for people, how they'll spend and how they're going to watch movies and all that, does it matter a lot for regular folks?
It probably will. I mean, let me just touch on one thing you just said in terms of the TV networks, because what's interesting strategically, Disney's another case in point who doesn't seem to want to sell off its TV networks as they keep getting bigger, and they kind of still believe in it. They produce some cash flows, and their ad sales teams can probably, maybe sell ads more efficiently across a lot of these platforms, and that may be also the case, with Paramount, even with things like MTV that are gone, that come from another era. So it's kind of an interesting, differential between the two. Netflix, by the way, is trying to build its own advertising business, so maybe the networks could stick around for that. I think it's an interesting question to look at. But yeah, I mean, I think it will get smaller ultimately if we're 5 years from now and out from now or something, and one of these things is bought. Consumers will probably have less choices. Some of these services, you can imagine Max being bundled in, with Paramount or combining Paramount Plus with some of the other apps that are out there.
Man, they are pulling Weibo back.
It's possible that consumers would see choice. They'd see less, consumer choice. There are probably some people that think that's a good thing because streaming choices are
messed up,
so plentiful right now. They're kind of confusing for anyone. So a lot of open questions around that.
Because this is like the first, they have to get it in by November 20th for these real first round bids. And the idea is to get it done by the end of the year, which really seems pretty fast. Do you think to get it done by the end of the year? I mean, the stock is already shooting higher, as I mentioned.
continue to rise. And does this deal get done or really potentially sort of in place the framework of the deal by the end of the year?
Maybe the framework, they can announce it and have key terms, but getting all the approvals necessary, particularly if there's FCC issues. I think, Comcast is some of these entities that are listed as buyers, Comcast and Netflix, probably would have more regulatory, challenges for different reasons, some of which are just purely political, than the others. So probably not. No, does all the papers get signed? No, and certainly hope that the services don't get merged in some sort of confusing manner. But, Paramount's got some pretty serious capital behind it, and it's not just stock, it's private family and private equity in there. So I think if Mr. Ellison is motivated to move quickly, yeah, I think it's plausible to see that for sure.
All right. It's great to see you, Seth Schachter, Managing Director of Strat America. Thank you so much for joining us on the show. Coming up next, we'll break down NVIDIA, the earnings, and, really how it could be the most market-moving event. I mean, I know jobs is big, but NVIDIA is big. We'll be right back.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs.
I want to leave those eat.
And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We welcome in Melissa Armo, founder, owner of the Stock Swoosh, to talk about NVIDIA. The earnings are due on Wednesday, and I know you're actually shorting some names on Wall Street rather than buying dips and such. So what are your thoughts on NVIDIA? Because so many people love NVIDIA and they have some big hopes, but you think there may be a sell-off that goes along with it. Tell us.
Well, the sell-off's happening right now. We had a 100% reversal today, and so maybe we'll sell off before NVIDIA. And if NVIDIA earnings end up gapping down Wednesday night into Thursday, or creating a gap down in the market Thursday morning, we could continue to sell off the rest of the week. I think it's going to be a wild week for investors. Typically, again, a very busy week, lots going on, data points, NVIDIA, and then also it's a heavily traded week this week because next week a lot of people are going to be off with the holiday. It's a short week. So anybody and everybody that wants to trade or do anything or sell positions or buy positions is going to be looking to do it on market moves and stock moves this week. And I think the interesting thing is we did have a sell-off last week too. We've been selling off actually since the last time we made new highs, and I'd have to actually look at a calendar and count, but this might be one of the longest stretches we've had since April that the market has not made a brand new all-time high, because we've had a very bullish year since that tariff move when we had the stall on tariffs in April.
And so while some folks think Jensen
Time to get off
Huang
the
delivers a 12th straight double beat, and you have analysts predicting a beat in the raise, have you been a fan of NVIDIA from its run, its April lows of $86 up to 212, or have you been skeptical on this
Short breaking.
It's not like I've been crazy bullish and stuff or crazy bearish at all this year. I've played it in both directions and played it well. But the fact is that sector overall has gotten a beat down recently. People think that some of the stocks are overvalued. Whether or not NVIDIA is one of those, I don't know. We'll see. But again,
they're pulling everything back.
Bigger moves than NVIDIA did when you look at it. And it really kind of was lackluster actually on the last earnings. I think it gapped up and failed on the last earnings over the summer. So it hasn't been performing as well as some of the stocks that have been rallying, namely Apple, Google, Amazon, over their earnings. So again, when you look at the stock overall, they could say something fabulous, they could say something great for the future, but it doesn't mean it's not going to rally. It could fall. People are still take profits. And again, if the market wants to continue selling off, it could pull NVIDIA down.
Why everything is falling, Amazon's all down. What's that?
We've seen that happen with many stocks and earnings in this quarter.
Is that hope for the market?
To your names that you're shorting here, but if NVIDIA comes in a little stronger, does that give you a different big picture?
Again, it depends how much we sell off, I guess, at this point now, between now and Wednesday. So let's say we sell off the rest of the day. James, the close, we're probably going to do that. And let's say we gap down tomorrow. What if we have a sizable gap down tomorrow? Because we could, actually, because this is a big reversal today, actually. I don't think people realize how bearish this move is today. Actually, after Friday,
Bitcoin also had a death cross. Bitcoin also had a death cross, and that's been trading with tech stocks, sort of risk on, risk off mentality. And so Bitcoin too has now broken down to some new lows in the 92,000 range. So that tells you something, that there is less of an appetite. Now, the names Dell, Oracle, and Palantir, in fact, you think these are heading lower. You think these are short. Is that right?
absolutely. And again, all of them are selling off too. When you look at some of these charts, again, you can say they were extended to the upside. Oracle particularly was one of those maybe on the earnings that it had such a monster move on the earnings, but it's done really nothing bullish ever since then. It's done nothing but sell off. Palantir is a wild stock to trade, very wild, whether you're going long or shorting it. You got to have the stomach to trade that, whether you're doing options or day trades. But that of the group, I would say, is another one that really has a lot of room to move to the downside. And certainly that's, again, in the sector that's going to be looking at, I'm going to be watching what NVIDIA does with that too. But again, when you look at this sector overall, it's really compared to where we were, say, 6 months ago and where we are today, it's almost shocking the moves that some of these things have had off the highs. And I think that's very scary for investors, especially when the long-term growth opportunity, which long-term I'm actually bullish on a lot of these stocks. I'm bullish on this RR for long-term. I'm bullish on Palantir long-term 50-50, but I'm also bullish on NVIDIA long-term. But that doesn't mean these stocks could sell off another 20, 25, 30% before they make new highs again. And that could pull the market.
Shorting them now. You're shorting them right now today. You think they go down 15, 20%. I mean, then you'll buy them back.
Yeah, I don't think it has to 20% this week, but as a short-term trader to do as a day trade or a weekly option, yes, I think they're lower. But I'm saying that if we have a large gap down in the market Tuesday, Wednesday, Thursday with NVIDIA, sure, we could be more than 25%, 40%. I mean, I'm telling you that people are not ready for what could happen in the next 10 days more.
Yeah, understood. And I didn't mean that you meant it this week. I sort of meant that you had a big sell-off. I actually was thinking for a longer period of time. I mean, you're talking about now a couple weeks or something, but I was thinking that you were thinking this
I'm trying so hard.
Break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24 hours support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Hey, investors, you know the market moves. Schwab is here to help you with it. So, whether you're buying, selling, holding, or playing, whether it's ETF, 401k, saving, spending, or retirement, you can count on Schwab for market insights, live support, powerful trading platforms, 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
Stand by us live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
They're gonna pop somewhere.
Schwab Network and ShopNetwork.com. Welcome back to the office. I want to bring in our panel, John Blank, Chief Equity Strategist, Economist, and Zacks Investment Research, and Eric Winograd, Chief Economist at AllianceBernstein. Great to see you both. Thank you so much. This was 43 days, the longest in history. It mattered a lot, John. It mattered a lot to the people who weren't paid. It mattered a lot to the people who had SNAP benefits. It mattered a lot to people who maybe had some delays or there were no votes in the air. John, your thoughts, and why does it matter now?
Nicole, the biggest thing is we lost 2 dozen data sets over 43 days, which includes the entire month of October. And this puts the Fed on their back heels in terms of trying to establish an uncertain environment that began with where to go with monetary policy. So the real issue here is if the federal shutdown consequence is a pause in the federal funds rate at the 9th and 10th December meeting for a couple months while the Fed sorts this out. And I would bet that is the major cause.
Well, Eric, I mean, that is what it's looking like. We were talking about a more than 90% likelihood of a cut in December after the last Federal Open Market Committee meeting. You had Fed members really not on board with another cut. Schmidt was somebody who went flat, and others were contemplating not doing another cut anyway. Eric?
Yeah, look, it's a committee that's divided. I think there are some members who would prefer to stay on hold. I think equally, though, there are members who would prefer to cut. It would be easier for them to make that determination if we had a full month of data, but we are not going to get functionally any reliable data for the month of October. We won't have some of the key releases that they would normally rely on before the December meeting. So it does make their job more difficult. That said, the reason the market has adjusted its pricing is largely because Chair Powell, in his press conference at the last meeting, said that December wasn't a done deal. The market has adjusted accordingly, and the Fed goes into that meeting with a lot of different options and options available to it without sort of going against where the market is.
Oh my God.
The jobs report that comes out on Thursday, you think it has any merit? And some of the other delayed numbers that we're getting, construction, factory orders, international trade. Eric, it doesn't matter at this point. It's coming in 7 weeks late.
I mean, it
get in a different environment, a more adverse environment from an IPO perspective, and people may just shelve the listings they would have done otherwise. So it is also going to create a kind of tight market, a spot where there's going to be too many people trying to get the regulations undone from the snafu. This can also create some kind of weird seasonality next year with the IPO market that nobody really understands. So it's definitely an issue, and it's not going to be really clear because of the Doge situation, already the Heritage Project 2025 push to get even more people out of these groups, and then all the different heads that have come in during this year because of the transition anyways. It just makes things more complicated. That's not good for the stock market.
I mean, I think at least 24 key reports were delayed, according to Oxford Economics. I saw that in one of the sets of notes there. And when we think about here, Eric, the big picture, I really wonder if the government really got to see things with some clarity. For example, they're making people reapply for SNAP benefits. Maybe, just maybe, it was the government's opportunity to filter out, in a Doge fashion, some things. Is that possible too?
So look, I think it's appropriate to focus on the people whose lives were actually impacted by the shutdown rather than on the financial markets. You know, we've been through shutdowns before, and it always comes out of the wash eventually. The market will recover, the economy will go on. These things tend not to have a particularly durable effect. And, you know, to your point, you said that there were 24 key releases that were delayed. There aren't 24 key releases in any month, right? Just because the government releases data doesn't make it important. The numbers that we're focused on are fewer than that, and they were delayed, and that is impactful. But again, we've been through shutdowns before, and they tend to matter much more in the short term than they do in the medium or longer term. That'll be the case here too. It complicates things now. 2 months from now, we'll have forgotten about it altogether.
Yeah. And I'll give you the final word here, John, as we take a look here in the big picture. What do you think about next year? I mean, what if the Fed cuts or doesn't cut? The cut, people think they should cut. They're worried about a slower labor market. They think they shouldn't cut. I mean, GDP from Atlanta Fed came in at 4.06. Whether they cut or don't cut, could it be a monumental mistake if they cut or don't cut? John?
Well, Nicole, the basic issue here is people are trying to wade into a mandate, and they're saying, okay, we're going back to basically the weak employment mandate. The problem here is it's a push-me-pull-me situation. The unaffordability, which has been the key issue, is 25% overall rise in a lot of prices in the United States, with an ongoing 3% CPI rise, or PCE rise, however you want to look at it, is fundamentally sticky. It's going to continue to push all of the job possibilities, all the upside of the job market to the side. So I think, the Fed is really beginning to recognize that their
social journalist, streaming live in Boston. Schwab Network, streaming 24/7, any screen, anywhere. Free. SheldronFrost.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SheldronFrost.com.
Oh, Chad, give me 1 second. Let me see if I can do this on the computer. I want this set up. I want that badly. Let me see if I can get this on. Hold on for a second, Chad. I'm trying to move money to my card. I've been trying for like forever. Give me like 1 second. I'm gonna do this as fast as possible. Come on, do this for a living, y'all. I do this for a living. I need that money. I need that damn bread. Give me 1 second, chat. Gotta move this money around.
Good afternoon. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Payton, coming to you live from our Chicago headquarters.
And I'm Sam Barnes, coming to you live from the floor of the New York Stock Exchange. Let's take a look at what is coming up on today's show. We'll check in on the housing market and discuss the pros and cons to the proposed 50-year mortgage and its impact on potential buyers and the overall housing market. Later, we'll be joined by the CEO of National Vision as shares are rallying in reaction to announcements from its investor day today. And in Options Corner, we'll check in on Home Depot, which will report earnings tomorrow before the opening bell. Marley, take us through what you're watching today.
Thanks so much, Sam. Shares of Alphabet hit a record high after Berkshire Hathaway
Almost on y'all.
bought a stake in the
1 hour left in the market.
More above its company purchased nearly 18 million shares of Alphabet during the third quarter. Those worth about roughly $4.9 billion right now. Dell under some heavy pressure today as well. One of the worst performers on the S&P following a double downgrade from Morgan Stanley. The firm downgraded several hardware names today, saying that the current memory supercycle is going to create mounting margin pressure across the hardware sector. And then on the flip side of those potential headwinds facing those hardware names, memory chip maker Micron hit all-time highs today before turning negative on that bullish sentiment in the memory space. Rosenblatt raised its price target, citing limited DRAM supply growth through 2026 and increasing demand as key factors behind its positive outlook. We'll talk through some of the winners and losers in this hardware and memory race here. But first, let's take a look at where the markets are as we near the end of our trading day. We are seeing quite a lot of red, really under pressure here. The S&P trading down 1/3% right now.
You're in that chat. She called us a bum. We have our own business now.
24,666 right now.
This ain't our final form, alright?
26,452, and the Russell 2000 down even more, about 2.1%, 2337. For the dollar, we up slightly on the day, 99.49 here. For gold, we're 2% lower, 4,011.10 a troy ounce. Crude oil still under that $60 a barrel mark right now, down about 6/10 on the day.
No, it's just that I was getting sleepy and I was waiting for this to move. And while I was thinking all day, you know, you get a little sleepy, you know what I'm saying?
Stories are that caught her eye today. Sam?
Right, you business. Alright, I'm doing it now, you know, I was thinking about what to do. Doing it now.
Shares in Albemarle here today. They were these shares up about 10%. We're off the highs now, but still around 3.5% higher, hitting a new 52-week high today. A couple of reasons behind this. Albemarle has exposure to Chile, which has just held presidential elections over the weekend and is now going into
Oh my God.
So one of the
I thought the government shutdown was fixed.
is expected to be favorable for the mining space. So Chile is the second biggest lithium producer globally.
Alright, there we go.
Also helping out the space.
There we go, there we go, I got it.
The big Chinese producer.
Oh my God, it's not letting me do it.
Group is now forecasting demand of 30 to 40% in 2026. So Albemarle
Give me my
shares
damn
have
money.
been rallying about 20% over the last 5 days and are up about 45% year to date. Now shares in LAC are also surging
Nothing I can
today.
do.
One company that uses lithium $183 and keeping a buy rating on the shares. The analyst expecting some headwinds for the auto sales after the expiration of the EV tax credit, but thinks Tesla's making strong progress on FSD and robo-taxis. I've also been monitoring some of that Fed speak today. Governor Philip Jefferson suggesting that they should approach with caution after the last 2 rate reductions, while he says the Fed's policy stance is still somewhat restrictive.
That's a rejection right here off this trend line.
Underscores the need to proceed slowly as they approach neutral.
But with time, though, I think we will be all right.
Its expectations for a rate cut, suggesting it
They
could
still
be
a new stock.
now. But for now, I'll send things back over to Marley.
And today is just a red day in general.
Today's top movers.
Thanks so much, Sam. Like you mentioned, Jenny Horn, co-host of Next Gen Investing, joining us right now to talk about some of those top movers that we were just discussing. Let's start with Alphabet and Berkshire Hathaway's sort of rare venture into the tech space with this stake that they've taken. We are seeing Google move.
It's not letting me put money on my
Yeah,
account.
so I mean, Berkshire Hathaway did
I almost
disclose
want to call
its
the bank.
position in
Be
Alphabet
like,
in
"We
the third
doing
quarter,
something
which
else."
is their only new investment over the period. But they purchased about 17.8 million shares of the Alphabet company, of course, per an SEC filing. But that stake in Google is now worth just shy of about $5 billion, making it the company's 10th largest investment. So this is kind of amazing to me. It has 1.8% roughly of its total holdings. But you consider the other top holdings, like Apple does still remain its top holding. It has roughly 23 to 24% weight of the overall portfolio. Other top holdings include American Express, that's roughly 19%. Bank of America, between around 10 to 11%. And so even though that they've trimmed their position in Apple back about 15% this year, it's still the largest by a lot. So
This is
Alphabet
very
only
stuff,
falls
person.
10th in terms of their largest holdings. And they do have roughly 82 to 90% of their total portfolio in those top 10 weighted names. But I do think it shows right now that even though it is it was a huge, it seemed like boom for the shares today, we pulled back a bit here because still, I know everyone's saying that, the
Yeah, that's me right
company,
there.
Berkshire does not typically invest heavily in tech. They've been sort of one to stray away from that sector in quite some time. Apple's still their largest holding by a lot, even though they've trimmed and, adjusted accordingly. So I would say this is, one investor, one firm's way of thinking about Alphabet, but definitely providing at least a note of confidence to start this week off.
Yeah, certainly. As seeing that move to the upside, still up 2.8% on this news here. I do want to move to Tesla, also trading higher today. I know Sam mentioned at the top of the show they did get that price target increase from Stifel, but that is not the only headline that they have going today. We've been talking about Tesla quite a lot.
We have, and actually Tesla is also one of our lone bright spots of the session. I would say mostly tied to the lithium story as Sam just laid out, but also some reports we got from the Wall Street Journal. It's now requiring its suppliers to exclude these China-made components in U.S. manufacturing. Now, they've been trying to reduce the dependency on China-made components for U.S. cars ever since the pandemic. This has not been a story of just this past April. It's been more long-term. But right now, they've encouraged these China-based suppliers to make components elsewhere, like in countries of Mexico, for example. But China's still a major producer of auto parts, and that's an undeniable fact. It includes chips, batteries, and materials that, of course, go inside cars. And we've seen that geopolitical fallout really change the way the auto supply chain has been able to function. So Tesla specifically has been very urgent in pursuing this China-free strategy. But again, it's been more of a long-term strategy that's been expedited by some of these tariffs. And more recently, car makers have struggled to from 144. Now, they said that they believe this memory super cycle brings downside risk to hardware manufacturing earnings as we, of course, head into the new year, saying this cycle is driving inflated input costs amid tepid AI hardware demand trends. And so downgrading a number of these global hardware names, saying that these lower gross margins could lead to negative earnings revisions and multiple compression factors. But they also did include HPQ, that was moved to underweight from equal weight, also downgrading HPE to equal weight from overweight. But all three, if you look at all three of those names, they are major players in IT hardware solutions. But as far as enterprise offerings, Dell and HPE command that space for like server storage, networking, and hybrid cloud solutions. HPE is more focused on these user end devices. So it's interesting to me. It's not like they're all the same type of company, but they're all seeing that same, at least in this analyst's opinion, weakness ahead that could be driven by just right now tepid demand trends, which is not this narrative we've heard around everything, of course, linked to the memory super cycle. But these are different players than like the true
my bad, y'all.
memory companies. Like I know we're talking Micron
My bad,
next,
y'all. I had to
but
use the restroom.
not so much the case of Dell. So the memory super cycle is going to be a boom for some, perhaps not
There we
a boom
go.
to others, at least in terms of Morgan
Quick
Stanley's
market
opinion.
update.
We are starting to see some of these firms sort of try to decide who the winners and the losers
Which-
might be in this AI race.
They're
And
just
they've decided
falling,
that
but-
hardware in Morgan Stanley's case is not going to be favored
This is,
because of that
I'm
memory
thinking
super
rejection
cycle.
up
Which
here
leads us to Micron. You know,
and
earlier
fall.
I spoke about
Oh,
Micron.
oh,
I
never
spoke
mind.
about
They could
Micron
also
all
break
day
out.
and
I'm in a
one of the
call.
potential winners.
I'll let you know that
But
right now.
Micron being dragged down after being in positive territory by this tech sell-off we're
I'm
seeing.
looking for
You
them to
know,
bounce
Nasdaq
at
being
this.
down
At this.
on the day here. But
I wish I could buy
Micron
more
had
right
some
now.
positive moves from that bullish sentiment there and other bullish sentiment.
They did. So Micron shares did touch a new all-time high today. We've pulled back now about 7% from those levels. I mean, and keep in mind though, Micron is a name that's up 186% roughly on the year. So it's had a pretty phenomenal several months, but more notably, really September, August, we saw this revived interest in a lot of these hard disk drive components. But Rosenblatt today with a more optimistic approach, $300 price target from 250 with a buy rating, saying DRAM demand is accelerating not only due to AI accelerators need, but also from these AI models being used at network edge, including things like PCs and smartphones. But the firm, which is increasing their estimates on a lot of these DRAM and NAND prices moving at a faster pace, does continue to actually recommend buying Micron here, given the fact that supply growth, they said, is still constrained and they still see upside potential. So this name commands 40 buys. There are four holds and one underperform, but the street high is 325. So this would then easily put this price target at the higher end of the overall range. The average right now is roughly actually $200 a share. Obviously implies downside.
Oh,
from
they just
overtrading,
bouncing right
but
here.
This definitely puts them on the conviction.
This don't
end of
mean they
the
overall bullish.
spectrum,
They still
which I think is
bearish.
encouraging. Again,
They just
even
having
though
to balance
we've
their
erased
support.
now about 6-7% from the highs made just in today's session.
It is interesting too in the
Just having a
midst of
bounce
this
right
tech
here.
pullback that we've been witnessing over the last couple weeks here.
After
how some of the firms are starting to
hours
come
of
out
falling.
and say we think this is going to be a beneficiary, we think this is going to be
Hours
a
of
loser,
falling.
we think this we're neutral here, and we're starting
Now
to
you
hear
getting a
more of that
bounce.
commentary.
It could be a
Micron,
trend reversal
in
though.
their opinion, set to be a winner.
If it
here.
is, you need
Morgan
this
Stanley also
support,
thinking it, but still
this
pulled down
resistance to
broadly
break.
by the market here down to 2.5%. Jenny, we appreciate you breaking down those stories for us. That's Jenny Horn, co-host of Next Gen Investing here on Schwab Network. And I do want to send it back to Sam though to find out what we have coming up in the show.
Well, Marley, Rebecca Walser will join me on the floor of the New York Stock Exchange here to discuss the recent market volatility and what the delayed data releases could mean for the Fed next month. Market on close.
They ain't getting that much volume, but just out of nowhere, if they get a surge, it's gonna print.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches, all at your service, all so you can invest your way. Sounds nice, right?
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern,
to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
It's not easy being the one everyone counts on to keep your operation running. That's why at Granger, we're here for you. With professional-grade industrial supplies and fast delivery. Call, clickgranger.com, or just stop by. Granger, for the ones who get it done.
To go in the session for this Monday, and we are dropping like a stone, it seems, losing altitude throughout the course of this session. We've got the S&P 500 down at 6645 right now, 1.3% lower. The Nasdaq's doing a similar thing as some of the air continues to come out of those tech stocks. We've got most of the Mag 7 actually in the red today. The Dow Jones also feeling it, down 1.4%, and the Russell 2000 is the underperformer here, really feeling the pinch, down over 2% in trade today. So we've got red arrows across the board today as we are very much a risk off as far as the indexes are concerned. We've got a lot of moving parts, of course, off the back of a pretty volatile week. In fact, the VIX has just picked up. We're above 23 right now. So obviously we continue to see that volatility in the market. We've got the US dollar.
I'm just trying to see how far they're going to go down.
Crude oil is taking a step back after being initially high.
Before I add more on my position.
Bitcoin is tracking lower. Look at that. We're at levels of 91,000 now. So we're continuing to see risk off in the cryptocurrency as well. The 10-year yield is now at 414. So obviously we've got a lot of data that we're going to be passing over in the next couple of weeks coming from the official government numbers, and then a lot of Fed speak we've been listening to this morning, Jefferson as well as of course a lot of earnings to pass over in the coming days, particularly from some of the tech players, Nvidia being the standout, but then some of the other cybersecurity names and retail. So technology is down at 2.2% right now, so that is really feeling it. So is financials down over 2% as well. Communication services down around 0.5%. Consumer staples is doing similar thing.
Look at that balance right there.
Down 1.3. And if we take
It's like Frost has a crystal ball, right?
Utilities has interestingly been a little bright spot today, just sitting up about 0.5%, but the rest are down. You've got energy that's lower by 2%, no doubt, tracking those oil prices on the way down as well. Real estate down 0.7, industrials and materials both down over 1% right now. So as we can see, it's a pretty risk off across the sectors, and then we've got a bit of a mixed picture, as I mentioned, for some of the Mag 7 mega cap tech as well. Nvidia is lower, about 3% ahead of its earnings, even though it's got, of course, a couple of price target boosts ahead of this, and of course, a lot of analysts looking quite bullish on this name. But Alphabet is.
I don't know how far they can be bullish. Let's see.
Attention today off the back of this 13F filing with regards to Berkshire there, but the rest are underwater. We've got most of them down over 2%. So that's sort of the damage report, you could call it, I suppose. Let's keep the conversation going and join me here on the floor, Rebecca Walser, President Walser Wealth Management. Thanks so much for joining me. What do you make of the action we're seeing today? Because we've certainly lost some momentum throughout the course of the session.
I'll tell you, the mood here seems very subdued and quiet, right, Sam? It's a Monday, a cold Monday in New York City, and it's not a happy day. You know, I think Jefferson's comment today at Kansas City just really underscored that the Fed is in a rock and a hard place. And really, they don't have the data. So my contention is, and also if you look at the actual market odds, right, we had over a 60% and approaching 70% probability of a December 10, 25 bip cut. And now we're seeing that has shifted. The majority is now 55% that we won't get a cut at all, and that only 44% probability that we actually see a 25 bip cut. And what I have noticed is a lot of the governors, a lot of people that are speaking are sounding very hawkish. And I would put Jefferson's comments today, the underscoring the need
no volume. Come on, a little bit more volume.
Slowly, it's hawkish, but
then it'll be a breakout for sure.
Pocket. They have the data that's coming. So we have
gotta hold that right there.
Numbers for September coming out on Thursday.
Break that, I'm taking a loss.
That we'll get before the December 9-10 meeting. And I think what they do is that they can say, oh, we've gotten more data and it's not good for the economy. We need to become more accommodative. And they might be able to pull more of their members towards more dovish than hawkish. The problem is that they are facing dual mandates. And you look at the layoff situation, like Verizon announcing the largest job cuts ever in their history just last week. You're looking at other large employers announcing very large layoffs. So they're dealing with that, and they want to accommodate that, but then they're also dealing with the sticky inflation, the tariff policy being implemented.
and all of these things. So they don't really know, and really Powell doesn't have a consensus. If you look at the 19 members last month, only 10 were, really in alignment with an actual cut. So that means that you have a very divided board and group, and he does not have a consensus.
Wow.
And so unless there's clear data around which way to go, we're going to have a division, and it's going to be difficult.
Yeah, I suppose the division is no surprise there. I mean, you've got Jefferson, as you say, who's sort of as steady as she goes. You've had Collins and Schmid, who have
Need a rejection right
said
here.
that they're a bit reluctant moving forward. Kashkari sort of just sitting on the fence. So yeah, it's going to be a very interesting meeting. Let's see what the data tells us. But yes, there has been a rethink in the market. I mean, if you take a look at the CME Fed Watch tool, we are below 50%. So I mean, it could go either way. It could be quite a close call come December 10th. But what if the earnings holds up? I mean, what if we hear some good news out of Nvidia and from the retailers this week about how consumers are spending?
I mean, I think that will be positive.
Come on, show me the power. I loaded the
They just
boat.
need more data.
Show
They
me
need
the
to
power.
be able to plant their flag around something that is definitive, and that's the problem. We have competing data, right? We have slowdown in the jobs markets, but we still have sticky inflation.
Yeah,
numbers
rejection,
that
boy.
and we are also missing numbers from that, right? Because we only got as you know, we only got the COLA adjustment for Social Security, and that's the only reason we even got data for Q3 on the CPI. So I do think that they're looking for something that is very transparent. I think Nvidia, after the bell on Wednesday, will really help.
But they're in the same
Investors
spot.
I'm noticing are going from greed to fear very easily. Like
That's
this
just them
is a
testing
needle that
it.
is moving very, very quickly, and it's almost like it's a battle between the fear of missing out and the fear of, is this overblown? Is this not really going to live up? You've got a lot of articles coming out talking about an AI bubble and all those things, Sam. So there's a lot of consternation back and forth.
Let's talk about
Hey,
that.
Meta's
I
under
think the last
600.
time I had you on, I referred to the front page of the Wall Street Journal, and we were talking about that circular financing. I want to refer to the front page of the Wall Street Journal once again today because they've got a front page article about just the spending right now and the debt, the eye-watering debt levels as far as how much some of these
Why should be
companies are actually
bouncing?
borrowing to fuel their massive AI ambitions and this huge spending plan that they have. And if you look at the 2024 numbers and then the graph for 2025, it's quite significant. And one line that really sticks out to me is how they're spreading the risk, because what used to be initially something that they could fund from their own coffers is something that they're now turning to debt and private equity for. And basically, this is like sharing the love kind of thing. I mean, what do you make of that?
Well, I think the hyperscalers were primarily funding from cash reserves and cash flow. So for them, I think Oracle really turned the table. Oracle's the one that came into the mix and said, hey, we don't have this investment. We don't have this capital. We're going to either raise, we're going to borrow, we're going to do whatever. So obviously Oracle was sort of the beginning of that. And that is a little bit alarming, because when you do connect the dots, Sam, and you say, oh, this one is paying, OpenAI is paying, this one is paying, this one, it is very circular. It is bubble-esque, and I would call it prickly. Prickly in the sense that we don't have true monetization yet, and so when you have these massive R&D and CapEx expenditures into something that's new and yet not yet fully monetized, it can be bubblicious, and that is problematic. And so people now are aware, though, and that's something that we can now start to dissect and digress and really say, okay, what are you actually able to raise? What are you doing from your just revenues that are just being generated from AI-related things? I mean, it can't just be ChatGPT. It has to go beyond that for the evaluations that we're having. The other thing I know I mentioned to you before, I was so happy to see utilities up. We have valuations that can't be actually realized until we get more energy. So that's another problem that we're going to keep running up into the energy glass ceiling. And until someone can address that dead on and say, this is going to be this new source of data center, electricity and AI chip electricity and all of these things, we still have that energy ceiling, which is a big, huge problem that no one seems to want to really talk about.
Yeah, it does look like some of the more sort of influential kind of tech leaders are sounding the alarm, or that at least bringing this into the conversation. And I know Jensen Huang has touched on that a lot, and he's made the comparison with China as well. But getting back to sort of the 30,000 foot view on
All right, we need a
markets
bounce right
now,
here.
I mean, we've heard some sort of new bullish calls, the likes of Morgan
There's my
Stanley,
bounce.
Mike Wilson today, the S&P 500 looking for a 7,800 by end 2026. I mean,
That's my trend bounce.
to these kinds of numbers. I mean, there was
Like IWM, bro.
where would be year end, and we're just sort of weeks away.
That rejection look, it was scary, right?
Exactly. I think to 7,800 is absolutely
Just hold on
perfection
for a
and
little bit.
actually exceptionalism. Everything
this
has to go
support
exactly right.
is really right
Everything
here.
they say AI is going to do, it has to do that plus more. We're not at 7,800 by the end of 2026, barring any kind of economic global disruption, which I believe is on its way. Macroeconomic disruption, definitely China, Japan, there's a tiff there going on right now that's kind of spurring out. So 7,800 is an analyst pricing an absolute everything is real, everything is going to come to fruition, everything is going to be streamlined, and it's set straight up into the right graph, and I do not see that happening. And the frothiness and the prickliness, I'm describing this as a prickly feeling, like it's 2 steps forward, 3 steps back, a step forward, a step back. Monetization is difficult, and when you've got monetization in a process where you know there's a lot of issues, energy being one of them, it can't be perfect. It can't be perfect. So I think it's a mistake to go out and tell the public this is what you should expect, because as little things happen, we lost 2% on October 28th, and people were going to extreme fear.
Look at that bounce right there, boy.
There's no
I'm talking about.
foundation of reality that this is really, really valuable and tangible, and it's worth something. And we let it show you. It's all
Now we just need a real breakout.
Futuristic, and for that reason,
Need
people
tech
do
and
not
everything to
have
rebound.
to participate. But actually, oh my gosh, I can lose 2% in a day if China says they're going to be protectionist on rare earth minerals. Let me pull back. I'm going to get really scared. So you're not going to get straight to 7,800 without a lot of machinations of investors saying, oh my gosh, this is a scary ride.
Yeah, and what do you make as we're sort of on this whole theme of 13F filings, particularly around what Michael Burry has been doing with respect to some of his posts and sort of accusations throwing, talking about what the hyperscalers have been doing and that bringing that into question around sort of depreciation.
This volume is so weak.
Credence to all of that as far as the conversation that's now being brought in.
It reminds me
Look
of
at
the
that.
law, because I'm a lawyer
No
too.
volume.
So Michael Burry, he's obviously saying is like,
That's
look,
the main thing
these
to
chips
trade
are only 2 to 3 years. They only have really useful life of 2 to 3 years, and they're being
You gotta
depreciated
have
over 5 to
volume
6
and
years. That's
momentum.
a big problem. But generally accepted accounting principles, what we call GAAP, it can't keep up with AI, right? This stuff is not new. This is all brand new. We have no idea. The new generations, successive generations that are coming out are replacing the old generations, and GAAP doesn't change that fast. So to say it's fraud when they're doing what generally accepted accounting principles are, because the utility
They
of
trying to
AI
bounce,
itself
though.
is going, becoming
Just
obsolete so fast.
slowly but
It's a
surely.
little a bridge too far for me. However, his
Tomorrow,
point is not invalid. What he's saying is because
might have
you
a
are
rally,
depreciating
boy.
these things
Let me
so
see,
fast in their
boy.
useful life, you really do
I say
have
that 'cause
less
everybody
earnings and less revenue than you're
everything
saying,
went
because
down.
you should be depreciating these assets. What's interesting is
trying to
that
rally
he's
now.
now closing his hedge fund.
They trying,
At the
but
end of
they
the year,
ain't
he's liquidating, and he basically said, I do not agree with the valuations of stocks. I haven't agreed with it for a while, so I'm done. I'm liquidating. And that is a massive statement for someone like him to say.
Yeah, and it's certainly something to pay attention to, just given obviously how high profile Michael Burry is. But always a pleasure speaking to you, Rebecca. Thank you so much for joining me here on the floor, albeit on a down day.
There's no rejection on the VIX.
Thank you so much, Rebecca Walsall. Walsall Wealth Management joining me here on the trading floor at the New York Stock Exchange. Marley, I'll send things back over to you in Chicago.
Thanks so much to Sam and Rebecca. Coming up next, we'll be taking a look at the housing market, discussing the proposed 50-year mortgage, and if it hurts buyers more than it could help the overall housing market. We'll discuss that coming up. We'll be right back.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of
floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis at the New York Stock Exchange. Some big news today out of Novo Nordisk, the company announcing that it's cutting its direct-to-consumer prices for its Wegovy and Ozempic products. Existing cash-paying patients will see a price drop from $499 per month, which was already reduced once, now down to $349 a month. They also announced that they're launching a temporary introductory offer that will allow new cash-paying patients to access their two lowest doses for $199 per month for those first 2 months for those low-dose starting numbers. Now, I do want to take a look at how we're performing today. Novo higher on this news that they are trying to compete and gain some more market share against Eli Lilly, which has already created a deal with the Trump administration to offer some of its competitive products on Trump RX. They are under a little bit of pressure today. Amgen, another potential competitor in the space, has its own GLP-1 that's in phase 2 testing right now. They are more than 1% higher today, but this semaglutide race continues to fascinate. You know, recent research saying that 1 in 8 Americans, adult Americans, are on a GLP-1 right now. So certainly a market that is rapidly growing and one we'll keep our eye on. But I do want to send it back to Sam in New York for our next interview.
Thanks so much for that, Marley. Well, it's time now to talk about the potential of a 50-year mortgage. So joining me now is Noble Black, real estate broker, the Corcoran Group. Thanks so much for joining me. What do you think of this now that we've had about a week to digest this headline?
I think I'm somewhere in the middle of what the sentiment is out there. Some people are saying it's the worst thing in the world. Some people are saying it's going to totally transform things. I'm somewhere in the middle. I think it's nice to have another tool. If it makes that difference for a marginal amount of buyers to be able to get into the market, fine. I don't think it's the best tool. I think it's something that's going to be problematic for a lot of buyers in terms of not building equity, taking forever to pay off a home. But look, if that's something to them, I think it's fine.
As a broker, what's the demand been like from people out there?
So there's demand for more affordable housing in general. I work in New York City. I do a lot of high-end stuff. But in New York, even in a good market when rates were lower, 50% of our deals were all cash, right?
Hey, SheldronFrost here. Hey, is this the bottom? Am I catching the bottom of the spot? Hey, come on, let's get that money. Take profits, baby. Hey, watch out. Take a loss if you have to.
Getting that first step into a home. Everything from the housing prices being so high to just general affordability with maintenance, insurance, all those general carrying costs.
Yeah, just give us an idea of exactly how this would work because, you know, to my understanding, it would allow you to save money sort of on a monthly basis or however often you pay your mortgage, but in the long run, you're paying a huge amount of interest on your home.
Yeah, it's a whole lot. It's almost double the amount of interest. So, you know, in a best case scenario, you're just stretching the principal payments out over 50 years as opposed to 30, but you're paying interest for those additional 20 years. What is still uncertain and people don't really know is how much more of an interest rate are banks going to charge for being 50 years versus 30 years, right? There's an extra 20 years of risk that they've got to account for. If you look now, you're talking about 70 basis points on average that the 30 years over 15 years. So there's certainly going to be some premium for 50 versus a 30. So when you're looking for savings, you're really talking about a very small amount. The scenarios that I've seen where somebody was taking out, let's say, a $400,000 or $500,000 mortgage, you know, with the same interest rate, I think they were lowering their payment by $300 or $400. That's certainly not nothing, and for a lot of people, again, that may make the difference between getting in.
Oh, go back right here.
But when you're looking at, okay, is the interest rate going to
It's
be
a long way down if they come down.
It really does. It could eat up a lot of those days. And of course,
Looking for them to come back right here if they do pull back.
starting to build equity as far as, you know, 5 to 10 years in. With this, with a 50 years, you're talking about not really building any substantial equity
But
until
it's
you've
there
been
into
at
it.
least 20 years. So there's a whole set of other issues that are
Without the
coming
ones
with
like
it.
you working
Yeah, I mean, there's a lot
tirelessly
of
to keep
pros and
things
cons
running,
out there, and as you
everything
say,
would
you sort of sit
suddenly stop.
somewhere in the middle. But I mean,
No matter your
you know,
industry,
how much
Granger's here
appetite is
for
there
up
to
and back.
have a
Great supplies.
50-year
Call
mortgage when not everybody
clickgranger.com
sort of
or just stop
lives
by.
in their home for
Granger.
that
Oh,
long?
they're trying to come down.
Desire to hand their home down to their children.
I don't think the people that would be taking this, and I think for a lot of people, they're not so concerned about the idea of paying off a home, right? So like, it's not like we're going to be here for 50 years and I'm going to own the home. I think this really is a matter for them of how do I get into a home that's mine versus renting something. So a lot of people are comparing this as basically renting from the bank, right? But again, there's not necessarily anything wrong with that if it means this is my home. I don't have to move every few months. I can do what I want to with it. There's pride that comes with owning it, right? You can do what you want. You can renovate. So there's a whole set of attributes and positives that come with that. And I don't think that those are invalid, but I do think it's a financial tool. What I would say is that if you're looking at doing it, if that's the only way you can get in, then great, do that. As soon as you can, start making extra payments. As soon as you can, think about refinancing, right? Because
Right here.
that's not a way to
If they fall right here on long term frame, I'm looking for a bounce right here.
Sure, there's a big part of it that is I want to take pride in ownership. I want to own something, and it makes me feel like I'm, contributing and a better part of society. But I think it's also a matter of this is the way to build wealth, and this product is not one that's going to allow you to build wealth unless you kind of tweak it.
So what sort of other ways would there be to build your wealth as sort of an alternative to this proposal? Because, I mean, we know that President Trump is obviously trying to target the demographic to make things more affordable because people vote with how they feel, with their pockets, right? So what are other ways that, maybe a policy from a government standpoint or the industry itself can address some of those affordability challenges and concerns right now in the market?
Yeah, I mean, look, there's a huge, you talk about demand, there's a huge demand right now for ways to make it more affordable. The problem and the sad news is they're not an easy fix, right? If you look at the mayoral election here, that's a big part of why I'm adopting one, right? Because we were saying this thing bring down the cost of housing. I mean, it's something that everyone's talking about. It doesn't seem like the politicians and those in charge of making regulations are actually willing to roll up the sleeves and get down to the dirty work. That's not flashy, that's not, a quick and easy fix. I think the solution long term is we need more supply, and that means that we need to roll back some of the regulations. We need to make it easier for people to build, and that means you've got problems of NIMBY, you've got problems of a lot of regulatory hurdles to go through. All of that needs to be really studied and rolled back, and just recognize that there's some downside to development. But if
Come on, King View. Come on, show them that bullish energy, baby. A little bit more. Look at Weevil. I wanted this. I wanted that, bro. That is a still. Look, this is a good swing, lead. You call it, bro. Weevil coming back up here, bro.
So really, summer of 24, when it was clear that rates were not only not going higher, but likely were going to be cut, the market really took off. And so every week, virtually since then, the number of contracts has been through the roof. We had the best October that we've had in 5 years, and the second best going back to 2015. September was incredibly strong. The number of contracts signed last week was the highest that we've seen in many, many years. So there's huge demand. I think people, again, thinking about New York, there's very little supply.
They just tested this rejection. Still a trend. Breakout, I'm guessing. Just be patient.
But I think that rates from here are going to go south, not super quickly, but it's at least moving in the right direction, and that's certainly a welcome event.
Yeah, and so what's your outlook for sort of 2026?
I think it's more of the same and hopefully a little bit better. We ended up having a good 25. I think we came into 25 again on the heels of the rate cuts beginning in 24, and we thought we were going to have just a gangbusters year here. The tariffs kind of were a curveball, but our market did incredibly well even in spite of that. I'm interested to see what the court's going to do and if there's a rollback to tariffs or what happens with that. I think if that changes things, I think the market could take off even more. But I think it's going to be a very strong market and probably a little bit stronger than what we've had.
And tariffs feed into the housing market how? Just how people feel?
Well, I think it's a lot of ways. I think it's how people feel. I think it's cost, right? So if you're doing renovations, if you're buying something at home builders, right? All of a sudden it's more expensive to build a home because tariffs are high.
Oh, we got a couple more minutes. 20 minutes.
Rates and what's going on. Okay, if you're thinking that there's going to be a high risk of inflation because of tariffs, then that all kind of trickles down. This is the problem with this. There's not an easy if this happens and all of a sudden housing takes off. That's just affordable. It's just a lot of things combining. But the good news is, I think at least for the last many months, it's slowly moving in the right direction.
Thank you so much for joining me here. It's been an absolute pleasure to chat to you and get a little bit of a snapshot into this proposed policy. It's certainly very interesting. Michael Black, thank you so much. Okay, well, that's
They getting weak right here for some reason.
Head over to schwab.com/basics and start learning today.
I'm Kevin Green, and I track options flows daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Tomorrow we'll begin to see earnings from some key retailers, starting with the Home Depot. The company is expected to report adjusted earnings per share of $3.81 on revenue of just under $41 billion. Comparable store sales are expected to rise more than 1%, about 1.5%, with an average ticket of $89.20. Shares are down almost.
They're pulling this back a little bit. But we gotta see how far they could be trying to reverse. And the trend could be up. Almost looks like a bullish divergence on the 1 minute. What? Yeah. I'm on target up here, and I'm looking for a breakout up here too. Telling y'all, bro. Look, for real, bro. I didn't get to it. See, how did I know? How did I know it was gonna be a trend reversal? How did I know? ZOGTEs are printing on that. See, I knew they was gonna do something right here. It's looking too weird right here. This area right here.
At Granger, we're for the ones who pay attention to every little detail. The ones who fuss, tinker, and sweat the small stuff. Because you know the tiniest thing can make the biggest difference when it comes to keeping business moving. We get it. We're the same way, offering access to product experts to help you quickly and easily find what you need. So whatever your industry, you know you're always getting professional grade products. Call, click Granger.com, or just stop by. Granger, for the ones who get it done.
Let's go. I'm holding this until the next couple days. Look, I'm holding all these. I got a leap on kit. I'm holding that. it, y'all. That's it, folks. How'd you guys do? See y'all in a minute. I gotta take a nap. I'm tired as hell. I got up at like 4 in the morning working out. While y'all was sleeping, I was getting to it. The market, I think, gonna rally tomorrow. Look at this. My call's looking promising. In the after hours, I'm gonna take profits and do it again. Watch. They're gonna be bullish all the way up until eternity. How'd you guys do? You guys do alright? Today was an easy day for the most part. Because all they did was come down and pull back after, look at this crap all morning. First, they started out trying to be bullish. Hit this rejection up here. And all heck broke loose in the midday. Like, that was rough. That right there. Like, I was trying so hard to get money on here. That's like one of the biggest. Tomorrow, that's why I say tomorrow, they're going to try to recover all of this. All this that they just fell from, they're going to try to recover all of it tomorrow. They're probably going to get about right here. And depending on, I think NVIDIA, these earnings. I don't know if Google can do that 2 times in a row, boy. Check that off. Like, Google had a crazy day today. They like sideways bullish. Like, it's hard to explain when Google's gonna break, but they going back to 300 eventually. This is about to be the next target. And I'll do something right here. But we don't guess. We trade what we see. Leave it too, because look, they're gonna come right back here for the retest. They may come right here in after hours.
That's been holding up. Breath has been expanding, or least so, but today the price action is not great.
Oh, y'all, I got my capture card too, though, y'all. I'm excited. I gotta see how they use it, so I can hopefully stream from my Xbox and my computer. We're gonna see how it works out.
Maybe we have a little bit of a rollover when it comes to the equal weight S&P 500 to around that 7350-ish area. So the charts are looking a little bit heavy, Marley. If you look at equal weight S&P 500, the S&P 500 in general, if you're looking at the NASDAQ, you're looking for a new catalyst to really try to move.
Yeah,
I don't think that you're getting it from the crypto space, and I'm not sure you're going to get it from the AI space as well.
Yeah, it's really interesting. I mean, with all these
But it's for like a month or so out. So I'm hoping. I'm pretty sure they're gonna bounce tomorrow and the day after. The Nvidia earnings. Well, Nvidia has their earnings Wednesday. The market's gonna go crazy. To the upside. That's why they felt like that. I might be able to play a couple games of chess, or at least walk through some puzzles.
I mean, that could be a concern. I mean, there was a glut and has been a glut for about a year and a half, 2 years or so. You're starting to see that manage through. So we got to give it to the memory names, at least for now, give them a little bit of a win, but they are seeing some price advantage, at least for now. But could that lead to demand destruction in 2026? I know that there was a note talking about that earlier today as well. That may be the case. It may not be the case. I would be a little bit cautious around these memory names, unfortunately, because the price action is very similar to what we've seen actually freeze wells over there and actually can destroy their infrastructure for a very long time, even permanently. And I think that's probably something that the market's not really pricing in for now. Who knows if that's going to happen? But if you're looking at the inventory levels that we have for diesel right now, or even gasoline, they're below their 5-year averages. So we don't really have that much wiggle room from a supply standpoint there for the byproducts to see this type of production going offline. So I think that's one that has been a big factor. And then gold and silver, they have been risk on trades over the last couple of months. We're still seeing them as risk on trades as of right now, which is why you are seeing them kind of pull back with the broader equity.
Being with us on this Monday afternoon, that's Kevin Green. And coming up, we're going to be joined by the CEO of National Vision as shares rallied in reaction to its Investor Day. We'll get the rundown from everything that was announced and more next on Market on Close.
I'm Kevin Green, and I track options for you, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network and SheldronFrost.com.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Pavlidis. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes you know you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell, to the closing bell, we've got you covered.
Inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings. So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey, Bob. Hey. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant. I probably met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I've seen something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention Schwab is a team specialist in taxes, insurance, legal estate planning, all with low fees.
Ooh, that was the longest message ever. Oh, please let me down. All right, y'all. I want to see some chat. Easy Loudsville.
Third is around providing a more joyful shopping experience within our retail locations and elevating our
Look,
customer experience.
it's all y'all, man. You don't have no money to invest, bro. Earn app is it. I'll leave the link somewhere. It's already somewhere on my page. Let's see what they're talking about with these, with some little bit of chest real quick while I smoke. Man, I miss my man Daniel, bro. Daniel used to get on her and get to it, boy. I'm telling you. My man's boy.
Step into the world of Nespresso and bring magic to every morning. Shop the holiday gift collection at Nespresso.com.
You made the nice list, kid. Paige! In the flesh. Rookie of the year. Nice list. Swishmas came early this year. Santa.
Why do they keep playing that song, bro? Like. Man. Oh, look, I come back, they still playing it. Man, report. Man, what a day though, man. Tomorrow's gonna be they gonna print tomorrow in the morning. I'm out here cook, boy. Let me stand up.